coffee. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Oh, look at you. Another package today. Very pretty.
Thank you. Thank you very much.
You all you need is a little...
Nope.
Oh.
Nope.
You got the green... You know what I found out from Instagram, by the way? Santa wasn't always wearing red. He was wearing green. I guess Coca-Cola changed it in the 30s when they kind of commoditized or kind of made... Santa Claus made him into a red outfit. Did you know that?
I did not know that.
Santa can wear whatever he likes when he comes.
This is true.
It's not like he has to wear the same.
The vision is red, a red and white suit, but it was more green and white.
Who knew?
Yeah, I know. Who knew? Prior to the 30s, it was green. Interesting. I thought it was interesting. I kind of like the green, I'm not going to lie. Yeah. That's why it's green and red, by the way.
Are you done with your holiday shopping?
You know, I got to say one thing. This Amazon, and online shopping, it's a double-edged sword because you click and you start to order. They got you. Like, you know what I mean? They know what you search for. You know, and then you forget what you ordered and stuff. So I've had stuff coming now for days, and I just stick it in my office because I don't want anybody to see it at home. So I just stick it in my office. I haven't opened anything. I got a lot of boxes, and I don't really know what I ordered.
You don't share an Amazon account?
No.
Okay, because then you could see the purchase history. You sure? No. You don't know.
I don't know if that would be beneficial for any party. Sure.
I can't have my own Costco card, but I can have my own Amazon account.
Okay.
I am allowed to have my own Amazon account, which is what I mean. Listen, you have to do it that way, right? You have to have it. Can't commingle Amazon account.
I guess not.
Okay.
You're asking two single people. Well, I don't know.
You're not there yet. Can I have your Amazon account?
No.
Okay, there we go. There's the answer. I wouldn't even ask you.
No, I can't. I would need a second job. I'd start driving Ubers to finance you and your kids spending.
Oh, your brother's still sick, man. Flu A over there or whatever he's got.
Is he gonna be able to go skiing on Monday?
Yeah, he'll
suck it up for that.
He'll persevere. Yeah, I mean it'll be over a week by then.
All right.
Yeah.
Did he do his finals or?
He's done some easier ones. Tomorrow's his heavy day. He's got two big ones on Friday. Today he's got like a medium one.
Okay.
He's been doing better in math. I know I give him a lot of crap on the show about math, but he's been doing better in math. I think he's got almost has an A in there now.
That's wonderful.
Yeah. But he's got his tough one now is I call it science, but because that's all we took when I was going to school. But chemistry.
Yes.
Chemistry is
that is a type of science.
It is.
Tough one. Yeah, it's a tough one now.
So I guess he was right about that.
Yeah. Although I asked Lucas, my son-in-law who graduated college, he said he never took chemistry in high school. Did you take chemistry in high school?
I took physics. We had I think you had choices to do either chemistry or physics as like your second.
Yeah.
Like your more concentrated science. Like you did like a general science, and then you had senior year you had to do either physics.
Yeah, no, I mean he's only sophomore. Anyway, all his friends have it, so it must be the way they
AP Chem and AP Physics.
Well, now we know. Well, now we know tonight who he's going to phone a friend. I thought Lucas could help him. He's with me. He's staying with us till the holidays with Chandler. Chandler's my daughter, and that's his husband. I said, you can help him with this chemistry because I never took chemistry, but now I have a phone a friend.
Endothermic, exothermic reactions, covalent bonds. Wow. Let's go.
Awesome. Are there 4 quadrants? Are there 4 quadrants?
Julia literally has like a PhD in physics.
Really? Oh, we'll get her too. I didn't know I had such a team behind us. Yeah. I mean, this is awesome. Should expect an A from him now.
Yeah, Jamal's, he's...
Yeah. Jamal, too. Yeah.
Everyone who works here is pretty exceptionally smart.
Except...
Hey,
us too. I was putting me in there.
Everyone who works here is not.
We all got our lanes, Dad.
Yeah.
We all have our lanes. That's right. That's right.
All right.
That mine is. Can you repeat that? You said small fry.
How about you, Nikki? Are you all done with your shopping?
Yes.
Look at you. That's impressive.
I
No.
was gonna say, are you really?
No, I'm going to
Oh.
do that all this weekend with the masses of people.
I don't understand how you don't get it done. Like I don't know. Like for me, like birthdays,
I've
Christmas.
talked to you in years past, and
Yeah.
you and Tom both are like
I just did that
gas
for Tom. I just
station,
made Tom feel better.
gas station Christmas Eve vibes. Like
No, I just made
everyone
Tom
gets
feel better.
windshield wipers.
No. I noticed your battery was low on your car. I was going to change your battery for you.
Yeah.
Which, by the way, check your batteries.
But work gets in the way, life gets in the way. Like
Yeah.
sometimes
He's the one that I got to get. Everybody else is.
Yeah, you got one job to do. That's it. Yeah.
You know, we're all. I don't need stuff.
I mean, you just get him the cabin rental in Vail that he wants for him and his friends, and then you're done.
Easy breezy.
He
easy
can
breezy.
come with me to
Yeah, you're going, right?
Yeah, he's
When are you leaving?
on the 29th.
Of
You're
December.
going to Aspen?
Yes.
How did I not know this?
Yes.
Ooh.
Okay. Woo.
Are you gonna have the ski valet, the concierge?
My girlfriend's family has a house around there, so
You did good. You did real
yeah.
good.
No, I know. Yeah, you know.
I'm listening.
Good.
I'm listening. I'm
Yeah,
learning.
so
Go ahead.
I think we're gonna do a little bit of everything: snowmobiling, skiing.
Be careful,
Yes.
because you haven't skied in a while. That's all. I know, like it's kind of.
We're going Monday to the Bunny Hills.
Okay.
We'll get that out of the way.
But like a
Going to Alpine on
Colorado,
Monday.
yeah, but a Colorado bunny hill is like a double black diamond, like
Here.
here in the Midwest, like.
Yeah.
Okay.
You get used to it pretty quick. You'll be fine.
I think I'll be okay.
You'll be fine.
That's literally
I-
not how that works.
It is how.
I mean, take a lesson. I would.
you could take a lesson. You know, it'd be funny seeing you and the other 8-year-olds together.
That's part of the
I would
reason.
love to get a picture. Could you get like a group picture with the?
There's no shame in
There is
trying
no
to
shame on it.
learn
There is no shame on it.
Yeah.
and get better.
Pizza, sliced French fries. Pizza, sliced French fries.
Man, you're gonna have a real bad time if you French fry when you should have pizzaed.
Yeah, I know. Oh, I know. I did do a lesson, and that was, I remembered
How long ago was that?
2 years ago, 3 years ago.
Okay,
So it's been that's
sort
kind
of
a
recent. Yeah.
So I think I'll be okay. But it does worry me. They
They don't actually have a ton of snow.
You've
Actually,
never been out west skiing.
No.
It's quite different than what you're used to.
Yeah.
Yeah, and the altitude, like already.
That's
no,
all
but then
bullshit.
once you
Don't
get up
believe
to
the altitude thing. You'll be fine.
Again, this is why science not so good. Altitude is real. Like it's not it's not a made up.
He's not running a marathon. He'll
But it
be
takes-
fine.
it
When he's
takes-
sitting on the chair, getting himself to his 4,000, 5,000 feet, he'll be fine.
It's
Not exerting himself.
okay. All right.
You'll be
You're
fine.
right. I'm wrong. I'm
Your
sorry.
problem is going to be your feet. That's going to be
Yeah,
your
that's going to
problem.
be my problem.
Yeah.
Yeah.
Yeah, your art.
Thanks for that. Thanks for that.
If I remember correctly, and I know I do,
No, you don't.
your mama didn't help in that situation either.
She has normal feet. The Batista clan, we have the flattest,
Aborigine feet.
widest.
Yeah.
They were meant for like walking the earth.
The sand.
Like they
For
are
40 days and 40 nights.
It's one of those things, how like you get like the traits and it says like you inherited this from like Neanderthals. That's where we got those.
Text your mom. She has flat feet.
They're not like the Batista.
All right. Yeah, her flat feet are worse than my flat feet. I got it.
I don't know why we're talking about feet for so long. But okay.
It's very popular.
very popular.
Very popular.
Sure.
I mean, this is.
Yeah,
I mean,
hey,
at the end of the
you
year, you
do.
need a little bump in the numbers.
Yeah.
Hey man, I'm not
Now
gonna
they can
yuck
put
your
like
yum.
feet in the description of the YouTubes and stuff like that. Get
Side
on
Off,
there.
King. Go
It
off.
could be a side gig.
Do you have as the kids say, the drip, the sweat, like the
No, I don't have anything. That's
Okay.
No,
Because, like,
no,
that's
we
like
do,
the
we
whole,
do.
like,
We
that's
got,
half
we got
the
right pants. I'm telling you, we got the right pants for you.
Okay, so I'll get half the outfit.
But that's like half the, but it's like, it's gotta be, like, there's so much style.
Yeah.
He's got it. He's got
Yeah.
Vinny's comes with style.
Yeah.
Let me tell you something. The kid comes with the style. He's got the drip. If If he doesn't ski good, he certainly looks good.
Yeah.
So we got you.
Yeah.
We got you. I'm
See,
telling you,
that's my other anxiety point is I'm like, oh God, I'm like staying there with the whole family and I gotta like borrow clothes from them to.
No, we got you, dude. We got you.
Well, you don't have the rest of it. You don't have the jackets and
No, you'd be surprised. He's got a couple of good things. He's got a couple of good things. We'll check it out on Monday.
Christmas all year long for him.
Yes. Christmas all year long.
But see that, but then there's the après as well. Like it's a whole scene. Like it's.
You always can buy it while you're there too. You
Yes,
really
at Aspen prices.
So listen, that you pay up. It's what are you gonna do? I mean, it's like you get Uber Eats for crying out loud.
Oh my God!
I go
avocado toast.
I went and picked up my Thai food last night.
Why are you coming for me?
This is like
I'm just saying. I mean, when you have to in an emergency, you pay up. You do what you got to do. I mean, you come out, you be fly.
I don't know how this became about me and what I order financially is between me and Uber Eats. Yeah, that's
okay.
That's fine. All right. Well,
So you'd be good. Will you take pictures?
Yes.
You have to. You have to have that picture on the mountain with the sun behind you, and
So how long has your girlfriend been skiing? Like, did she start when she was like little?
Yeah,
And, like
little.
So she's a little ski bunny.
Yeah. Her and her sister.
Wow.
Her sister works for Vail Resorts.
Shut up.
Yeah, which is pretty cool.
Wow. Can she give me an icon pass?
I was gonna say, don't tell Vanetta she's gonna be now you're screwed.
Yeah.
At least your social pictures will be nice if you help Vanetta.
I mean, I love this life for you. I mean,
I know this is it's rare for a Batista to elevate themselves to
right?
some level.
I know.
I taught you well.
I mean,
told you.
once Case turned you down, I thought that you would.
Yeah,
never.
that was my lotto ticket. I missed that one. Damn.
I don't think he got turned down. I don't think he.
It was never an option.
Yeah, I don't think he took the leap of faith. God, I'm so disappointed
just
you.
Kidding.
Huh.
Well, hey, we got
Could have been divorced by now and had half of everything. It would have been great.
we got a great show for you though
you would have
today.
a house in Vale.
If you want to, okay. Are you guys done?
Sorry.
Yes.
Sorry.
Instead, you're sitting here with me, you
I
schmagegi.
seriously, sometimes I think about it, I'm like, man, what did I do? Who did I?
One door opens, another door closes.
In a past life, I did something really bad.
I tried.
Because it's not like I'm even trying to talk about myself. Like I'm just trying to do the show schedule. Like the audacity. Do you want to know what's going to be on the show today?
Sure.
Yeah. Hey, at the top of the 8 o'clock hour, trades from the research team. The world's greatest financial think tank is going to present their trade ideas to the bats. That's headed your way at 8 o'clock. And then Nikki himself with Johnny Trades. How many trades do you have today?
Well, we do them live, so we usually try to do like couple, 3, 4,
Okay.
5.
2, 3, 4.
We'll see what happens.
Couple,
with the
2,
market
3.
here. Might take some stuff off.
Okay.
Yeah, we're just gonna manage this little Johnny.
Yeah, markets move. We'll see what happens.
Cool.
And then 9 o'clock, we have a market measures. Same delta, different damage. Ooh, I like that. A 5-year look at calls versus puts. Ooh, that rhymes. Well, what's that about? Like high level.
Just looking at obviously how good the puts have been over the last 5 years.
They've been
Okay.
very good. I'm going to give you,
Yes.
if you can't make that segment,
Yeah, so
very
we're
good.
just looking at like each side separately, basically, of a strangle.
Okay.
Good little basic piece.
And then we have live from the trade desk, Quentin in the house, and Glenn. Are you giving Glenn his present today? What? I just said
It was
present.
a surprise.
It's not a surprise. He's
Might
not
be
listening.
watching.
The
That's
whole
fine.
trade desk just told him. Hey,
I didn't
Glenn, you
even
got a
say what it
present coming.
was. I didn't even say what it was. It's a
Yeah.
jet ski.
That would be cool.
That would be sweet.
Yes, viewer sent.
Have you ever been on a jet ski?
Of course.
Oh, all right. I didn't know.
This is a weird show, but Glenn and his jet ski.
Been on jet skis with him.
Water jet skis. I'm sorry. You ever been on a snowmobile? I'm sorry. My boomer. I was just putting them
you
all
have a
together, and
moment there.
you didn't see the picture in my head. I apologize. Have you ever been on a snowmobile? 'Cause you said
Snowmobile,
it.
no.
That's what I thought.
ATVs, yes.
Right.
So similar.
Snowmobiles are fun.
Yeah,
You can
I'm
have a good
excited.
time.
Yeah.
Yeah. They don't stop real well. So plan a little bit.
Got it. Thank you.
And Glenn will also be on the show with Liz and Jenny today, so double the Glenn today. So Gotta love
Electric.
that
It's
kid.
electric when Glenn's live in the studio.
Stop stealing my bits, man. Hey, do you want your daily dose?
Sure.
Yeah, hit me with my theme music.
Our leading story.
today's
Breaking news.
headlines.
Coming across the wire. Our leading story. Top story. Just in.
In today's headlines.
Breaking news.
All right, everybody. Today is a thrilling Thursday. It's December the 18th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Earnings.
We had MU last night. I know you'll talk about it. It was good, saving the market. You got FedEx, CCL, Carnival Cruise Line, FedEx, Nike.
I believe, yeah.
Oh, okay.
Probably more importantly than those three, earnings and MU, although MU saved the market last night, although it didn't take off right away. The market didn't take off. We really waited till today. You have a SPY dividend, TLT dividend. They both quite, SPY is quite large, $1.50 plus. TLT, diamonds, a couple of other ETFs, obscure ETFs, but really SPY is the one you're looking at. $1.70 dividend. If you're trading the 0-day options or anything like that, be careful out there. Look shorter dated options and SPY. $1.70 dividend is a big dividend.
Okay.
Yep.
November's Consumer Price Index report is set to be released today, and it will be the first one since the U.S. government shutdown ended last month. The Bureau of Labor Statistics said the release will not include the 1 month percent changes for November 2025, where the October 2025 data set are missing. What's the expected move for the markets today?
Even the S&P's expected move, what is it typically? What do I know? You remember what I usually say? Somewhere in the 25 to 30 range.
Sure.
In the daily range. You got almost 50 handles now for December 19th. And for today, if you're looking at the weekly options, which are really the ones that are going to expire today, you're looking at around 41. So
Okay.
you got a decent size. Even with /VX not rallying yesterday into that down move, a little surprising. You still got daily velocity of the move expected to be greater than by almost 20%. So.
Breaking news, the ECB is holding rates steady in its last gathering of 2025. So I guess we could look at the dollar and the euro.
Pound, euro, all basically unchanged. Maybe a little bit higher.
The dollar's actually come back a little bit.
Maybe come back.
Euro's down, pound is up. I haven't looked at the yen, but I'm going to take a shot and just say it's down. It is down.
Yeah,
small.
the yen is down like every day. I think they have something tomorrow.
The Bank of Japan?
Yeah, Bank of Japan does. I don't know if it's in the morning or afternoon. But yeah, the dollar's been an absolute dog.
What about
A little
bonds?
bit of a bid here.
Bonds hanging out 115.17. I mean, I dare say that's the higher end of its most recent range, and by recent range I mean the last week or so. But it's really been in a very tight range from around right here. Just under 15. It's been in that 20 tick range. Ivy rank is in 0, basically. Really just a directional play in bonds.
A perfect storm has coalesced to propel silver to a record high above $65 an ounce. Silver crossed that threshold for the first time yesterday and has gained more than 120% for the year.
And with that headline, who made money all day long trading it from the short side?
I did. It was good, but I still have the ratio on. So I'm long 2 gold to 1 silver. But I was going to say, Perfect Storm, great movie.
Perfect Storm was a great movie.
George Clooney.
Have you seen it?
I have seen A Perfect Storm. The Andrea Gale is the name of the ship there, based on a true story. Yeah.
Look at
That's what I'm talking about.
That's AP chemistry.
At its finest,
That's like how
right
that
there.
trickles down to like all the other things. It's like you have that sort of memory.
Yeah.
I don't have that.
Oh, no.
Yeah.
Almost hit 67 last night. 67.
6-7. 6-7.
6-7.
I did that.
no.
I did that twice yesterday.
Hey, you felt so dirty you hated yourself.
Because I see exactly what happened. Is that I am slowly turning into my father, where I'm late.
Scary, isn't it?
I'm late to the trend.
Right, sure.
Like I knew the
because you're
trend was-
unk.
Yeah, I'm unk. So I knew the trend was happening, and I knew about it.
And you didn't do anything about it when it was happening.
I was never like fast enough or like hip enough or cool enough
Right.
to do it in practice.
Right.
Like now
Now you got 6-7,
that the trend
6-7.
is like kind of exhausted and not cool really anymore.
Right.
because you know.
See, this is how we get it to go away. Is we start doing it,
Right.
and then it will go away. So I love that for everyone.
Soon I'm going to be back on Facebook, like posting about like the weather or something. Full boom.
It's gonna happen. It's gonna happen.
Just
Looking for
posting
Napster.
AI
We'll be
photos
looking for
being
Napster
like,
to
can
get
you
your
believe
music."
this?
So good.
Hey, oil prices jump on Trump's
Earl?
Venezuela blockade. After oil hit 2021 lows, oil prices were up nearly $1 in Asian trading as President Trump announced a blockade on tankers entering and leaving Venezuela. What is crude oil doing?
It actually was a little bit higher when he was in his address because there was a lot of speculation that this was going to be like a talking point, and it really wasn't.
Sure.
But it's back down to like 56. I mean, it's $1 off the lows, but it got up to 57 and change ish. So it's had some two-sided action.
Yep.
We're long.
Yep.
Long the
Heavy rank
micro
of 30.
and the put spread in the oil futures.
It's on the low end of its range. It's had 2 weeks where it's gone from basically 60 to 55, and now it's sitting at 56.
Yeah.
Okay.
Good Ivy rank of 30.
Prediction markets could trade $1 trillion in volume annually by the end of the decade. That's according to a new analysis. Sports is fueling the growth and is
Wait, did you say
forecasted.
by the end of the decade?
Yeah.
So in 5 more years?
And sports is fueling the growth and is forecasted to make up 44% of the volume as prediction markets mature. Legal and regulatory challenges could present obstacles to prediction markets' exponential growth. I say that we are not ready, that this, I think, is going to get analyzed on a state-by-state level, and we're going to see some topsy-turviness. But that's just me. What are your thoughts?
What are your thoughts?
I just closed the gold-silver ratio.
Yeah, that's his thoughts. He's taking some cash and putting it in his pocket.
Yeah. I should have waited until 7:30 because we have the employment.
The number coming out, yeah.
You might be able to reload. Now you'll have
yeah.
bullets. You booked a profit, and now you'll have bullets. Otherwise,
Yeah, the prediction market stuff. I don't know. I don't like.
what do you think it'll do in the next 3 decades?
It'll all be a headset. You'll be able to make predictions with your mind.
You'd be like the Matrix.
Yeah. Well, Coinbase had their kind of announcement yesterday too.
Yeah.
Their big thing, but yeah. I mean, I don't see this much different than any other betting, and so I think it should.
Have you ever made a prediction market bet?
I have not
Okay.
yet,
Okay.
but I mean, I do sports betting.
Sure, that's true.
That is prediction market.
Isn't it all predictive,
Yeah.
basically?
Yeah.
Well, they say $1 trillion by 2030, so we will see what happens. Micron Technology reported fiscal quarter results that beat Wall Street expectations for sales and earnings per share. Shares rose in extended trading. Shares are up, I think, around $30. Micron brought in revenue $13.64 billion.
Yeah, 6-day slide in MU. So if you were trying to catch a falling knife or playing it a little bit to the upside, back near highs. Highs are 260 for the year, 260 and change or something like that. It's trading 255 after closing at 225.
Wow.
You're right, up $30. Just over the expected move. I think the expected.
Yeah, it was like $22, $23.
Yeah. Remember we were talking about it being like a 10%-ish expected move, so just over the expected move.
Should be good for us. We had the puts yesterday that we did for what's your assumption, viewer emails. And then I had an upside like ratio that lagged out of the short option. So I just have a leftover long call up there. So it should be nice.
Mm-hmm.
Micron said that they could not even meet the demand. They were like, we are so in demand. We are so hot.
It's good. You're seeing a little bit of a bounce in all those names. NVIDIA, AVGL. I think it's probably a good little move for the.
And they've all gotten hit
good
too.
kids.
And we have not been able to hold a rally. So let's see if we've been able to hold a rally. We've opened higher and sold off promptly after that. We've opened lower and come back. It's been a back and forth market, but stair-stepping lower. Market seems to be a little bit heavy the last couple of days. We'll see if we can reverse that now.
Well, maybe something that wants to ride that wave and didn't yesterday was Oracle. Oracle stock dipped 5% as Blue Owl Capital pulled out of funding a $10 billion data center for OpenAI. The cloud company later said the project remains on schedule, but that Blue Owl was out of funding talks. Oracle has $248 billion in lease commitments for data centers over the next 15 to 19 years.
I think Chris always comes up with these good things. Vecchio said that Oracle's move lower recently, basically since October till now, is greater than its move lower during the pandemic. That's how.
And the great and 08.
Oh, well, there you go.
Yeah.
There you go. So, little tidbit. I don't know what that means, but.
What's the IV rank?
Yeah, no, I don't know what that means for future pricing, is what I was going to say. It's excellent chatter. I mean, just to show you the magnitude of the moves. You don't have anything like that in NVIDIA or any of these other stocks or MU, which we just talked about a moment ago. But Oracle really getting hammered. Anyway,
IV rank 52. So it's
Still high. That's really high.
Yeah,
Wow.
yeah.
Okay. Maybe for option trades today.
maybe, but I already got one that I need a
that's
little
true.
help with in
Yeah.
Oracle. So keep going, Oracle. Get on the horse.
it's at an interesting spot.
It's up $2, 180 and change.
Just makes me laugh. NVIDIA CEO Jensen Huang told Fox Business yesterday that the chip maker has not given OpenAI a single penny yet. So I'm now going to write a headline. Vanetta Logan and NVIDIA have donated the same amount of money to OpenAI.
There you go. That's the way to do it.
$0.
That's the way to do it. Hashtag NVIDIA.
Yes.
Hashtag AI.
I am the same as NVIDIA.
You could be the next partnership with OpenAI. You can integrate like your voice into the OpenAI prompts or something. You could get a Vanetta AI.
NVIDIA has pledged to invest $100 billion in the Chat GPT maker, but promises. What's NVIDIA doing?
Yeah. NVIDIA, IV rank is low at 8. The stock is up about $2 this morning, 172. But it too has slid in November till now from a little over 200 to 170. So you got a nice 15% pullback, I mean, in NVIDIA from the highs at least.
Okay.
Yep.
Well, OpenAI has held preliminary talks with some investors about raising funds at a $750 billion valuation. Remember yesterday I told you about the company that was in their Series L round of fundraising?
Yeah.
Well, OpenAI was like, hey, we want to get that cash too, want to get that money. The Chat GPT maker could raise as much as $100 billion. Who? Okay.
Oh, I think you know.
Let's look at Microsoft because you can't trade OpenAI yet, but you can trade Microsoft. So,
Microsoft trading 478, up around $2.5. Like Nick said just a moment ago, a lot of these stocks are all catching a bid today. But again, have all fallen off after catching a bid either the next day or the same day. So let's see if we can hold this rally. The only thing that you had going for you, if you were a little bit bullish yesterday, even though we were down almost 70 handles at one point, then rallied back to being down only 60-something. Volatility never got out of its way. It was only up a nickel or a dime. That's one of the most confusing type of days for me trading. I didn't add any positions, but I wasn't very aggressive with my rolls because I thought that the market might rally. Now I might get bailed out this morning, but it was a rough stair step lower yesterday. Anyway, Microsoft up a couple of bucks. Everything's up a couple of bucks. NASDAQ. Even the S&Ps, Russell Dow, all up around half a percentage point or so.
Real fast before the number comes out, Cisco, which is back to its 2000 highs. Cisco says Chinese hackers are exploiting its customers with the new 0-day. Oh no. The critical vulnerability was announced by the company in some of its most popular products. It allows a full takeover of affected devices. Cisco says, we're working on it.
We got you.
We're like,
we're here to help.
You'll be all right.
I mean, I guess it's had like a $4 or $5 down move in the last week or so.
Yep.
But it's $4 off highs.
Exactly.
That's
you got to put it all in context for sure.
It's still
before the number comes out, just to give you some context here, bonds are up 11, even the S&Ps are up 30. NASDAQ's up around 200. Oil's up 33 cents. Gold and silver are both down. Silver's down a full point, and gold is down $13.
Is it out?
It should have just come out right now. Even the S&P's rallied about 20 handles to up 47.
Vol just got smoked.
Vol did get smoked down 37 cents. That's a bigger, 2 times, almost 3 times the move it had yesterday on the way up.
Yeah.
NASDAQ was just up 280. It was up 200 when I quoted it to you. It's up 270 right now. Bonds are up 15. They didn't really move too much, maybe a little bit of an uptick in bonds. Gold and silver stayed pretty flat, although silver's only down 60 cents, was down $1. That's a $400 move in silver, just to put it in perspective.
Yeah.
So far, number looks good for the overnight action.
Hey.
Fade the
We're
first move.
68.19. We're just a skosh off of your 68.50, where we seem to be hanging out
I know
forever.
Shark was
Oh, he was crying yesterday.
he was in the YouTube chat for the last call, and I was talking about, I was like, everybody's.
He misses me on last call is what it is. That's what it is. He needs somebody to hold.
Well, he called me crazy.
I tried to hold
for
it.
saying maybe the event with Trump is, just like all boisterous, I'm
Like a Taco
amazing.
Tuesday kind
Yeah,
of
like a nothing event. And, you get back to 68.50.
Yeah.
And he was like, you're crazy. You're crazy.
Core CPI came in 2.6%. Inflation CPI came in at 2.7%. So good.
Beautiful.
There you go. Everybody wins.
Everybody wins.
Do we fade it, though? Do we fade the first move?
Oof. That's the $64,000 question. I think you'll have opportunity. I think you said
Okay.
right now.
Yeah, you got vol coming in a little bit. Makes you think you
Yep.
get a little bit more.
Yep.
Apple said that they had opened their iPhones to alternative app stores in Japan to comply with laws aimed at stoking competition in that company's smartphone market. Looks like Apple being held to account more overseas than domestically and allowing alternative options for app stores. What is Apple doing?
Apple's been one of the strongest of the group. I mean, on any of these down days that we've had, Apple's down $1. It's been Apple and Google. Like Google, I know it had a big move yesterday, but Apple and Google have been like kind of the choppy near highs where everything else is kind of choppy.
Apple's $10 off its high. It's a $270 stock. Nvidia's $30 off its highs. That kind of thing.
Yeah, it's Apple's down 3-4% and Nvidia's down 20%.
Yeah.
Microsoft is down 25%.
Off its highs. Yes.
Is everyone getting an iPhone for Christmas? Like, maybe so.
Yes, that'd be nice.
Hey, are quantum computing stocks due for a rebound? One Wall Street bull thinks so. Quantum computing stocks have taken a hit recently as worries about an AI bubble pressure the tech sector. But downbeat sentiment around the sector could continue in the near term. What is your outlook for quantum, maybe in 2026? Come on, a little Rigetti.
Those are some speculative stocks, aren't they?
Yeah,
QS, IonQ.
yeah, we've traded them a
Qubits.
couple times. Volatility in there is not as high as it was.
Ivy rank a 13 to
They're-
Rigetti, where it was, it was in the 60s, 70s, 80s at
Yeah.
one point.
They're more fun to trade into the upside moves because vol just explodes and you can do whatever you want. You do the stuff that I was doing in
OKLO.
and BE where you do these 1x3s and you can do it for a $2 credit.
Yeah.
They're not fun right now because they're like in dumps and it's.
I got you.
I don't know. I'm here for a short time, not a long time. I'm not.
Analysts at
Best way to get over somebody is to get under somebody new. Go ahead.
Analysts at Wedbush initiated coverage of all 4 quantum stocks with outperform ratings yesterday.
Wedbush is like.
I know, but I don't hate this because these
Yeah, but
stocks, I mean, like
Dan
an
Ives
Oakland.
is like a Tesla 4,000 guy. He's
Yeah.
like, come on.
But Oakley's been cut in half. I mean, from its highs. I mean, I know it's 50% or 100% over its lows too. I mean, but at least they're not. Every day it was going higher. They're not, revising their number higher. That kind of bullcrap. So I can give them some props here.
Google announced Gemini 3 Flash for consumers and developers following last month's launch of Gemini 3 Pro. The Flash significantly outperforms 2.5 Pro across several benchmarks as Google continues to try to dominate the AI space, enough so that OpenAI had to call a code red because of Google. What's Google's stock doing?
Back to 300.
Back to 300.
About $3-4.
Yep. Yep, exactly right. Old highs around 325 or so. It got down to where it closed yesterday, just under 300, 296 or so.
All right, good job, Goog.
Yep.
Been very strong. Google and Apple have been the strongest by far.
Yes.
The old guard is back.
Medical supply giant Medline stock surged 41% in its IPO. It was the largest IPO of the year. The hotly anticipated debut saw strong interest. It capped a strong year for new listings, and it's fueling optimism for IPO interest in 2026. Shares of the company closed at $41 after opening at $35 compared to the offer price of $29 MDLN.
Yeah, it opened right, like I just said, it's 35. That was pretty much the low for the day. It worked its way up to 41, closed just under 41. Looks like it's going to open somewhere around 39 this morning. You can't do anything but trade the stock. It's a hard to borrow stock, so you can't short the stock. I mean, all you can do is buy it if you want to own it. Nothing strategic there
Yeah.
Okay.
to do.
Yeah.
No options yet.
Shout out to Northfield, though. Shout out to the Burbs.
Yeah.
Beth's neighbor works for
Yeah.
Medline, so
Oh, well, there you go.
party at his house. I hope he
Yeah.
has stock.
Woo, raise the roof.
Yeah.
You can raise the roof, too. 6'7", raise the roof.
Hey, in other IPO news, tax firm Andreessen is now valued at $2.3 billion as its shares surged in its NYSE debut, ANDG. Anderson Group shares.
Firm?
Yes, Anderson, like Anderson Consult, Anderson Accounting, and that. Yeah. Their shares jumped 31% in their debut.
Are they stealing from our taxes?
The company, long associated with audit quality, opened at $21 compared to the.
Arthur Anderson? Is
I
that what
think so, yeah, compared to the offer price of $16 per share.
Right, and it opened at 21, went as low as 20, got up to 24. Looks like it's going to open right around there. Again, another hard to borrow stock. All you can do is buy the stock. Nothing strategic there. Can't short it. Can't trade
I'm
options.
just surprised by these late IPOs.
You don't want to get them in before the.
I guess so, yeah.
Getting's good.
But good job there, I guess. Coursera is buying Udemy for $2.5 billion to target AI training. The online education platforms Coursera said that they would buy Udemy in an all-stock deal, valuing the combined company at $2.5 billion. Coursera, COUR.
This is a $7 stock. There's
Okay.
It looks like it's up about a dime here. It's basically off of it, on its lows. It hasn't really had much of movement. It did get down to around $6. It did get up to around 13, so it is sitting around $7.5, $8.
Udemy, UDMY. You ain't got no alibi. Udemy.
Udemy. You got me going now.
Yeah, that one's gone now. So
Yeah.
Yeah, I mean, it was a $6 stock or something like that. Yeah. Two garbage companies buying each other.
Okay. Yay.
not actual garbage company.
No. That was the Waste Management. That's our field.
Raised its dividend the other day.
Oh, see that? Very nice.
I know you
a
people have lots of those shares.
Give a little something back to that. I'm not one of those.
Instacart
You got a
shares.
cousin or something.
I have a cousin.
Yeah, you got a
who was
cousin or something.
influential there.
Yeah,
Yes.
yeah.
Remember when I told you that Instacart was rolling out an AI integration? Well, now the Federal Trade Commission has sent a civil investigative demand to Instacart because the study released last week showed that prices for the same products in the same supermarkets that work with Instacart can vary around 7%. So they're like, yeah, how bad do you want this milk, lady? And then they'll like jack up the prices, and then the FTC was like, hey, you can't do that. And then that sent shares of the company lower yesterday. I hate this timeline for all of us.
Instacart, I guess over the last month and a half or so has gone from around 35 to 45 or 46 or so. It looks like it's down about $1 this morning. In the middle of its range for the last year or so. IV rank of 28. I took a look at the option series here. I just looked at January. They're okay, maybe 10-ish cents wide, probably trade by appointment. So like yesterday, you were looking to sell a lot of puts and things. The market was going a lot lower. Put it in on the offer. you know, a little down tick. If that's the way the market's going, you get filled. So over here, put it in at your price if you're going to trade Instacart, which is Maple Bear, which I have no idea why they did that.
Yay!
Yeah.
I like bears. Okay. This is crazy. In news that rocked the entertainment industry yesterday, the Oscars will be leaving broadcast channel ABC and headed to YouTube starting in 2029. The world's highest profile and most watched award show, which has aired on ABC since 1976, good Lord, is going to move to a streaming-only platform as part of a deal that also includes red carpet coverage. This could be really interesting because YouTube not bound by the FCC rules, so maybe you'll get swearing or more stuff like that. Maybe the speeches could go longer. Maybe they'll be like, and now the winner for Best Picture, and then you just get an ad for AG1, like the green, like, and like it'll, I don't know. Before that, like here, yeah, and then like Mr. Beast pops up, like I don't know.
Commercials on ABC are like 7 minutes long. The Oscars are like an hour long, but it's a 3-hour thing because you have Pfizer does.
I know, but YouTube will just pop up an ad in the most inopportune time when you're watching a video.
Oh yeah,
which is why I pay for YouTube Premium. So who knows what's going to happen? But this is quite the get for Google.
Yeah.
ABC is Disney, right?
Yeah, Disney owns ABC, and then Google
Disney's
owns YouTube.
110 and change. Looks like it's up with the market. Even the S&P's catching a bit, up 53. Disney, Ivy rank 8.
Yeah, but Disney probably not happy about this one after the fight that they have with Google, YouTube over the Monday Night.
Oh, the carriage fees, yeah.
So this one, now YouTube comes back and goes, oh, look what we got. Took this one.
Yeah.
You know, you keep messing with us, and we'll come take the rest.
Steal more of your family.
Yeah, we take more of your little
That's right.
babies.
But it's interesting because it's never been done before, and it'll be live and free
Does anybody watch the Oscars
to over 2 billion people around the world. Then, so that's what that opens up now. So, hey, this is crazy. Wait, did I put this in here? I don't remember if I did. No, I didn't. Okay. No, you're good. Burger King. No, you're right. You're good. It was me. I'm having a breakdown. I'm okay. Burger King is offering free Krabby Whoppers starting December 19th. That's tomorrow. All things SquarePants is happening at Burger King. In addition to the smorgasbord that is the SpongeBob movie menu, which was launched to celebrate the Friday, December 19th release of the SpongeBob movie, Search for SquarePants. The fast food chain is extending a BOGO offer, buy one, get one, on the SpongeBob Krabby Whopper for rewards members. When's the last time you went to a Burger King?
Burger King had one of the biggest fall-offs. I think Burger King and maybe Pizza Hut too, but Burger King.
I still eat Pizza Hut.
Yeah, but
every now and then.
Too, but Burger King, it was right there with McDonald's. If not, like I liked it maybe a little bit better.
Oh, the flame broiled Whopper.
Yeah, like the early
French fries.
Yeah, with the King commercials.
Yeah, like when you had the King, and it was better, and now it's just
had like a cult following to it a little bit.
The last time I had a Burger King on a road trip, I vowed never to go to a Burger King again. I was like, that is not the Burger King I remember. I will never do this.
I had to stop on a toll road somewhere, and Burger King was the only thing that was open when I was I forgot where I was driving. And so I got their chicken, and I was like, why is this a rectangle? I was like, honey, that is a choice. But poor Burger King. But hey, if you love SpongeBob SquarePants and Krabby Patties, head on over to Burger King today. Royal Perks members get a BOGO, so buy one, get one.
The flavor profile on that is absurd. I mean, you've got the burger, you've got the cheese, you've got the bacon, you have the pineapple drink, you have a strawberry cake. I mean,
and spicy nugs.
You're like spicy nugs. That's a lot. That
is gastrointestinal distress.
Yeah, take some Lactate or something before you eat that. Something that'll help some Tums.
Something, a Pepsid, I don't know.
Yeah.
Hey, this is interesting. An open letter from Bears president and CEO Kevin Warren sent the internet into a fit yesterday when he announced that the Bears are now looking at locations in Northwest Indiana, to which the Gary Bears started trending. That's right, Bears are going to Gary, Indiana.
I mean, this picture.
What are we doing? Yeah, the steel mills in the
There's
background.
plenty of room there for parking. I'll give you that.
Let's get it. Hop on the South Shore, head to Gary, go see the Bears.
This is just because I have some friends in the influential.
In the waste management?
Arlington Heights. In Arlington Heights, some of the people there.
You mean Jimmy Bread?
Jimmy Bread?
Oh, no, that's Algonquin.
But they've been playing hardball with them about, how they're going to build it, and then their permits and stuff like that. That's why this is all coming.
I know, but this has all been. It's
I know, it's an old tune.
20 years. It's been like this for 20 years.
Yeah. Well, more than that.
It's
but
all,
yes.
yes.
Yep.
Stinks. Just go somewhere and build a beautiful, amazing new stadium with good parking and places where you could tailgate.
You'll get the Super
and
Bowl.
eat food.
Yeah.
And not have to sit in traffic for 45 minutes to get to your freaking parking spot.
And make
45.
a bigger stadium so when Taylor Swift comes, I can actually get tickets in the city where I live.
Make a stadium big enough to host a Super Bowl.
Yeah.
They're going to get the Super Bowl. Yeah.
Yeah. Hey, finally today for my viral video of the day, New York City, not a real place. I don't even know how to explain this video. Like, I think part of it is staged, but the part that is real is impressive. Watch this.
Just see those sleigh bells jingling, ring, ting-a-ting-a-ling. I'm on to lovely weather for a sleigh ride
I mean,
together
that's
with you.
impressive. Whether this guy is really trying to mug the elf, I don't know.
Just see those sleigh bells jingling, ring,
But he jumped 2 tracks. Like, look at this. That's real.
Pretty good.
Real good.
But again, I don't know if I don't.
Parkour.
New York parkour. New York, what are you doing?
That was 59th Street, though, wasn't it?
I don't know what station that
What
was.
was I? Play it one more time? Because that's the one I used to take when I would go to John Jay College of Criminal Justice. For 2
One
weeks.
semester for 2 weeks.
For 2 weeks.
Oh, God, it's gone down to 2 weeks.
No, it was one semester. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What we got coming up next? Confirm and send, and we'll take a look at this market, which is really quite a bit here. Even the S&P's up 58. We'll be back in 90 seconds with Tasty Live.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Niggy, we are back, son, and you know what that means. Time for a little bit of Tasty Live, confirm and send. But before we get to that, let's take a look at the market. You want to?
Sure.
You done patting yourself on the back over there? You want to have a?
No high fives in trading. So.
Act like you've been there before.
Act like you've been here
Hey,
before.
you know what, Beth?
Even the S&P's up 54 after being down around 60 something yesterday. They've rallied back to let's see. So we opened yesterday. 68.49, about 15, 16 handles from where we are right now. Got as low as 67.75. We're sitting right in the middle of that range right now at 68.33. NASDAQ up 345. That's your leader in the clubhouse, 1 1/3%, with the Russell up almost 1 1/4%, which is $30. The Dow up 252. Volatility in by 39 cents, about 10 cents off its lows. Never caught a rally yesterday in volatility. Matter of fact, volatility was up around 1% on the $60 to $70 move lower. It's in 2% on this.
It was unchanged yesterday.
Yeah.
There was no vol yesterday.
Yeah.
It was what do you want?
On a stair step down.
We've had like 4 or 5 days, we'll call it. All of last week was pain.
Yeah.
All of last week was open higher, whack them on the open, send them.
Hard hold yesterday, though, with the stair step down. Every time we rallied 10 handles, 5 handles, we would promptly sell off 15 handles.
Yeah.
I mean, it was a very hard hold. Being
Orderly.
Yes, orderly. That's a good way of putting it. You're right. It was very orderly yesterday. We'll see if we have an orderly move to the upside today. We have not been able to hold these upside moves. We'll see now.
Yeah.
Bonds up 11, 115.19. Bitcoin, 89,000 and change after trading under 86. It's right at its highs of the day, 89,200 and change, up 3,000 on the day, or a little bit more. About a 4% move. Ethereum with a 5% move to the upside, up 140. Oil up 30 cents to 56 and change, still at the low end of its range. Gold basically unchanged. Silver down 40 cents. Gold has rallied off its lows on the number also. So has silver. The relationship between the two has stayed pretty much the same from where you closed your spread this morning. Hasn't moved. The products have moved. The relationship hasn't moved. Remember,
I got my peeps sending me emails saying, like my guy Paul saying, I understand the gold silver pair. I'm with you, but the 100-year average is around 40 to 1. So if you go out 100 years,
yes, everything changes.
Well, 40 to 1 is we're at 60. Right now. So it could,
I'm sure if you looked at a 10-year average, it's completely different than
that was back when they were exchanging. Little gold.
We could break the coins and give you a little piece of it.
Yeah,
that's right. 100 years ago was really
not that long ago.
Not that long. I mean, 1925. I mean, whatever. It just means we're forgetting. Well, I'm getting old.
I'm getting old.
You're starting to get there too. Yeah. Nat gas up 15 cents to 4.17. That's almost a 4% move. Corn, wheat, and soybeans are basically unchanged. Although wheat trading near its lows is trying to mount itself for a rally. That's all I've got. You got MU for earnings with a 10% expected move. It's a little bit outside of that right now, up around $32, $33, but you played it to the upside, so that should work out well for you. Public service announcement. SPY, TLT, diamonds all have a dividend. SPY's dividend is quite big. Remember, SPX options are not affected by the they'll be affected by the dividend price, but it's all priced in. Nothing there. SPY, which has stock, and SPX.
Okay?
Thank you. SPX has no stock to it, so there's no problem there. Anything that doesn't have like a VIX that doesn't have any stock to it, there's no problem with any type of dividends. Go ahead, son. Sorry. Confirm and send Thursday, December 18th, which is option trades today. We'll try to get a winner this time. Been struggling the last couple of days. We'll see what happens today. First one, please. Oof, it's a long one. I'll read it. Okay. One area where I'm trying to get better is hedging my overall portfolio. Used to say to carry around 500 short deltas in your portfolio. Well, it depends on the size of your portfolio, but go ahead. I don't think you recommend that anymore. Do you folks have any comprehensive videos, literature that cover hedging your overall portfolio? I could just start buying SPX puts, but I'm curious if there are better methods.
Yeah, there's no like specific number, and like you just said, it totally depends on the size of your account, your overall risk tolerance, your directional assumption. Like you shouldn't just hold short delta if you don't want to have short delta. Like there's no like magic science.
Yeah, he's talking about 500 short deltas and then just buying puts. I don't know.
Yeah,
like buying puts is going to get you shorter. I don't get it, but go ahead.
Well, but no, he's saying like, should I have 500 short deltas or just like go and buy puts?
I gotcha.
What you do. You have to kind of build this on your own in your own directional assumption, what you're comfortable delta wise, and you should have a variable. Like you should, as the market goes up, you should get more short delta. As the market goes down, you should be getting more long delta.
Sure.
Intuitively, if you're trading on both sides of the market, and that happens dynamically. But from a raw delta perspective, I think the easiest way to look at it is just via what the cash value is of your account. If you have just use round numbers. Let's say it's a $120,000 account. You could buy 200 shares of SPY, cash secured, and that would be your full cash value. Like if you had a cash account or an IRA account, that's the most you could do with zero leverage. So if you have 200 deltas in your account, you're pretty low leveraged to your overall cash value because you're at your cash value. If you have 500 or 600 or 700 deltas in either direction, you're probably in the right spot. Like you should be 2 or 3x because of the leverage you get with puts. And we know that if you're selling, 20 delta puts, the risk isn't that SPY goes to zero. That's not going to happen. You take that out of the equation. So I think that's an easy way to understand where your delta range should be. In that scenario, 500-600 deltas in either direction is probably where you should be at most times. And you can reduce it how you want to position for the market. Like if you want to be short, be more short. Like I don't know, he doesn't know, nobody knows. So
right. So we would say short delta against a portfolio that was just short premium because volatility typically expands on the way down. That short premium will offset some of that volatility expansion.
Short delta has to be static, though. If you're short delta via short calls, you're getting killed into the down move.
That is correct, and that's what we're talking about. Rolling down. Everything that you said is 100% true, and I don't have really anything to add here. I will say the last part of your statement was the one that I thought was the best part. You have to have the deltas on that you want to have on. That's the key to trading. You can't have short delta if you're bullish. You can't have bullish delta if you're bearish because you will just fight yourself when you get the move that you wanted and you don't get paid.
Yeah.
So you have to have the delta that you want in your portfolio. That's the key to trading. Next one, please.
Good one. Long one, but good one.
Yeah. Whoa, you got one too.
My observation has been that almost any time I sell a Strangle, my call side is tested. Been a recent observation, I would imagine. The few instances when that doesn't happen doesn't make up for the number of times I have to deal with the tested position. So my question is, why sell calls at all? Why not just sell puts? And if I want to compensate for the lost short delta in the call, I could sell a smaller delta put.
Go for it.
Yeah.
I mean, go for it. If you had done this for most of the year, not the April part, but from April forward, you'd be very happy. Puts or schmutz, and you sell them, and they only go lower. I mean, that's the way it's been happening. I don't know if it's going to continue.
It's not going to be forever.
There's going to be a time when we're going to say, why would we ever sell puts? The risk is all to the downside because the market's, just continues to go in that direction. Puts are inflated in most ETFs. They do have that follow the market, SPY, IWM, diamonds, as such. You do get paid more for taking that downside risk, so go for it. I would challenge you, to sell a 30 delta put and a 15 delta call. I think you'll get a little benefit from that, but go right ahead. I had 15 deltas, to your point, in my example just a moment ago. You could just sell the 15, 16 delta put and have the same type of risk. So just do that. Yeah, 100%.
Or trade the options, right?
Yeah.
So if you start with a Strangle, over the last week, everything is down, right? So if you sold any Strangles in the last 30 days, you're probably tested on the put side. Instead of rolling down the call or flattening out that delta, maybe you just buy back the call. You trade the call or sell a lesser delta call and manage that side quicker. Again, I think it goes to the first slide. You have to trade your book.
Yeah, you have
to do what you want to do.
Yep.
Next slide, please.
I've heard that the reason Bitcoin has been falling is because Japan, this Japan really getting a bad rap these days, is expected to raise interest rates, and people who are borrowing in yen to buy Bitcoin have to unload. What do you think of that hypothesis? Pretty popular, pretty mainstream. They call it the unwind or trade. Go ahead.
My guy Mikos in the chat also posted, or was it Mikos? Who? No, Steve. Jade Lizards for that last slide.
Oh yeah, sell a call spread.
Sell a call spread, and
for that person who wants to just sell naked puts, right? Or why sell the calls at all? Love
do a wider call spread.
Yep.
Just define the risk on the upside. Yeah, it's perfect. I don't know if we can blame Japan for the move in Bitcoin, but I think it is just an overall liquidity issue. I think it's lost a little bit of its luster. I think speculation in general has kind of stalled out. If you look at the E-minis, if you look at the NASDAQ, we're not having the parabolic move anymore. It's been a little bit choppy. And so an asset that has 2 or 3x the volatility of equities and doesn't have the same tangible value, as for a lack of better words, is going to move with that. You're going to get realized volatility. So it's been priced in. The 40% move in Bitcoin. That's what an IV of 60 or 70% tells you.
Yeah,
that's what it is. When you sell premium in Micron and it has 70% implied volatility and has a $20 move, that is expected. Right. That's what you're.
They are who we thought they were.
Yeah, it's not out of the. This isn't out of the normal of what's happening.
The part of this question that I want to get to is nobody knows. We could make, and people do. We do a lot of times. I was getting emails yesterday about the market, what I think about and everything else like that. And I said, it seemed like it was more like an absence of buyers than a velocity of sellers, right? Just because the volatility didn't expand. Obviously for every buyer, there has to be a seller, right? For every seller, there has to be a buyer or you don't have a trade. It just seemed like a lack of buying as opposed to, really hard selling in the market. That was just my play on words. Yeah. This is just a play on words. Yeah, this could be ultimately the reason, but nobody knows. You don't know who's on the other side of the trade. So it doesn't really matter. All that matters is price. What do you want to do about it?
Yeah, and you kind of see it in the trading, like you mentioned earlier today, of putting your spread in at whatever your price is.
Yep.
And when people are selling, you get filled. You're getting filled at mid-price, price improved. People are coming, they are trying to get you on the books.
Yep.
When there's no sellers, those options sit because there's no rush. There's no kind of force to it.
Yep.
It's all just anyway.
Very good.
Last one. Can you talk a little bit about when you learned to trade and how long it took to understand not just placing trades, but the capital requirements and how to make sense of all that?
Wow. I mean, I'll answer the question in my experience, then please you answer yours.
Did you have to like fight off the dinosaurs? Like were there like
kinda. Some of them, I just heard one of my buddies is in an old age home, so I had to remember having a fight with him all the time.
The other one is on his way to penitentiary.
One of them is. Oh, you saw that article yesterday?
Yeah,
Steve, you're a bad man. Steve, you're a bad man.
Finally caught up to him.
Finally caught up to him is right. I mean, I had a unique experience. So for me, I learned from other traders on the floor. I went to John Jay College of Criminal Justice. Obviously, I was going to be an attorney. I decided in New York, 59th and 9th. I decided not to pursue that career and drove my mom's car to Chicago, Illinois, and my cousin John got me a job on the floor of the CBOE. That's how I got started as a runner, making $600 a month, bringing a piece of paper to obnoxious men and women who were yelling and screaming things I didn't understand. So I learned firsthand by listening to everybody else, exactly what we do here, listening to the lingo, listening to what they have to say, asking them questions, and then trading, paper trading, fake trading with other runners and learning that way. So I guess trial by fire. That was my experience. And the going really was go big or go home. It was nothing about position management or all the stuff that we talk about retail investors here today. I wasn't a retail investor. I was a market maker. You would call it a professional trader. There was nothing professional about us, but we were making the markets that you were gonna take, either bid or offer or whatever you were gonna do on it. But for me, cash was completely free. Like you could have 100 times leverage. If you had a $100,000 account, it acted like $1 million account. Today you can get 2, 3, 4, 5 times leverage in equity positions. We had 100 times. There was no crash. It was before the '87 crash, so there was no put skew. Markets were completely different. You learned from a retail investor on stuff that we kind of perfected with a lot of research from the team that spent millions of dollars to do it. So your experience is going to be a lot better for somebody than mine.
I mean,
mine makes for a good story for Christmas. Yours is really
I
the
think
valuable
with
one.
The technology now and the access that you have, it really comes down to just doing it, and being able to risk and put risk on is really the key. We, in all aspects of like school and life, it's always like don't take those big risks. Like risks are kind of like frowned upon. And this is the ultimate risk. You have risk on every single day, basically 24 hours a day. And so I think just putting risk on and understanding that you have risk on and being okay and comfortable with risk is really the key, because all the stuff that you had to learn is now made into the platform. Like I don't have to calculate delta. It's literally right there on the platform for you. So, all those things that were, that you had to kind of learn are there for you, for everybody.
Yep.
So it's just about, building your own assumption and putting risk on.
Very good. You know what we're going to do right now? We're going to take a quick 90-second break because even the S&Ps are just off of their highs of 56, which is almost a 1% move to the upside at 68.34. NASDAQ up 356. It's almost 1.5% move. Russell up 30. Dow up 235, volatility in by 2 1/3%, 44 cents to 1830. We'll take a quick 90-second break and come back. We got more Tasty Live after this with trades on the research team next. Back in 90 seconds, Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I've been trading for 15 years now, and more than anything, what got me interested was just this kind of need to learn, really. You know, I started off as a chemist and engineer, and I love those fields, but you know, sometimes when you're doing an experiment, you can go months without anything changing, and you know, materially, I should say. Whereas with trading, every day is different. My favorite strategy really has become selling put spreads. Now that works in a market where we're continually going up, of course, but I love trading everything, and that's sort of a result of trading at a prop firm. We looked at the entire universe, as we say. So, no, I love to trade it all.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
Nicky, we are back, son. You know what that means. Enough out of you. We've got trades from the research team. Who is our first researcher? Shark, what's up, baby?
Good.
How are you?
Guys? Not much is going on right now. Right.
You are right. Volatility was anemic yesterday as the market.
Anemic.
Yes.
That's a nice word, right?
Thank you, as it was sliding.
Yeah.
But you came up with something, I think.
Yeah, I came up with a little something.
All right, what you got for us?
Hey, yeah.
What do you got? I was gonna say my girlfriend went to the aquarium the other day, and she gave me a fun fact about sharks.
Fun fact about sharks.
Yes.
I was wondering how this was going to tie into the whole trading thing. It's about
they turn off half their brain when they go to sleep. Like they turn on. That's how they sleep. They have like part of the brain that like they turn it off, and then that's.
So what's the segue? That I turn off half my brain the entire day?
No, man, you're always working.
You are 100%.
You're 100% on.
Sometimes you're half day.
Yeah.
Not half brain, but half day. But.
Wow. Okay.
But. I just wanted to put out a fun fact about sharks that I learned.
Sunrise to sunset like Gad, okay?
Yeah.
The hours.
That's right. That's right.
See how it is.
Well, what do you got? What do you got for us? I don't think I've ever traded this.
HUT. Hut 8 Corp. These guys
This
were
is
a
not Pizza
Bitcoin,
Hut, right?
a Bitcoin mining company, and now they're investing in AI data centers. Which is
soon to be nuclear too, right?
Yeah, soon to be
They'll do
nuclear,
something.
which is why their stock has risen like the 7% or whatever yesterday.
It's a $4.5 billion company.
Unlike being bearish on the market like everybody is right now, okay? Got to go full bullish, covered call, okay? That's what's up.
Okay, I like this.
You know, some people in our immediate circles are a little bit bearish all the time. You know, don't want to be like that.
We'll learn.
So you want to do a covered call on here, huh?
Yeah, covered call.
Huh.
I mean, you got some juicy options here. I mean,
You do have some juicy options. Expected.
You probably want to
call skew.
$10.
Tons of calls. You probably want to wait a little bit because you know it was up a lot.
It's up $2 this morning too. So I wish you did this yesterday.
We'll take a look, or maybe a poor man's covered call or something, or just to define risk.
Even a 1/2 ratio spread might be
to play into this.
Might be a play here. I mean, I like your covered call here. I mean, it seems
all these
to be
Bitcoin, AI, nuclear. You got to hold these stocks, right?
It's just one day they'll just go zooming.
You remember the time you wanted to buy Costco or Nvidia like 10 years ago?
Wasn't allowed. Wasn't allowed. Hands were tied. Hands were tied. Wasn't allowed. Wasn't allowed. All right. I think your timing, obviously, with the market higher, HUT up by $2, up yesterday. I don't want to go full out, covered call in this. I'd rather kind of buy it on a dip when it was going lower. But maybe a call ratio. But you brought something to my attention that I would never look at. So that was
good.
valuable.
That's the goal.
That is the goal. You did well. You did well. Go back to half sleep there on the chart. Who's up next? Who's our next researcher? I gotta hold my coffee like it's a Cavassier or something like that when my man.
Good morning.
Yes. Good morning, my friend. How are you?
Good.
You got a good voice for radio.
You do.
Yeah.
Yeah.
You do.
I'm doing on your recommendations, training my accent. So.
Oh.
Yeah.
Okay. All right.
I'm reading, listening. Yeah, working on my accent. So.
See, we got one. He's like overtime. He's working on things. And then we got one that's sleeping.
You gotta aggregate them together.
Yeah,
it's the sum of the
It's
the
a team,
whole. Good.
It's a team.
It's a team, yeah.
So Hill's like me. You know what I mean? Yeah, I get it. It's all right.
Nick, you got
Gad's like you.
We give them flack, but this is the world's
This is it. Believe it or not, this is all we got.
They're amazing.
Uh-huh.
They're amazing.
Let me tell you something right now. Everybody's replaceable. Not these guys and gals.
Not those guys.
That's right. That's right. What do you got for us, Gad?
I got an MOU.
All right. MU. Ooh, a post-earnings
trade. Post-earnings trade.
Okay. Did you adjust these strikes? I didn't mean to interrupt.
Yeah, this morning, yeah.
Okay.
I did.
Okay.
So it's a little bit skew, put skew, I guess. So I'm doing FAB.
Okay, you're doing FAB. Good.
Yeah,
64 days. Sahil was in Jan.
Yeah.
Which I kind of agree with in HUT. I don't want to be there too long either. But go ahead, MU. More
I'm doing
tradable product, but market's still wide. Go ahead. I'm sorry.
$50 out of mine.
Yeah, I'm doing like 10 wider in candle. A little bit skew the puts. 190, 200 for put side, to 290 and 300 for call side.
Yeah, you're going to be about. I mean, you have to wait for pricing on here, right? I mean, and see what the credit is because these markets are a little bit wide in MU, and I'm going to expect with the stock up, $30-ish or so, that these markets are going to be extra wide on the opening. Yeah. So if you're going to put on a defined risk iron condor like this, you're going to want to wait a couple of minutes, 5, 7, 10, until the markets kind of tighten up.
Yeah, that's true.
See what your real credit is here.
I was trying to give you a little bit of talking points after the market.
Yeah, no, I like it. I like it. He's going to have a lot of trades to take off in MU, which uses a lot more buying power than this. So this might be something that we'll look at doing. Yep.
Okay.
Very good. All right.
Good.
All right. Good job out of you, my friend. Good job out of you. Who is our next researcher? Yeah. Don't you just want to go and just beat something up? Hey, Kai, what's up, my man?
Go into one of those
mosh pits or something.
Like they have those rooms now you can rent out where you just smack.
Oh yeah, you put on goggles and get a baseball bat and you hit a broken computer or something like that.
That concept came out like 20 years ago, right?
Yeah. I don't ever see myself
for angry
doing that.
people.
Yeah.
Doesn't seem beneficial to me.
Yeah, it's for like the avocado.
Like if you can't do it in real life outside with friends and family, like
you're a happy guy.
What's that?
Because you're a happy guy.
No, but we used to play hide the belt, which was good. We would hide a belt in the park somewhere, like 4 or 5 guys, and one guy would hide it. He would be out. The other 4 or 5 guys would try to find the belt, and if you found the belt, you got to whip the other guys with the belt until they ran to a tree or a pole that was safe space. It's a fun game. Hide the belt. That's how you get your aggression.
Sounds traumatic.
What do you got for us, my friend? Marine Park, Brooklyn. If you know anybody there, we used to play it all the time, especially when they were building the tennis courts. Kai, what's up? Because they had all these mounds of dirt, which was easy. Hide the belt. Go ahead.
Not much.
Yep. How's it going? We say hot, cold, cold, hot, cold. It was great.
Yeah.
Go ahead, Kai. Sorry.
Go ahead. Okay. AMD.
AMD. Bullish.
Iron condors. Bullish. So I have wider wings on the put side, and also it's skewed on the delta is strong on the put side too.
So leaning slightly long into the...
Slightly long, yeah.
And your...
January is what I'm looking
January, you can
at
avoid
right now.
earnings coming February 3rd?
Yeah, so this iron condor is relatively tight, only $20 between two short strikes.
Yeah.
So taking off the profit, as long as it's the underlying move as long as the delta becomes neutral.
Right.
Because this is already a kind of a more aggressive iron condor.
Sure, you're collecting almost half the width of the strikes. I mean, you could argue and say it's almost like
iron fly or something.
Iron fly, yeah, with the two same short strikes.
Yeah.
You got a $20 expected move. It is up about $4 this morning. But you got a $20 expected move for all of January, and let's extrapolate out. Maybe you move this by a strike or something like that. You're basically outside or just at that $20 expected move, collecting almost $9 and change or so. So I don't hate it. I mean, that's probably the way I would look to trade AMD with some sort of defined risk to it with the shorter dated 29 days and the IV rank around 19.
Yeah.
It's been volatile for all the AI-related stocks, so I don't want to hold too long right now.
This would not be the type of trade where I'd be looking for 50% or maybe even 25%.
IVR?
I might look to take, 10, 20% on the whole thing of my credit that I receive. I want to manage it a lot quicker. That's the real takeaway from this trade. You're not looking to make $450 on this trade. You're looking to make, $100, $200. At least I would be.
25% is our target for Iron Fly. This one is 25-ish, 20-ish is fine.
Yeah.
We make it more aggressive, so your profit should be taken in much faster.
Beautiful.
I like it.
Good job out of you. Good job. Let's
and decently wide. 20 points wide is a good width.
Yeah.
This is $200.
You can.
Using $1,000 worth of buying power, collecting almost $1,000 worth of
$5 or $10 wide spread like this won't move quick enough for you.
No, that's the reason. Yeah, I don't want to make $5 wide because this
you'll
moves
be staying that all the way into expiration.
Doesn't change.
To get your 50 or $100 out of this, you got to make it a little bit wider.
Yeah, the wider the better.
Yeah.
Yep, totally agree.
Good.
More like a synthetic strangle.
Yeah.
Beautiful. Who is our next and last researcher? What's up, you little black cat, you? And that's the name of the song.
Oh,
what's up?
I couldn't tell that was the name of the song. I'm doing great. How are you guys?
Good. No complaints. I mean, we just saw the team. Now we've got the head honcho here. What do you got for us?
Oh, yeah.
Oracle.
Well, I don't know. There might be complaints. I don't know. Oracle,
it's like a bad word.
Oracle's kind of a bad word. It took a big dump yesterday, and it's up a whole bunch pre-market.
Yes, it did.
This trade's adjusted, but it might already be outdated. It's up an awful lot this morning. I think like last I checked, like 1.5%. But I think it's still moving. So it took a big dump yesterday because one of its big partners kind of pulled funding out of a data center project. Market freaked out, obviously. So after these kinds of moves, after these kind of like maybe one-off events, I don't know.
Yeah.
I tend to be neutral around this. I think, a lot of the times I see it sort of like bounce around in some kind of channel. So that's kind of what I wanted to do. I went 64 days. I went with the 160, 230 short strikes and then $10 wide, collects 304 in credit for just under $700 in buying power. The put side collects so much more than the call side. So even though I'm kind of neutral after these kinds of events, like I was debating even putting the call side on there, honestly. I think at that point it could be a choice, but that's what I got.
Beautiful.
Yeah, I like it.
I like it, and I'm pulling for you. Because I need it at the higher end of that range. And above it, 185. It's 182 right now. 185 would be better for me. 190 would be even greater.
Maybe we'll take a look. Some added
it's
push.
still going.
He gave you a maybe he'll be free this weekend. Otherwise, maybe not. But best you're going to get.
Man, yeah, you know what? I'll take it. Not going to sell fast.
Tough crowd.
It's good if you don't already have a position. I think you've been in this.
Yeah. Oracle's been a battle.
Well, this is a 64-day one. So this is out in the next cycle. So if you're currently in the previous cycle, then maybe rolling over.
Great Ivy
rank
rank
is 51.
post earnings too. It's been hanging in there,
Right.
51%. So
After earnings, this might be a roll potentially, depending on where you are kind of beforehand. But the Ivy rank is like high enough. I would just, I mean, for this, I definitely went to find risk because of how crazy this thing has been. But yeah, I don't know. That's what I'm thinking.
Cool.
all right, awesome. Let's take a quick 90-second break. We'll come back. We got the opening bell next. Back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Nicky, we are back, son, and you know what that means. We've got about 2 minutes before this market opens here. Even the S&Ps are up almost 60 handles, 59.75, about $3 off of their highs. But you can see here, I've 68.50 was probably the mid of this range that we've had from around a high of, 69.75 and a low of around 67. 75. So place your bets. Again, we have not been able to see, you can see these last 4 days, we have not been able to hold these rallies. We'll see what happens today, but you're getting a mulligan if you want to get out of any longs. You got a mulligan if you want to get long. You're not buying the top. You're not buying the bottom. You know, this is a place your bets.
Decision time.
Decision time.
Yeah.
Do something one way or the other. NASDAQ up 370. That's your big mover to the upside. NASDAQ's been the weakest of the group the last couple of days. Russell up 28, and the Dow, I guess, up the least, up 240 points right now, or about half a percentage point. Volatility in by 37 cents. That's been the real culprit yesterday, really never getting out of its own way. Only up around 15 cents, about a 1% move at its height yesterday. Closed completely unchanged on that 10-point rally. Right at the close, they were down around 70 and change to only down 60 and change on the E-mini S&Ps, now giving it all or taking it all back. Bonds are up 13 ticks. They've been going nowhere fast. 115.21. We've been buying them on dips and selling them out pretty quickly. Bitcoin was flirting with 89, almost 90,000. It's 88.6 to come back a little bit. Ethereum has held on to its rally, up $1.46. Oil up 54 cents. Gold down $8 and change near the higher end of its range, although it's had a relatively tightest range. The relationship between the two has actually, if you still had it on, because I know you took it off, short silver, long gold has actually worked in your favor a little bit more right now. So we haven't done anything with there. There's your opening bell. We'll see if this market can hold on. I would imagine you're going to get a move lower here for at least to scare the children, kind of a moment for 10, 15, 20 handles on the E-mini S&Ps. I mean, that's been the pattern of sorts for a while. So we'll see what goes on with the market.
I think you got to watch volatility.
You do have to watch volatility.
Volatility will tell you if we're going to have some two-sided action today. I mean, I guess it did just tick lower here, but if it starts to really contract, then I think we all clear.
Agree. Then all clear. I would agree with you. I would agree with you there. But volatility, I guess you could say it was very predictive yesterday, but I would say it didn't work. Volatility never got out of its own way as the market was going lower. You kept trying to buy the dip, and you never got that rally that you needed in the market. There's your MU I think you're looking at for your earnings play. MU up 31 and change. I know you had some long delta in there. It had to work out for you. MU trading as high as 258 and change, as low as 253 and change. It's sitting right there at 255. What are you taking off here? It looks like you're taking...
I had a short put, and then I had a call that was left over from a ratio that we did. I bought in the shorts yesterday, so that was a
fortuitous close.
Yeah,
it really was down to basically
they were 80-cent options.
Right,
they were like, you're looking at those options, and it's, do you want 80 cents of?
Do you want to save the 80 cents, or do you want to say for 80 cents I'm going to take this shot to the upside and get paid dollars?
Yeah, I mean, if the stock opened at 300, you're beating yourself up. For 80 cents.
Or if the stock opens at 255, you're beating yourself up for the 80 cents. I mean, that was a nice trade for you in MU. I think, listen, those are the type of trades. I mean, you made tens of dollars on that trade. I mean, when you put on that poor man's covered call, I mean, this exceeded your expectations. So you got lucky. For the 80 cents, you made your own luck. That's the point I'm trying to make here, right? You make your own luck. Even the S&P is up 69, volatility in by 39 cents. It is a sea of green here. AMD up $7, $8. Amazon up $4. AVGO, which has been getting a little hit lately, up around $6. Even the Baidus of the world, and the coin up $10. Hood up $8. It was down $4 yesterday. Palantir up $5 or $6. It is definitely a sea of green here. Matter of fact, hard pressed to find something that's lower, but let's see what those buckers are for us here. UNH, the first name, down 3, Dell down 2. Some of the oil-related stocks, ExxonMobil down $1 and change, Costco down $1.40. Apple, surprisingly, with the NASDAQ up, Apple down 97 cents. JP Morgan down 47 cents. Yes.
So
talk to me, Goose.
I sold some calls against my iBit.
iBit catching a little bit of a bid here, right? I would imagine iBit. I haven't looked at up $1.46. Still at the low end of the range.
Calls for 90 some odd cents.
You closed your hood puts?
I closed the hood puts that we sold yesterday. I had a ETH-A ratio that I just took a couple bucks out of. I think I'm gonna look to sell calls there too.
Beautiful.
Where do I sell some calls here?
What are you trying to do? Reduce some delta?
Yeah, I'm gonna sell a couple. Or maybe I do I don't know. I'm gonna sit on that one.
So hard. I bet it'll come out on the follow page as an opening trade, but that's a hedge to an existing position, correct?
No, it's opening. It is
an open trade?
Yeah,
So-
yeah. I sold the calls. I sold one to one. But I had a ratio and I bought in the risk because we had the $3,000 move. I sold out the ratio and then we reversed that entire move and then some. I just bought in the risk and I turned it into a butterfly.
I got a good email from somebody, and I asked the development team, we'll see if they can put it on their docket to get it done on the follow page to try to make order chains a feature on the follow page. I think if somebody's following along on the follow page and they can just click on something and go right to the order chains, we could make it where they can see all of the roles, all of the different things. Yeah. If we can come up with an existing position left over, I think it'd be very beneficial for the person following along on the follow page. I think that would be a game changer for tastylive and tastytrade.
Yeah.
Yeah, it wasn't my idea, but good idea by viewers. Love the ideas. If you have any others, bat at tastylive. Try to get them done. If I knew how to code, I'd do it myself for you. I promise I would get it done same day if I could. I just heard a little ding from you.
I closed out of I sold some puts in NVIDIA. I closed those from yesterday for like $1 or something like that. And then we had the Rocket Lab puts that we sold from What's Your Assumption? And those came in 70, 80 cents.
Rinse and repeat. It's been that type of market.
I closed out of that as well.
Beautiful.
What else do we
Are you happy with your fill?
Yes.
It's a joke.
Yes. No, it was good.
Did you get all you can eat? How do you feel about your P&L today?
Great.
Okay, good.
It's a good day.
Good. It's a good day. You didn't have to use your AK.
Yeah.
If you had an existing position from yesterday going into today, you can see how volatility has really responded. I know from my own P&L, it's a multiple of what
the volatility is staying a little bit big.
I mean, at 1845, down near the low end of its range, I mean, it's been as low as 18.25 or maybe in the teens here. How low can volatility go with so much time left to the market? I mean, 30 some odd days before expiration. I wouldn't expect it to go. It's only down 1.25%, pretty equal to what it was at its height yesterday when volatility was up around 1%. So we'll see what's going on there. Even the S&P is up 60. Maybe with volatility so low, it's less of an indicator of what's going on in the market and really just have to key on price here.
Mm-hmm.
Bitcoin 88 and change. You want to get to Johnny trades? Because we do that live now.
Yeah.
Where we look at any stock, because you can make basically any stock a small Johnny trade by having defined risk or finding a strategy that uses less buying power than, say, a Strangle. That would be your barometer on what would be using the most amount of buying power. I guess that's how you would quantify what's a small trade relative for a Johnny account. That's an account under $25,000 that doesn't have margin. Money is paramount in all of our accounts, but definitely in a Johnny trade account. Even the S&P is up 59. What do you think? Take a quick 90-second break?
Yeah, let's take a quick little 90-second break.
Take a quick 90-second break. We'll come back. We got more Tasty Live after this with Johnny Trades live, not Memorex. We'll be back in 90 seconds with Tasty Live.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Yeah, enough fun on the block all day, all night. Isn't there no stress, no fight? Fun on the block all day, all night. We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store, pick up chips, 2 shoulders. My board in the slides, trying to dump on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, just heat waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. Laughing with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. A's at the table, crowd tilted sideways. Grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck roll out, yeah, we all chasing. Pockets on lead, but the vibe still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam out here, raise a glass, make a toast. Sidewalk royalty.
Nikki, we are back, son. And you know what that means? Time for a little bit more Tasty Live with Johnny Trades live for you, where we look at it doesn't necessarily have to be a lower price stock, but we're going to look for lower buying power requirement stocks or positions or strategies to trade.
$500 to $1,000. Sometimes even less. I mean, we try to make it, and that's margin requirement / max risk. So we've done puts here, like we sold puts in Intel, which has more risk than the 400 or 350, whatever you put that position on. But, from a capital standpoint, that's what, it is to start that position.
Tall order to do, right?
Yes.
When, it's harder to find positions in stocks that use less buying power than more buying power, right?
Yeah.
I mean, it's easier to find something, at least for our style of trading, with more buying power than less buying power.
Yeah.
Very good. All right,
so we've got a handful of positions on right now. So we've got, just to go over what we have here. So I've got some short delta in the diamonds. I've got some long delta in ETH A. So that's kind of my crypto exposure here. I got some short delta in gold. That's helping a little bit today. I got the puts in Intel. I'm neutral in Netflix. I've got a short put in Nike into earnings after the close today. We've got an SMH, Iron Condor. We put that on the other day. And then Tesla, we have that butterfly. So we're pretty diversified both by strategy, direction. We've got a little bit of everything on here. I think we can kind of add to that. One of the positions I was thinking was, because of this move that we've had, a little bit of a pop and vol over the last week or so since we put the other trades on. I'm thinking maybe we go to the Qs and do a wide Iron Condor here as sort of we have a little bit of short delta in the diamonds, playing a little neutral delta in the Qs.
Yeah, you look at the Qs, they're mid-range since early November-ish, going into the end of the year here. Sure, IV rank of 20 is good, not great. I think a defined risk trade kind of mitigates that that volatility expansion or contraction. It's going to work for or against you.
So the question for you, though, is do you go to February or January? Where would you lean toward?
Yeah, that is a great question. January 29 days versus February 64 days. We like to go to 45 days as optimal, or basically right in the middle. There would be no right or wrong answer. I think in an Iron Condor, I'm almost defaulting to January.
Yeah.
If I was doing a Strangle, I would probably default to February. But I think I would be in January, especially in the Qs. You're looking at something as a 20 monthly implied volatility.
Yeah, I totally agree. And I think, one of the things you're going to have to do with a 29-day option is you're going to have to go closer at the money if you want to collect that kind of 1/3 the width of the strikes. It's not as flexible as it would be if you're at 45 days where you could go maybe to a 20 or 25 delta or even a 16 delta. You're going to have to go more towards that 25-30 range. So I'll give you what I'm thinking. So I'm in the January expiration. I'm thinking on the put side, we do the 58. And then we could do the 57, the 570, so 580, 570. And then on the upside, we could go to that same sort of 20-ish delta. We do something like the 630, 640. And this will trade somewhere around 1/3 the width of the strikes. I get asked this question all the time, where do you even find this 1/3 of the width? And it's by delta. If you are selling somewhere in the 20 to 30 delta short option, they're all going to trade for 1/3 the width of the strikes, or around that mark. Whether you go $5 wide, $10 wide, $15 wide, they're all going to be, around that 20 to 30% of the risk.
Yep.
All right, so let's do it. So we're going to do just a neutral Iron Condor here. We're playing a little bit into a pop in volatility. We've had a little bit of a downside move. It's going to lean slightly short delta because there is put skew here. So even though we're at basically the same delta short option, the long options are actually going to be a little bit meatier on the put side. And you can see this too. If you look at these, the delta of our long call is going to be 12. On the put side, it's going to be 16. They're basically the same for the short delta, and that's the skew in the options. That's why this will lean slightly short delta. Price neutral, slightly short delta.
All right, let's do it. I like it.
So let's see if we get filled here at 335. Oh, no.
Other way, please.
All right, so we're in at 334. So, you can't push those through.
No.
I'll do those
Actually, I can. Hold on. Let me, if you just right click, this is internal for us. If you just right click on it, I'll be able to get into your,
Done.
Okay, beautiful. Beautiful.
Okay. What else?
Just put that through on Johnny Trades if you're looking to follow along with Nick on that. It would be in the Johnny Trade of the follow page.
Do we?
I have a crappy one for you.
Okay.
If you would like to look at it, it's up 1% today, which is only 13 cents. What about a UNG position? Does that interest you at all? I'm trying to look for something that's.
Any guess?
I mean, it's at the low end of its range. This was my. You can't trade UNG. Never mind.
I was gonna say.
I looked
wanted
at
to do like a call spread.
No, I looked at February options. No. Never mind. My bad.
What about we play into Julia's trade idea with Oracle, and we do just the put side?
Oh, okay. So with
I want to do a neutral, bullish, and a bearish. I want to get one of each.
Okay. Oracle up $4.
Down
1,000 a million, more than during the pandemic. Yes, I got it. Yes.
What about playing into? So we'll say the low is like what, 175 ish.
The low was made yesterday, 77 and change. Yep.
What do you think about doing like the 170, 160? You're selling around the 30-ish delta. You can move this to the 175 if you want to get more towards that 1/3 the width of the strike. We're going in January just because you're kind of in that weird middle zone of 30 days versus 60 days. It's almost like too little, too much.
Yep.
You got to kind of make that decision. What do you think of that? About $2 and change here.
I like it.
We'll try at 220 and we'll work the order here. And we're not going to let these sit because we want to get filled for the show. But see if we get 215 here. The stock is rallying, which is why we're not getting filled here, and why this mid price continues to go lower is because you've got the stock up $4.53. It's been rallying since we've been looking at this. So your price, if you are long delta, is obviously going to be cheaper when the stock is rallying because you're getting, your delta is paying off.
Sure.
Options in real time. And just to take a look at the analysis mode here, so you pop over to the curve view, it gives you a risk profile here. So you can see this is a binary look. If you go to the Theo chart, this is basically right now. And as time passes, you can make those changes too on the analysis mode, little pop-out window. You can see how this kind of risk profile changes as we move time. If you want to change volatility, as volatility changes, you see it all, your risk profile kind of changing dynamically as you change the inputs there. All right, so we got bullish. I say bullish, but you're neutral to bullish.
Yes.
We got the neutral iron condor, which is actually slightly short delta because of skew in the Qs. What do you think we can sell something short delta wise? Yeah.
Ooh, short delta. Because I was going to go for a long play in Apple. So the Apple down $3 today. Been the market leader here, kind of holding up the market ever so slightly here. I was actually going to try to go with like a maybe like a $5. I was actually going to do a put broker wing butterfly, like $5 wide by $10 wide, like a 255, 50, 40.
What about
in February?
What about a post earnings trade in Micron?
Oh, we could do that.
Go to January. I mean, the stock's up $32. We're back
15, almost 15%. Yeah, outside the expected move. Yeah, you certainly could.
All-time high is sitting, somewhere around 260-ish. We're basically right there.
Right there. Yeah.
What about doing kind of the same sort of setup here? We could do like, you want to do the
You're really good at these Johnny trades. I'm not going to lie to you. You really are. Some would say you were gifted at this. It's very good on you.
Stop it. Stop it.
Did you push the other trade through that you just did?
I will get that in.
This requires a right click from you.
Yes. Got it.
I want to get to Oracle. Yep. That's it.
What do you think about the 280, 290? It's a little bit heavier delta than see. The problem here is that you have call skew here. So these spreads are going to trade cheap relative to Oracle, which had put skew. You know, you had a lot of fear on the downside in Oracle, so that put spread trades at, you know, a third the width of strikes. On the upside, you have to go to the 40-ish delta because you have to be closer at the money. You can even see it in the delta of these options. So you look at the 260 option, which is $3 out of the money, and it's a 51 delta. It's not wrong that it's a 51 delta. It's just that the pricing of these options is much wider to the upside. That's why you.
So how about the 280, 290?
Yeah.
Reverse it, buy that one, and sell the 290, 310, $10 wide by $20 wide. Yeah, you'll get. I mean, I don't know what the credit you're going to receive here because the market's a little bit wide. Mid price around a 72-cent credit. It's been staying pretty steady there. I'm looking at the options, 170 cents wide. I mean, I would go in around 90.
You want to do?
I want to do the 80, 90, 310 because they go $10 wide above.
What about if we move that in a strike and get more towards $1?
You certainly could. 78% pop. I mean, I like that, but I would watch your credit here. I would go in above.
You can see this super, super wide, and it's the options themselves are not that wide. I mean, you're talking 50, 60 cents, which is relatively in line for a two.
Well, look at the stock. The stock is 25, 30 cents wide, and it's moving all over the place.
Yeah.
So you're going to have to walk the order down.
What do you want to start this at? 175? And I mean, this is way off. Like this is we're in la la land here. You want to do this at like 40, 140?
Sure.
See what we get here. And so this one will use about $1,000 in buying power. So a little bit more buying power used here, but a higher probability trade, right? So, you know, you can.
And it does have short delta too. It does have 5 short delta. That's in your realm of things, correct?
Yes.
Yep.
They're really gonna torture me for this, aren't they? I want to be at like $1.
Okay.
The ideal. Come on. Oh, they're giving me the sound effects like it's my issue, you know? This is just
put it as at $1. Where are you now?
I'm at 98. I'm gonna go down to 95 and let it sit.
Okay. No, there you go. You're not gonna have any time to sit.
Oh well, it's Johnny Trades. I got 20 minutes a week.
No.
Get these on.
Yeah, no,
I'm getting them on.
No, it's perfect. It's perfect.
Here.
Yes, don't.
Here, Johnny.
Don't.
Here you go. Here's the $5. Here's the $5
for the credit, for the extra credit.
Okay. All right. So we got 3 trades on. We got
push it through for me,
yes.
please. So you did an Iron Condor
in the Qs.
In Qs. That's you're 100% correct. In Oracle, you did a put spread. That would be a bullish trade. And now in MU, after earnings, you did a omnidirectional, slightly bearish trade.
Yeah.
But you make the most money up at 280, right? Your break even is 290, and you got around 95 cents. For that.
So
you mean S&P's up 65?
Yeah, and we can even. I can go a little bit further and just to. No, let's go. Let's do it.
You ready to call a break to the action? All right, very good. Let's take a look at what's going on in the market. Johnny Trades is obviously bullish for the market as even the S&P.
And all those are on the follow page. They should be there right now.
They're already there. Yes, they've been there in real time.
Just to preface where that is. So on the desktop platform, it's this little button, this little silhouette here on the left side. You'll see my little Johnny Trades there. I'll put some comments in there as well as all my other trades I did this morning. I'll give you some comments at the end of the session here. So you can just click to it from here. You go to the follow page. You can see them all there. You see everybody else too. All our amazing peeps.
Isn't that nice?
Yes.
Let's take a quick 90-second break and come back. We've got a lot.
One more thing. So we have 2, 4, 6, 8, 10, 11 positions on right now using about $8,000 in buying power. Just to give you an idea of like, you know, $10,000 account, you should be able to find, 5 to 10 trades. Like that's
sure.
That's no, you know, you got that.
You can do this.
Yes.
We're gonna take a quick 90-second break and come back. We got more tastes that we probably should look at the market. Let's do that. Even the S&P's up 65, Nasdaq up 372. That's a 1.5% move. Russell up 30, Dow up almost 300, and volatility in by 40 cents. That's about as low as it's been. Bonds are up 13. Gold down $13. Silver down $1.30. Big 2% move in silver versus gold, which is only 1/3%. If you're doing that on 2-to-1, we make that 60 to 197. That's been working for you today if you've kept that on. Net gas up 10 cents. Now we can take a quick 90.
One more thing.
Go ahead.
I didn't preface this, but on the follow page, when you go to the trades, you'll see all the strikes. Strikes, the price, the strategy. You'll see everything there. IVR is in there. The price that I did it at, the price it's at now, all that stuff is there on the follow page. Sorry to interrupt you again.
We're going to take a quick 90-second break and come back. We got more Tasty Live. What comes up after this?
Market measure.
Market measure is exactly right. We'll be back in 90 seconds. Even the S&P's up 68. It's Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Niggy, we are back, son. You know what that means. Time for a little bit more Tasty Live with this market measure. I mean, the S&P is up 67. Volatility in by 50 cents in 2.5%. Yesterday wasn't in anything. It wasn't up anything with the move down.
Yeah.
Yeah, what you think about?
I'm just looking at some of my positions and trying to get back in.
Get back in what?
That was a junky little Starbucks call that I had. I think this goes back to October. I did the 90-95 call diagonal spread. I mean, the stock is at 90 right now. It's up $4.
In October, the stock was probably well, you could look on your probably around 80. Why don't you do that? So you had a leftover long call, is what you're telling me?
Yeah, this was a cheapy little call diagonal spread, and the stock was at. Sorry, I should have shown that.
That's okay. Putting on a little clinic with these holes that you have with these holes.
I mean, this was just a junky. This isn't even nothing to write home about. But we had this diagonal spread. It was a $2. It was a cheapy diagonal spread. I think we did it into earnings. If you right click on here, the stock was at like
$86 is exactly what I was going to say. $86 was what I said.
But it went down to 76 when I bought back that short call, and now today on a $4 move, which is silly, and you got bailed out. But this option was nothing. It was $0 yesterday. You wake up and the stock's up $4. The question becomes, do you hold that? I think most people get greedy and they're like, oh, well, it's going to be up $4 tomorrow. You could, for 60 cents, you could hold that.
Yeah. I
look at that and I'm like, I want that off my portfolio page. Even though it will be off there tomorrow.
Okie dokie. Let's do that. Are you ready?
You want to do let's do the market.
Yeah, let's go to market measure.
Cool. All right. Same delta, different damage. A 5-year look at calls versus puts.
Okie dokie. Let's do it.
Cool. So we did a study on the probability of an underlying continuing to go against you after you are tested on either side of a strangle. The results, although biased due to the bull market over the last 10 years, showed that calls get tested more often than the underlying, and the underlying tends to continue to rise higher even after you are tested. So this is kind of a follow-up to our confirm and send question this morning. Consider that calls are cheaper to begin with than puts. Why would we even sell calls?
Why would you even sell calls?
Yeah.
It's a great question.
If you knew that you were going to have 5 to 10 year bull market,
you would never sell them.
You probably wouldn't.
That's right.
But it's hard.
And you actually wouldn't look at the market either. You would just close it up and go on vacation.
Yes.
I mean, it's a simple thing, right?
Yes.
Yeah. It's an easy game.
Yes. I mean, we're sitting here trading on a 30-day time frame. That's why you do these strangles. That's why you do on iron condors. It's because right now, this moment, you don't know what the next 30 days are going to be like.
That's correct.
That's the whole point. When you look at these research pieces that go back to, it's all hindsight. Everything we're looking at here is hindsight. You got to keep that in mind.
Yep.
Next slide here.
Hard to be a hindsight trader, right?
Yes. So the study, we're looking at SPY. We're doing 2020 to 2025. So the last 5 years of craziness here. 45-day and managed at 21 days. Sold separately the 30 delta call and the 30 delta put 45 days till expiration. So we're looking at just the puts and the calls themselves. So we computed the win rate, the average P&L, the worst loss, the average premium, you got standard deviation of P&L, you have return on capital, and coefficient of variation. We compared the results. Do you want to take a look-see? What do you think? Puts or calls? Puts or schmutz? Come on.
Puts are always schmutz. Obviously, puts are schmutz. I mean, come on. The long delta is going to, it's all about delta here. It's really what it comes down to. It's all about delta. And then the market cooperating.
Yeah. Next slide here. So from 2020 onward, across a combined total of 2,900 and change here trades using a 45-day cycle. And so it's important to note that roughly 65% of the periods resulted in the market moving higher. So we're talking about the 45-day windows. 65% of them went higher. That's higher than normal, or at least when you look at over a very long period of time.
Higher than average, higher than the mean.
53, 47 is your day-to-day kind of up-down metric. So you have to keep that in mind. Yesterday, the world was ending. Today, everything's amazing. That's how it is in reality, right?
That's trading, and that's trading. What you can't get caught up in.
But that's why you can't look at this stuff and be like, oh, well, it's so stupid to sell strangles or sell calls or whatever. Because in the short term, it doesn't feel that way.
It doesn't feel that way at all.
It doesn't feel like 65%. It's, or I guess it does feel like 65% of the days it's been up this year. But you don't know that. That's a feeling you have after it happens.
You definitely don't know it going into it. That is correct.
So the environment is inherent, or this environment, the environment we have had, I should say, not this, going forward into the future. But in hindsight, it's been unfavorable to sell the calls, obviously, over the last 5 years. And when we get to the next slide here, so looking at just the data around these two, again, these are separate. You're looking at these in a vacuum separately. So the key trade-off of selling calls versus puts, your outlier risk is obviously the biggest key here. With puts, it's this, the markets are typically staircase up.
Stairway to heaven?
Stairway to heaven.
Is that what you're going to say?
Stair step higher, elevator down. That's kind of how it happens, and you can see it here in the data. You have the average.
Although it's the opposite if you look at this over this time frame where we've gone basically straight up.
Yeah, but the outlier, the tail, like your April tail, is that number. Like that's the sort of thing, it skews. You have that one occurrence that's super, super big on the downside, but you could see, most of them, you're picking up, a couple $100.
That's correct.
And it's, free money until it isn't.
Free money until it isn't.
No paycheck. No paycheck trade.
No paycheck.
No paycheck trade.
No paycheck.
So you can see it here. But even with the calls, they didn't really hurt you when you look at this. Like you have a 54% win rate, which tells you that, you still kind of, you basically scratch the calls, but they help you when you need them. The short delta helps you when you need it. It doesn't hurt you into the grind higher. It hurts on the big moves up, and it hurts on when you look at day to day, one day. But having you have to be on both sides. You can't be just one-sided because then, you got your shark chiefs calling you when you get your one market down move.
It's feast or famine.
And you feast or famine. You got to have a little bit of both sides.
Good point.
Next slide here. So because the market has been strongly biased to the upside since 2020, which is our data set here, selling the 30 delta calls naturally produces negative performance on just that option.
But what if it allows you to hold on to the whole position longer? Like, you got to think a little bit, in the background here. What if it allows you to put on other positions that you look for long delta someplace else? Sometimes when we do these segments and these market measures, we're getting so granular into we're not thinking about its totality. What if we're rolling up the puts in an aggressive manner where you're when you get to you start out with 0 delta, and when you get to around 15 delta, you're rolling up those puts, taking in more premium. There's a lot of kind of trading involved in this that we don't put in here because it's so subjective. We don't want to curve fit it. So you got to take this with a little bit and just say, all right, yeah, this works this way. Go ahead. I'm sorry.
No, keep going.
No, I'm good. I'm good. Perfect. I'm done for now.
So you're obviously, and when you're looking at shorter periods of time, they tell you more about what the market has been doing recently. It's not, and I think even extrapolating this out to longer duration stuff, I don't think I care much about what Strangles were, in 05.
That's right.
You're talking about different stocks. You're talking about different tech, different politics, different everything.
Different market.
Different world, different market, yes. In rising markets, you're obviously going to have risk on those short calls. But you have to keep in mind, I think that's a great point of maybe these calls and trading around them allows you to be more mechanical and be able to hold positions a little bit more and take some of the emotions out of it. Because it does, you get a down move and you take off some short calls. It's a good feeling.
It's a wonderful feeling. There's no better
Even though
feeling.
the pain is still on the put side.
Of course.
It's a good feeling.
It's a great feeling.
If you're all puts and everything's just getting nuked, it's not a good feeling.
Not a good feeling.
Yeah, you got to be able to ring the register on both directions.
Yes, you do.
Next slide here. So this is just like a breakdown of what they're giving you. So selling a 30 delta call might give a positive P&L in a falling market, but because the premium income helps mitigate the loss on the short put. So this kind of goes to what we were talking about of like, sometimes it helps to have the short call there to take some profits on against the short put. A couple takeaways here. So although calls are cheaper and more susceptible to positive market drift over time, the worst case outlier is far less dangerous than the put side. So you have your calls are losing more frequently, but the losses are lesser than what you see on the put side because you typically have that outlier risk on the put side. In a bull market, selling the calls, has basically broke even. So you really haven't been hurt by selling the calls, even though, you look at them and you're like, why do I do this into these stair-step hires? It hedges you.
You did it because it's the right thing to do.
Yeah, it's the right thing to do, and you don't know the future. Short puts, they've obviously been great. The market has doubled or tripled. So, yeah, you make money there. That's it.
Very good. Let's take a quick look at this market. Even the S&Ps are up 50 handles. They're off of their highs by about 25 handles. NASDAQ up 290. We've gotten down to this level multiple times and then rallied back off of there. Volatility hasn't moved. 1840 down 34 cents. Russell up 22 and the Dow up 226. If we are like we've been the last couple of days, you should get a little two-sided action coming here now. Even the S&Ps expected move is around, let's take a look here. 1 day to go. The 19th would be $58. 0-day options would be around $33 expected move on the DS18s. Volatility still hanging in the 0-day options. When we take a look at the bonds, they're up 15 ticks. When you're looking at oil, it's up 43 cents. Gold is down $13 and change, about $20 off of its lows. Silver finally selling off a little bit here, but it's still over $65, $65.40. It traded under.
Should have held that ratio. Damn.
You had every opportunity after to put it back on. I know you. I mean, you can't do that to yourself. You'll hurt yourself by doing it.
Yes.
You really will.
I just sold the HUT 8 put, not the 8 strike. The HUT 8, which is the company, sold the 35 strike put.
In HUT, this was a shark trade here, right?
Yeah.
He wanted to do
the covered call.
He wanted to do the covered call,
which I think you could. I mean, to be completely honest, the covered call probably does. I mean, it gives you the same break even.
You sold the 35 puts in Jan. Selling the puts gives you a higher probability of success than the covered call. Less risk. I don't know. I like the put. I agree with you.
Yeah.
I mean, if you're going to get,
but you're not playing into that call skew.
No, you're not playing into the call skew. If you're looking at playing into the call skew, it'd be some sort of ratio spread.
What about we do 100 shares and 2 calls, which is basically a straddle?
You could do that. You could definitely do that.
Let's do 100 shares.
So
2 of the 50s.
Okay, so you're gonna
want to do 2 of the 45s.
The 45s have a 50 delta. I would rather go out to the. We have to. You just sold the puts. That's giving you long delta.
I'll close the puts.
Okay, all right. You'll close the puts, and you want to do. You're gonna have to do this. You can do a one by one.
Oh yeah, you got to do the 1 by 1 and then sell that
covered call.
Okay.
You want to, and then you have to sell an extra extra call. So why don't you put an offer in for the call? And that would be the hardest one to get filled on, probably just the naked call, and then you can do the covered call after that. Does that make sense?
Yeah, so I'll be.
You'll be what?
Good little trade hack.
Oh,
I like that.
Okie dokie.
Oh.
So you're looking to buy stock, sell.
I'm gonna try. Okay, so I sold the call.
You sold the 50 call at around.
I did that at $3. So
$3, which is just about mid price.
Yeah, this should trade at 39.25 to 30ish, which is what it's marked at. So.
You're gonna use the same strike that you just did. You just did the 50s mid price.
Did you push the puts through, or
I will.
You don't have to do the put because I'm gonna just.
I won't. Mid price is 39.27. I don't think you get filled.
It's gonna be 30.
You need a downtick as a bullish strategy. You need a downtick in the market.
So you're selling like $6. I'm gonna try.
You did it at 39.35 debit on that.
All right, got it.
All right, so you have a
cool. So I'm long 100 shares, sold 2 calls against it, which is basically delta neutral. It's a straddle.
That is correct. Delta neutral, which would make it a straddle because you have risk to the upside on this covered call, right?
Yes, and downside. So I can show you this on the.
Okay, why don't you do that?
So you got 100 shares, and this is why I say it's basically a straddle, is because you're selling these 2 calls. The calls are not quite a 50 delta.
Mm-hmm.
If you're selling a put, selling a call right at the money, it's going to be this risk profile that's right at the money. And so here, this is like a skewed straddle, right?
Mm-hmm.
I mean, that's what it is.
That's a good way of putting it. Skewed straddle.
You got a little bit of delta to the upside, but you do have risk above, 60-ish here if something happens here. But it's I guess it's a downside defined risk straddle. That doesn't make sense. It's a straddle, okay? It's a straddle.
Synthetic is what you're looking for.
Synthetic straddle.
It's the word you're looking for is synthetic.
Thank you.
You're very welcome. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up next? Trade Desk. That's right. We'll be back in 90 seconds. He's going to show you something. We're actually going to, to the powers that be, he's going to come sit in my desk.
TV magic, as it is.
TV magic.
TV magic.
And show you something that I think you're going to find very useful on the Tasty Trade platform. We'll be back in 90 seconds. You're not going to want to miss this. We'll be back in 90 seconds. It's Tasty Live.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, A green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University. #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago. #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign. #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. Look at this, standing up with this man. Tasty Trade World Headquarters, your friend of mine. That's right, Q. How are you, brother?
Fellas,
Get too
how's it
comfortable
going?
over there, all right? You know, that's my seat.
You know, they said don't get too comfortable the other day too, but here I am again.
Getting comfortable.
I wanted to say the stand-up actually does you pretty good justice here, because you can't tell how svelte you are now.
Oh, thank you, son. I appreciate that. Don't worry, subject to change. You
look really
subject to change.
Well,
Subject to change.
Yeah.
Q, how are you? Speaking
I'm
of a
doing very
svelte
well.
young man.
So I've actually got two things I would
Flying the
like to know.
colors, by the way. You are such a suck up.
You know, when you know you're coming on to display some of the features, you got to dress appropriately. So, well, I got two
You're
things.
coming for me. You're coming for my seat. I can feel it.
Well, I got two things I want to go over today, fellas. So we'll show the cap rec.
Just because you know the platform better than me doesn't mean you have to show off today, but go ahead.
Yeah, I'm going to give you some too.
Okay.
Put on a shop Strangle too, so you can.
So that'll be something good to analyze. Naked options.
Yes.
So first, I want to just go over some like dividend early assignment risk. Because, SPY's going ex-dividend tomorrow.
Yes.
And so we'll send out a notice to all customers that have short calls on something going ex-dividend the next day.
Automatically get it.
Yeah, automatically
It doesn't
get
matter
it.
where
Even if you're not at, high risk, you'll
It is-
still get it.
Yes.
Right. So you get calls about
Doesn't
that all
matter
the
the
time.
duration, doesn't matter whatever. You're getting it if you.
Yeah,
if
we
you
want to
have-
send it as a courtesy to let you know that, you've got a short call on something that's going ex-dividend.
It's a heads up, right?
Yes,
It's not a call to action. It's just a heads up. Now you may need action.
You may need action. Yeah, action may be required.
Right, and that's why you're getting the heads up. Now you're
Yeah.
only going to get that if you have an SPY position. You're not going.
Yeah, or anything that's going ex-dividend. But just since a lot of people have, short calls in SPY, I just want to go over this today.
Okay, cool.
So what we're looking at when something is going ex-dividend and there's going to be high risk of early assignment is, so let's say you're short the call. You want to look at that call strike that you have short. You want to look at that put price. And if that put price is less than the dividend being paid, there's high risk that you're going to be assigned. But then when it comes to SPY as an ETF, we don't know the exact amount of the dividend. So it paid about $1.83, I think last time it went ex-dividend. So something around $1.80, even up to potentially like $1.90 on the short on the put side, you're at, medium to high risk if it's less than that. If you've got, if your short call has a put that's like 5 cents, you're at very high risk of early assignment. So just to avoid margin calls, or if you have a covered call in that stock and you don't want to lose the shares, it's just something to be aware of that you might get assigned early. That's something I always like to go over.
Now, if you go to Wikipedia and you ask how to find out, or if you go to Gronk or one of those other ones,
I wonder
whatever
if it would give you the right thing.
What's that?
You think it would give you that?
I don't think it'll give you what we came up with years ago, which was the market maker hack, which was just looking at the put price.
Yeah.
I mean, it's the easiest, simplest thing. You can do the conversion reversal, buy the call, sell the put, look at the stock, see how much difference it is on what the expected, what the market makers are expecting the dividend to be, which is pretty spot on. Or you could just look at that put price to find out.
Yeah.
And it's so clean, it's so simple, it's so easy, it's so quick. I don't think it was ever discussed, 15 years ago when we first came on the show before we did that. So that's the way we did it. That's the way you should do it. It's the easy way of doing it. If you like to get into the weeds and do the math, go right ahead.
Yeah, but I would say just look at the put price, and then if it's close, assume you're at high risk if it's close, just to be careful.
There's no reason to be in it. Like, get out, roll it, which could just mean
you can always roll the position.
Yeah, if for argument's sake the stock is 100 and you have a deep in the money call, let's call it the 90 call, and your put is trading for $1. In your scenario, that you're saying that the SPY dividend is going to be somewhere around $1.60, 70, 80, 90, $2, wherever it's going to be, you're at dividend risk. If you could just buy that 90 call that you're short and sell the, let's say, 93 call, so you're just doing a spread, and that 93 put is trading at 250, you have exactly the same deltas you had on before, and it costs you basically zero to take yourself out of a position that's going to cost you $150, $60, $70, or $200, depending on what the dividend is on that position. It's just mechanical. It's just smart. It keeps your delta on exactly the same. It keeps your directional risk all the same. It's what you have to do. I think it's what you have to do.
Chat, clip that.
Yeah.
Beautiful.
Beautiful. Okay. So now let's get in.
Show me something. Show me something on the board.
Yeah, let me show you a little something, So let's get into the platform here, and then we'll go over the capital requirements tab. We just did a demo on this.
Okay.
Should be up on the YouTube page later today. And if you signed up for the demo, we'll send you the link to the YouTube just so you have it in your email. And so, Nikki, you said you put a Strangle on in shop?
Yeah, just go to you could go to the capital require.
Okay. Yeah. So let's go to the cap rec page, and then you'll see the requirements for all your positions here. And then so if we scroll, I'm not going to scare the children, show them everything here. Let's go to, let me make sure it's all deselected. Let's go to Shopify. Refresh. And then let's go to Shopify. And then you'll want to hit risk analysis up here at the top. And then this also, if you're on the downloadable desktop, this will pull out another window. And then if you're on the web version, it'll just pull up within the website still. And so here we've got, if you've got a bunch of positions, it can be a little intimidating. This looks a bit more basic here. And so what we're going over here is the different risk arrays. So what we're looking at in the top, we've got the eval at. This will show you the date at which we're evaluating the position. So if you want to evaluate it today, if you want to evaluate it like at the end of the year, something like that, it'll move the date and move the analysis to the date you want to look at. And then up here, we've got the override. There's 3 different options that you can choose from. So none means that you can analyze it on a position by position basis. Beta weighted, that means you would do it to SPY, something like that. And then uncorrelated means that every position would switch by the same percentage up and down. So that's how you would analyze it.
And on your beta weighted, you can change if you're looking at NVIDIA, for argument's sake.
Yeah.
You could change it to
QQQ,
like, which would be more NASDAQ related, right? If you have a Dow stock, you can change it to the diamonds. I mean, you can change whatever you want. I always use SPY, but
whatever you want.
People like to get deep.
Typically, we see most customers use SPY.
Yeah.
And then just to go over like what they're used for. So none is used to analyze your positions on a position by position basis. Beta weighted, we'll see people use that a lot for like the market crash scenario, things like that, to where your risk would be when you're beta weighted to, SPY, the Qs, whatever you want. And then uncorrelated, typically, we don't see people use that too much. It's usually none or beta weighted. Uncorrelated sometimes, like we have portfolio margin house rules that you need to comply with, and see the risk on that, use uncorrelated. And then, so let's say we're beta weighting this and then to the SPY. You can change the percent move up and down in SPY, and then that will change the move for the actual stock right here. So we've got 5 different price slices in this risk array that you'll be going over. And then what's in the red and green down here, this will show you your profit and loss. And then if you're in a portfolio margin account, this will actually be your requirement at that level. And so it'll show your profit and loss.
Now, you
for
just
that
mentioned
given
that
position.
in a portfolio margin, you kind of glossed over it because you're getting more leverage when you initiated the trade. You're looking at, and I guess in a strangle, an exaggerated move down or up is going to hurt you on either side. And you're saying that's the margin requirement you're going to need. So at this time in your portfolio margin account, let's say you have buying power of $20,000. You have a $250,000 account. You got $20,000. You're at this time you're not using any margin. Everything is great.
Yeah, no margin call.
If you were to go all the way down to that number, and that number was 35,000, you would be using at that moment $10,000 in margin, or you'd have to come up with more money or reduce positions someplace else.
Yeah, so just to clarify, like if your cash stays positive, like if you're just selling options and you don't get assigned cash will stay positive, you're not borrowing from tastytrade.
Yep.
Not like using margin, things like that. But if your buying power goes negative, then that results in what's called a margin call. And so that's where you typically either need to close positions or you could always deposit for the negative.
You just don't answer the phone.
Then they will liquidate. For somebody who's
you don't take action.
Not as a retail investor, I haven't had that happen. But as a market maker, then they usually would just pull us off the floor, and they would give all the orders to a broker like Frankie, and you would never, who's in the chat room, and you would never want Frankie closing your positions because the instructions from the brokerage firm or at this point, which would be the clearinghouse, would be just close the position. Like, price is irrelevant at this time.
Well, once upon a time, a Batista would actually show up to your house with a baseball bat. That was the margin.
That was even before that. That was even before that, yes.
Yeah, and then so another thing I like to go over here as well is the IV shift. So it's just different like computations here. We've got percent and points. So if you want to shift the IV by percent, so like let's say we've got IV at 50 and you shift it by 10%, then it changes to 55. Because that's just a 10% move in implied volatility. But if we change it to points,
which is a decent sized move in volatility, but in individual stocks, it can happen a lot quicker. Than in the ETF.
And then so when we're doing the IV shift by points, that would take a 50 IV and shift it to 60 because it's by 10 actual percentage points, not like the percentage of the original volatility. So it's not like you use one in one situation and one in the other. It's just like computationally how you want to look at it.
Got it.
And then so everything down here, this risk array, that we would be looking at. That's your profit and loss at these given positions. Some people that are watching, they might be looking at it's all loss. How do I make money? This isn't a profit analysis tab. This is a risk analysis tab. And so at 11% either side, I actually think that's, a pretty small loss on a strangle of around, 540, 660, whatever you want to call it. Right. But yeah, if you want to see where your risk is at a given time, this is the risk array that not only that you can use to look at your positions, but this is also what the risk team uses as well when looking at different accounts that are maybe overspending on their buying power. And then this is where we look to see what positions have the most risk.
And this is just one position. You can do this with
for the entire portfolio. Yeah.
You can isolate groups of positions. It's totally customizable. We're just showing this as one position, but you can do the whole thing.
And then, Nick, you ready for the magic trick? Because you could do something very cool as well. So let's say we deselect this, and then let's say we go to the futures, for example, and you want to analyze a position in the futures. Let's say we were going out, 30 days, let's call it, and you wanted to analyze a strangle out here and see what it would look like before you even have the actual position on. What you can do is you can go back to that cap rec window, and then so we don't have anything selected yet, and then you hit in the top right, add order legs.
Okay.
And then that'll pull up a new position for you. And then also, we are not done with the add order legs. On top of this, you can go back to the order ticket, clear this order ticket. Let's say you wanted to hedge near term, and let's say we go to something like 15 days and buy, a cheaper strangle, turn it into something like a diagonal. Doesn't really matter what strikes we use for example purposes. None of this is advice, of course. You go back to the cap rec tab, and then you hit add order legs again, and it'll analyze all the positions.
So it keeps the same one that you had up there before. Like you might want to say to yourself, I want to add this to my position, and I want to put this on to see how much it reduces my buying power.
Exactly.
Maybe
So
you're one of those fringe players, right, where you use just about everything available.
So you could build a monster that you want to analyze in this positions tab, or then the cap rec tab. And then what you can also do is you can select and deselect certain order legs of that position. And so you can analyze whatever you want. Add as many legs as you like, see how you want to hedge your given positions, and view all the different risk arrays that you have.
Pretty powerful stuff right there. It's pretty good.
Pretty powerful stuff. And then, a responsible customer is a good customer. This is what we use on the margin team. And this is the same exact tool that you can have.
Yeah, if you ever wanted to know when you call up and they say, well, if you bought 3 of these puts back.
Yeah, how are we figuring that out?
Yes, you would be out of, harm's way. Or if you bought 3 of these calls back, you'd be out of harm's way. You wouldn't have any type of margin call at any area on the risk graph.
Yeah, so you don't have to worry about, the risk team ever stepping in, anything like that. You can just look at the risk analysis tab. If you're negative, see where your requirements are and see where the risk is in all these positions.
Sure.
And then this is exactly what we're looking at on the desk.
Good job. Good job out of you, man. Cool. All right. Well, don't chew up the scene too much. Let's slip that
there we go. Happy 12 days of trading.
Yes.
Happy 12 days of trading. Beautiful. Amazing.
All right. Who is our next victim?
We're gonna use the TV magic and switch him. Oh, you gotta put him at the you gotta switch.
No, I wanted to stay.
Now I have nowhere to go.
Yeah.
Oh, geez. See, this is behind the scenes
You
here.
can go exit stage left.
Oh, geez. This is getting.
You can go that way. Yeah. Exit stage left.
Back door. You have a traffic back door.
That's where we send the gumadas. Okay, the gumadas come in that way and they go out the. It's like you got to have 2 entrances. It's an old Italian bar thing, like Richards. You ever been to Richards?
Oh yeah,
Richards.
One of the oldest bars in Chicago. Well, it's not the oldest.
Well, the lure. How do you say it? Lure.
The lure.
The allure.
No, like the lure, like
like
LORE.
story.
Yes.
Yeah.
Was that the reason?
Way to go, Northwestern.
This is pretty good, by the way. Thank you.
The reason that they had the 2 entrances was because it's been around forever. It's grandfathered in for the smoking inside.
Yeah, you can smoke in the bar.
In the bar. But the reason they had the 2 entrances is because Halstead was blocked off there, so the 2 streets didn't go to Halstead. So you could go down one street, go through Richards, and go out, and you're on another street. So if you're trying to get away from cops.
Leslie, that was Capone's hangout, where you
go
in one side, out the other side.
Out the other side.
Right.
You're on a different street, and you couldn't
the
get.
coppers were looking
You couldn't
for
get to it because
Fuzz.
Halstead was like it was blocked off there. There was.
That's pretty cool.
Yeah.
But I mean,
I could see how impressed you are.
no, because having been in there, it would be more impressive to
You've
run
never been
through
in
that
there?
bar.
Yeah, you gotta go. You've never been?
I have.
Oh, you have?
That's what I'm saying. It would be impressive. It's very small.
Yeah.
And luckily, there aren't usually that many people in there.
Mm-hmm.
I like the slot machines myself.
Yeah.
Catch me
You
there.
ever get the pickled
any given day?
Eggs?
I have not asked for that. They have a jar behind the bar that says meat sticks for $1. I've had one of those.
Yeah. The pickled eggs, you can eat them. They are edible.
Every time I go in there, they
There's a little waft of smoke. You get a little, it's got like a little
They're gross.
tint to it.
Every
Well,
time
it's
They're gross, but they're ours.
Yeah, it's
I walk
part,
in
it's
there
part of the vibe.
and every bartender just looks immediately like they want to kick me out, have a reason to kick me out. But I am 21, it turns out, so they let me stay.
Who knew?
You are.
Yeah.
Hey, before you get into your spiel, I wanted to give a shout out to Mikos. You know Mikos in the chat?
Oh, yeah.
Well, Mikos has, he wants to give you this little gift. Give a little gift.
Look at you,
This is
man.
from Mikos. Shout out to Mikos who sent this to the office.
That's awesome.
He has anointed you, G Money, and you now have your own gear now. So
That's so sweet.
So here you go, buddy.
Who doesn't have the best customers
throw.
in the entire world? Tasty Trade, Tasty Live. Good
Thank
job.
you, Mikos.
Yes.
Great guy. We met on the road in Charlotte. Charlotte?
No, you told me.
I believe so.
awesome.
Yeah.
Yeah.
Oh, yeah.
Yeah.
Booyah. This is sweet.
Yeah.
Are you gonna wear that
Sell 'em?
around the house with the?
Well, no. Part of this is that now every appearance you have to be wearing that shirt.
Not every.
And the vest.
Can't do
And a
that,
red
though.
shirt on Thursdays. There are a
Yeah.
lot of clothing requirements with
There
this,
are.
I'd like to see
we
you
try
go
to
out
spice
one
things
night
up.
wearing
Yeah.
it. Is what I would like to
Wearing
see.
this?
See if it brings you luck.
All right.
That's what you got to do.
Yeah, G Money.
Yeah.
I like that.
Very nice.
Thank you, Mikos.
Thank you,
That's
Mikos.
great.
Appreciate your support. Thank you for all the support in the chat, which we love and we reference all the time. So
Yes,
if you're in the YouTube chat, if you're not in the YouTube chat, you should join it.
Get in there.
And give us a like and subscribe to our videos too, because that helps us.
Yeah, help us out.
Yeah. End of the year, reviews coming, got to really pump that stuff. Sign up for things, send some notes, send a note. Be like, wow, those bats, amazing.
Yeah, I think I've exhausted all of my email usernames to give you positive reviews, Nick. So I'm still trying to come up with more.
Yeah.
It's very time consuming.
I appreciate the help.
Well, what do you got for
Yeah, what
us?
do you got?
I mean, Q came in here and showed us some good stuff. You give
That
me
was-
some actionable stuff right now.
that
What
was
do you got
great
for us? Give us some FX.
I don't know if I can one up that, but this morning, yeah.
Look at you coming with slides. I love this.
Just one. One slide, most extreme client sentiment from IG Group that includes TastyFX, but also includes a broad network of traders around the world where they're positioned right now. Most extreme among major or popular pairs, the most popular 20 pairs we have at number 5, USD JPY, yen, a favorite to get long. So short in this pair, and you'll see that on 4 and 3 with the euro and British pound. British pound and euro equally shorted, but I thought it was interesting that to a degree much higher than the US dollar. Kind of follows a narrative that more people or less people are willing to get long, or more people are still holding on to long US dollar, anticipating a comeback there, than those British pound and euro that have been so strong year to date. At number 2, an interesting one, 2 very highly correlated pairs, the Australian dollar and the New Zealand dollar. This one 70% short, although the chart doesn't really show you it's at a major extreme, but has been higher in recent months. And number 1, been number 1 for a long time, US dollar Swiss franc at 85% long, holding in there around its historic lows, below the 0.8 level that it's been oscillating around since it's dropped there from 0.84. Yeah. This one, people holding on to long positions haven't gotten anyone from IG Group really shaken out on these down moves. Most traders still holding on for.
You still have that on.
reversal.
Oh yeah. Oh yeah. Oh yeah.
Oh yeah. Oh yeah.
I don't like being on the same side of this. That's my problem.
But one thing going in your favor, and a reason that traders are comfortable being long this pair in particular, is that's the most positive carry you can get among these major pairs overnight. So if you are taking this long position, you are getting in return into your TastyFX account a little bit to the tune of 1 to 3 pips a night, depending on your position size. That can be dollars.
Helping with your
dollars.
loss that you have on it.
Pardon?
Helping with the loss that you have on it.
Just a little droplet onto the fire.
Little cookies.
Yeah, a little something. Yeah.
Little drop on the fire. Yes.
Because of my micro size, I was able to add to it as well.
Oh, see
Yes.
that?
A benefit for your micro size.
Yeah. Now we're mini size.
Very nice. But I thought it was interesting that 3 of these pairs involve the Japanese yen. Japanese yen is what we're looking at today, with a Bank of Japan interest rate meeting tonight. That decision expected to come in pretty late, between 10 and midnight tonight. They're very secretive over there. They don't like saying exactly when they're going to tell. But we are expected to get a hike out of them for the first time. Actually, they've been pretty consistent this year. I think this is their 3rd straight hike this year, and reaches levels that they haven't been at in a very long time. So
Yeah, like
yen,
in decades, right?
Yeah.
Interest rate height, a little over 3%. I don't quote me on that.
now they're getting up to 0.75%. But yeah, they were even negative in years past. So this is definitely the cycle high for them. And analyzing moves this morning, we've got a little bit of a mixed dollar. Initial dollar weakness looked to be a runaway after that CPI number, coming in softer than expected. But now in the U.S. session, we're starting to get a little dollar comeback. So if you're looking at the euro dollar on an hourly chart, we filled that entire gap. Now we're trading a little bit higher. British pound still a little bit more to fill, right around 134. We had interest rate decisions from both the Bank of England and the European Central Bank this morning, a cut from the UK, as they have been and are expected to continue following the Fed to some capacity. Rates now identical here and there, but the British pound got a little bit of a bid with some of those 2026 rate cuts getting pushed out into those summer months, not expected for the spring or January, so a bit of a stay there. And the European Central Bank, little to no guidance. Analysts think that they're good where they're at around 2%, but they are keeping their lips sealed as to what their next move is. But the euro, not a benefactor as a result. Nick, you're in euro British pound, aren't you?
I'm in euro yen.
Okay.
That one never worked.
A green day for you, though, today?
I need a lot more green days.
Oh.
Probably maybe put a little bit more on that one. No, I am not in. What do you?
Euro British pound.
Okay.
Has taken.
I did trade that.
Dive, yeah. So now that's nearing its recent lows, but still, over the course of since the summer, really, the euro has outperformed the pound in a pretty big way. We're looking at a 4% move since summer lows there in the euro's favor. So if you are looking at some UK data and think anything there is positive, pounds are still cheap relative to the euro. And we've even seen...
What about euro US dollar?
Euro US dollar, that one's been trading in a very tight range, stuck between 117 and 117.5, really. Tested 118 earlier in the week, but a lot of chop here today. And analysts saying that maybe some chop to continue a lot of these central bank meetings out of the way, expecting lower volatility into the year end. So still some tradable opportunities in the SpotFX world, but I would expect, tighter take profit levels, not looking for much, maybe more active scalping on some of these. Because, if you were trading the CPI release this morning, you got a jump in the euro of 35, 40 pips, which is in some days its whole daily range. So if you were able to fade that or correctly speculate on which way the inflation print would come out, still some profit to be had there, but definitely worth managing expectations as we head into this holiday season. Not expecting a euro 120. I'm hoping not, because I jet off to Europe in a couple days here, and it's gonna be pretty expensive.
Run into
I had no
Glenn.
money. I'd burn mine for worthless. Wow.
You run into Glenn. You send us a picture with Glenn.
Right.
I'll be wearing.
I was gonna say.
Yeah.
I want to see that in Europe.
Okay, I'm gonna.
Where you going?
What
country?
France.
France?
Yep.
Eiffel Tower picture with the G money.
No, I'm skiing.
Were you going skiing?
Yep. So I'll wear this over the ski jacket.
Nice.
In the French Alps.
There's your guy who give you some tips on skiing right there.
Take a lesson.
He's going to the Midwestern Alps of Alpine Valley.
Very nice. I train in Geneva, Illinois.
yes, I'm going there on Monday to do my training.
Very good.
Well, good job out of you, man. Don't hurt yourself on the mountain, okay?
That's the plan.
Yeah, all right, good job. Good job out of you. Good job out of the market. Even the S&P's at their highs. 5 handles over us, up 85, 1.25% move. Nasdaq almost up 2%, up 480. Russell up 32. Dow up 400. Volatility in by 55 cents. It's a 3% move on volatility to the downside. Bonds are up 19 ticks. They quote a bid 115.27. They almost traded 116 there. Bitcoin trading at 88.8. Hasn't gotten as high as it was early in the day where it flirted with 90,000. 89.6 being the high. Ethereum traded over 3,000. It's 29.66 right now, up 140. That's a 5% move versus a 3.5% move on Bitcoin. Oil up 50 cents. Gold down $5, basically unchanged. Silver down $1.39. That's a decent sized move to the downside, about 2% in silver.
It's been a mixed bag. Silver has certainly taken quite a chop down on my tree here.
Yes.
You got to try a lot harder to take Nicky Bat down.
Can't take me back.
So green.
Can't take me down.
Meta up 18, Tesla up 17, Microsoft up 11, even Apple is up now. Apple was down around $2 earlier today. It's up about 10 cents. We're going to take a quick 90-second break. We're going to come back. We got Liz and Jenny next. Good job out of you. Good job out of Q. Did a great job on the features on Tasty Trade. We'll take a quick 90-second break. We got more Tasty Live after this. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
everybody, and welcome to the Thursday edition of the Liz and Jenny Show. I'm Jenny Andrews. That beautiful blonde is Liz Deerking, and that handsome devil is Glenn. Glenn, welcome.
Glenn,
morning, guys.
I need you to confirm or deny something.
Okay.
Okay, we're just gonna say confirm or deny. You're going to the French Alps?
Confirm.
Yes. When do you leave?
On Saturday. I'm so excited.
Nice. That's amazing. So you're a skier too? Skier, basketball player? It's like I raised you myself.
Yeah, skier, not that great, but can manage more control.
That's amazing. Have you been out there before?
I actually have. I'm tagging on to my friend's family vacation. He's so gracious to let me come along, and it's a ton of fun. I went 2 years ago with them, and they're going back this year. So very excited. It'll be 2 or 3 of my friends, his brothers, the family. Should be a ton of fun.
Will you be home for Christmas?
No, I told my mother, see ya. But
I mean,
that's
you're going to
okay.
the French Alps. I would do the
understood.
same thing. If JD had a chance to go skiing in the French Alps, I'd say go for it. You go for it.
Yeah, they understood. I think it would be a different scenario if they didn't live close by. I'm very fortunate to be able to see my sister and my parents on a somewhat regular basis, so they forgave me. True. I hope. I just have to get them nice gifts. Maybe a magnet from the airport.
Jenny, did we tell Glenn about our friend who's going to his alma mater?
Who?
I'm sure we have. Yeah, I'm sure we have in the past because this has happened months ago.
I know. We told you our friend's kid is going to be the kicker for Northwestern.
Oh yeah, no way.
Yeah,
that's awesome. I
so maybe we can all
about
go up and see a game together, like a
Hell
little.
Yeah. When we go, we'll let you know. When we're going to a game, we'll let you know, Glenn.
In the new stadium.
Yeah, in the new stadium.
That should be fun.
Yeah. So French Alps. So that's very exciting. How many boys?
It's me, 3 of my friends, his 2 brothers, and then the rest of their family. So
no sisters, no girls,
no sisters, just mom.
That mom is so used. She's got 3 boys.
Exactly.
And 3 other boys. That's awesome.
Yeah.
Oh, that's gonna be fun.
That's
gonna be fun. When my son went on a ski trip with his buddies, do you remember this, Liz? They weren't in the French Alps. They were skiing in Maine. And I got a phone call from him at the bottom of the hill, broke his arm. And so he had to just all by himself get on a plane and fly home with the broken arm. But, none of the guys were going to go home with him. They all just said, you're on your own, buddy.
Dang, bro, that sucks.
But that's the hard part about taking kids skiing. So we ski, and I told my kids, you're not allowed to take people that don't know how to ski. You're just not. I don't want to be responsible for somebody.
That's, very fair.
I was like, I need to see your skiing ability before you can come on a field.
We're going to have tryouts.
It's tryouts. It's tryouts. That's correct.
Tryouts to come on vacation.
That is 100% accurate.
Do you guys have any plans for the upcoming holidays?
We're both getting on separate cruises, but that's after New Year's.
Whoa.
Yeah.
That's pretty good.
I know it's soon. The countdown starts. We leave New Year's Day. I'm getting on a Disney cruise. Liz is getting on Royal Caribbean.
Very nice. To go to the Caribbean, no Alaska or anything crazy like that.
No, Caribbean. Yeah.
Very good time of year.
We've done the Alaska cruise. It's great, but that only goes out in the summer.
Fair enough. That makes a lot of sense.
And very similar to probably what your family feels right now, we have limited time with the children that we have right now. So we got to squeeze everything in when we can. So we have, I literally was given a 4-day window to go somewhere. And I was like, well, we can't get to the ski hill and get acclimated and ski for 1 day and then come home. So I was like, we're going on a cruise.
That'll be a ton of fun.
Yeah.
Last question. How is the parental curfew going? Is it better than Thanksgiving?
He's not home yet.
Oh, still?
No, he's coming home today. And Glenn,
nice.
I almost killed him this morning. So he's going to be in trouble. He's going to be grounded before he even gets home.
I know, poor JD. I feel like he gets in trouble. I said to Liz, I go, he didn't do anything wrong. Liz is mad, but he didn't do anything wrong.
I almost called. So all of his friends are gone. He had a final. He had a final late last night. So, and he was flying home. So the flight is today, and he's got to leave during the show. During this show, he's packing up and leaving. And so he was out last night, and no one I know is down there anymore. not answering his phone, not answering his phone, not answering his phone, not answering his phone. Like, just not. And I know he's got to go to the airport in 30 minutes. So then my husband finally pinged him, where it's like, find my iPhone. And he answered, he's like, what? I was like, I'm going to kill you. Yes, so he's already in trouble.
He's already in trouble, but he didn't do anything wrong. He could have been in the shower. He could have been.
He was sleeping. He said he was sleeping. I was like, get up, get packed, and get to the airport. Strike
Fair
one.
enough. Well, that'll be so much fun.
Yeah. So I'll let you know. I'll let you know how this Christmas break goes. But I'm going to keep him under lock and key, Glenn.
Sounds good.
Man. As we're talking, I'm watching Spoo's up 90. Are we going to see Spoo's up 100 today?
Now, what does this do to the FX market, Glenn? How has it been affecting your trading with the moves? Yesterday was exhausting.
Yeah. It's a good question because historically you think the correlation between U.S. equities and the U.S. dollar to be inverse, and the U.S. dollar get a strong bid when markets go down, and some relief when markets go higher. We haven't been seeing that as much this year, I feel like, and today no different. On the U.S. Open, got a little bit of a bid back in the U.S. dollar, which was nice to see. Bids for the U.S. dollar have been few and far between. But
you can pop in the platform and I can pull it up.
Yeah.
What do you want me to take a look at, Glenn?
Let's go. Let's just go to the euro dollar first and foremost. From the exactly.
Or do you want me to go to the Tasty FX?
Sure.
Yeah.
I like our charts.
Tasty FX.
So yeah, today a pretty crazy day in the FX world. If you got up early, we have on our hands a central bank bonanza, a triple header, if you will. Early this morning, we had the Bank of England come out around 6 a.m. our time, followed by the European Central Bank, which was around 7:15. And later tonight, we'll get a Bank of Japan expected rate hike, which should stir some yen volatility that's been pretty compressed as of late. And so euro dollar, a little bit less interesting. If we're looking at this daily chart here, looking really compressed here, doesn't look like a lot of tradable opportunities. But if you click on daily and go to hourly, we actually have been seeing a lot, just to 1 hour. Yep.
Where? Okay,
right there. Yeah.
We've been seeing some stronger moves than we've seen
look at that.
recently. Yep. And so the ECB, not as exciting. Rates unchanged. They don't know what they're doing in the future, don't want to tell people what they're doing in the future. But the mover of the day for the U.S. dollar has been this CPI print at 7:30 Chicago time. And that was a lot softer than expected and saw a pretty big initial shock to the U.S. dollar downside. You can see, that big green candle there, responsible for about 35 pips to the euro's upside. That we saw across the board, across dollar pairs, but sold into pretty hard because that next hourly candle runs right into the U.S. Open. So as U.S. traders starting to digest this news, a bit of a bid back in the dollar, filled that range almost completely, and now we're looking back to euro buying. So if you think that this
would you say get long, we might pop back up to where we were earlier this morning?
And I'm interested in the BOJ. When does that happen? The Bank of Japan, because that's the one thing we're waiting for, right?
Yep. Yeah, that'll be anywhere from 10 p.m. our time to midnight. So.
So that's see. Tonight.
Exactly.
Got it. Okay.
Yeah, so it's technically tomorrow for them. It's a Friday meeting. Not, I mean, if you want to stay up for it, I don't know if I will, but expected to see some movement overnight there, and excited for perhaps a more interesting Friday as a result. But yeah, you could absolutely take that signal, Jenny, as you called out, as we tried to bring this dollar back. Markets now positioning back in the middle of the range. If you're trading hourly momentum, maybe this means you can hop back on, and there were enough buyers right where we were pre-CPI to fill this back to the initial reaction. But bottom line is I'm expecting lower volatility conditions for these pairs, as now we have all of these central bank decisions out of the way. We saw that even when you have U.S. Economic data like we had this morning, I mean, this was a miss by, I think, 0.3%, which when you're tracking these inflation rates continually, that's a pretty big jump for where people are expecting. But we see that this isn't exactly taken for all it's worth, because before the next rate decision, we will get another one of these numbers. That's one. And two, no cut really anticipated yet. Markets pricing out an additional cut somewhere in the spring, maybe in the summer. And so we're looking pretty far out of the curve here for things to be impacted so quickly in the spot market. And so, I mean, if, of course, hindsight's 20/20, but if you were to, sell those 117.60s on saying this is a big reaction, then you got paid pretty good if you held it into the U.S. Open on that reversion. So could see this drifting in either direction, but not expecting huge moves over the next couple of days here into the weekend.
So since the news is out and vol is settling down, people should lower their bar on the profits they're taking. If they're putting on an FX position here in the euro, lower your bar on the profits you're looking for.
Exactly.
Compared to when we were in a more volatile time.
You're exactly right. And we can switch over to the slides. I did presented these yesterday on Options Trading Concepts Live, but just wanted to give you guys the same context for what we're looking at right now in the volatility landscape of the US dollar. If we can flip to the next slide. All I did was try and get some volatility metrics for realized volatility that we have from the spot market. Using realized volatility can be perceived as more reliable in these continuous markets where you have these markets trading with relatively high liquidity 24 hours during the trading week. And so use some standard deviation here and compared a longer time frame for daily volatility and a shorter, more recent time frame for daily volatility. And this is what I found. On the next slide, we can flip to the table. And it confirms what a lot of us that are looking at these markets very intently have been thinking is, man, this euro dollar, this Japanese yen have not been moving like I know they can. And what's been surprising for me is to see that this dollar CAD has been moving. To unpack this volatility ratio, this is just dividing the 20-day look-back period from the 60. And so a number above 1 would suggest that this volatility is expanding right now in the more recent environment, versus if it's below 1, that would suggest that volatility is contracting. And so we've seen the euro, the yen most out of all of these major pairs contracting the most. So I'm hoping from this BOJ decision, whatever is to come, that we start to see some of that volatility flood back into the market. But what's not reassuring is what we've seen from the euro dollar, where we have one of these events come out and it doesn't lead to a ton of volatility. So
it didn't lead to a ton of volatility, yeah.
Exactly. So
okay, what about the yen? This is where my curiosity is piqued, because it's happening, not over with, right? So Jenny, we like to look forward, not backward. Well, that's not going to be my mantra for 2026. So the yen hasn't happened. It's going to happen tonight. What should we do? What should we put in, Glenn? Talk to us.
Yeah, Glenn, I don't know if we want to pop back in. I pulled up the USD JPY, and is there anything
we will blindly follow you, but not say you took us down if we lose?
Was there anything that people are doing or that you're doing? Remember that the trend is your friend in the yen. Remember that old saying?
Yep.
Yes.
Yeah. So
and the yen isn't the Bank of Japan supposed to sell trillions and trillions of dollars worth of assets? Isn't there the unwind trade something happening where the world is supposed to be warning Will Robinson? At least that's what my TikTok feed is telling me.
You might have more proprietary information than I do, but what I'm looking at here is, it's important to think about what the time frame you're looking at. right now, this looks to me, we're looking at the hourly.
Well, this is the hourly. I can switch.
Yeah, so if it's happening at 10 o'clock, let's put something in expecting a move that we can then put a closing order in for too. I don't care if it's up or down. I really don't care. And I don't care if we win or lose, Glenn. I just like that. I just want to be in.
Yep. So, I mean, how markets are positioned right now is for a rate hike for Japan. And in theory, that would bolster the currency you get a stronger demand for that currency as a result of a higher yield for that currency. And so that's already priced in, but it really hasn't given the yen a lot of breathing room, still pressed in this pair near its highs around 158. So you could see this in either direction. We've been stair-stepping lower since that high we reached in November. And so if the BOJ gives markets what they are expecting and do raise rates and say we're in a good position, we feel good about this, that could be signal enough for this yen to start to pick up some more speed, and that would be selling this pair. But
do it.
Yeah.
Right. Because if we sell it, we think that U.S. dollar is going lower and the yen is going higher.
Correct. Yeah. And so if you're looking at historical price action,
counter-American, but we'll do it.
That's what you always say. Just in this portfolio, I'll be a U.S. dollar seller, but I'm still USA.
USA. Yes, we're all wearing red and white right now.
Exactly. The thing you want to stay away from when you have an event risk right here is, even though we're in pretty low volatility environments, what you want to be wary of is on some snap reactions is setting something like a take profit or more importantly a stop loss too close, because on some of these initial jolts you could get dinged pretty quickly on a fake out. Even if you wake up the next morning and were directionally right, you got dinged to the wrong side just because of the order of how things shook out. So this sets up pretty nicely to where you could, if you're getting short here, you could maybe put a stop loss in above around 157, 156 and a half.
Oh yeah, there you go. Let's get in at 154 and stop loss 157. How about that?
All right. Well, maybe I'll do 0.03 because that'll just be $150. So it's just a small position. So I'll put that in, place trade.
Pips away. You got it confirmed. Oh.
Yep. And so
sorry. I just threw it.
You got excited.
Well, okay. So after the fact, to put in the stop loss, I click on this.
Yep.
Stop loss.
Your stop loss should be higher. Yep.
Higher.
And where do I want to go?
Well, I don't know. I wanted a wider range. I was going to go like 154, 157.
Yeah. So.
Yeah, sure.
157. Yeah.
Okay. Yeah. It's 1.56.969. That's.
Yeah, and if your fundamental reasons for doing this are saying, now Japan's got their act together, they're hiking in a positive way, not just threatening to hike, then you could zoom out and leave this without a take profit with the expectation that maybe this does start to unwind. What you were saying earlier, Liz, is that we've seen this before. So eloquently that because of the leveraged participants that have been piling into this for 4 or 5 years, when this starts to go against the positive carry and buyers are forced to sell in a big way, we can start to see some of those expanded volatility moves to the downside. Who knows if those participants are still levered up in those ways, or if they got shaken out last time and are staying away from it. But yeah, an interesting play into this Bank of Japan meeting tonight.
Jenny, I think we should put a take profit in for double our stop loss.
You think so?
Yeah, because we're not in here that often, and we're not going to be in here next week.
I was going to say, we could go in with the news coming out tonight. Tomorrow's Friday. We'll be on air. Let's go in tomorrow and see what happened.
Okay, that's fine.
So I know last time we put in a resting order to get into something if it moved to a certain level. Now, is that here in our orders?
Yep.
No.
Yeah. So here, last time we were looking at the U.S. dollar, Swiss franc, and this is interesting because let's pull up that chart and we can see if you guys want
Can I
to
click on this
adjust
and
it.
then? Oh yeah, there it'll switch.
Absolutely. So here we were looking last time and said, we've seen, if you scroll out a little bit more, what we said was, it's hit this 79.79 Swiss franc level 3 times. It hasn't really closed on a daily time horizon below it, and so this would be a great point to get in. That might still hold true, but now let's zoom in a little bit at the most recent few days of price action, and we can see that this level that we were talking about before of not being able to break below it, if we zoom into the past 5-6 days, that level's looking closer to right where we are right now. And so we've tried that on 2 occasions here, last Thursday, and it looks like Tuesday and right now. And so I'd keep a close eye on this one. In terms of, if we start to...
Let's put a take profit order in.
Well, we don't have it. We never got filled.
Yeah, so you still haven't gotten filled here.
Keep it in order to buy it.
And so you could you could absolutely keep this where it is, or if you're anxious to get in here,
we're not.
Now it looks like this.
Well, we don't have a lot of buying power. Yeah, we can leave it. We can leave it, Glenn, because what if it pops back down here? Then we're in.
There you go. All right.
I think we'll leave it. We got enough going on. And our other positions that we have, so now we have our U.S. dollar, yen. We still have our euro, Great British pound, and our shekel.
Yeah, your shekel. That's down 1% today alone. So not the best, but luckily the stricter margin requirement there, you aren't as leveraged up in that pair.
It's fine. I mean, Glenn, have you ever heard they'll roll until you're right? With these foreign exchange, you just hold it till you're right.
We're not scared. We're not scared.
It is, yeah. Historically, over
Glenn,
long enough, yep.
We want to say thank you very much for everything in 2025 and Merry Christmas to you. And we cannot wait to hear about your trip to the Swiss Alps.
Oh my God.
All right.
It's more important than FX trading. Don't take this the wrong way. We love FX trading, but we're excited to hear about the trip.
Glenn, have a wonderful time. Be safe. Be careful.
Thanks, you guys too. Enjoy the time with your
Drive
family.
fast, take chances. I'm just kidding.
Free JD. He did nothing wrong.
I'm gonna make a shirt for everyone in your family. Free JD.
Glenn will appreciate that. I'm not telling him. All right. Thank you very much. Merry Christmas. We can't wait to have you back in 2026. We might be switching things up, so we'll see.
Right.
We'll keep Glenn, but just a different day.
Yeah.
See you guys.
All right. Bye, Glenn. Oh, that was fun. All right, we got another FX and a reason to take a look at it tomorrow after the yen, the Japanese news comes out.
I can't believe he ended with free JD. Out of control.
All right. Let's pop back in the platform. SPOOs are up almost 90.
I think it's near the high. Did they get any higher than this? Can we
I saw 90. I saw.
I'm going to ask a dumb question, Jenny. Is there any way you can get rid of that white bar?
What white bar?
On the top, where it's like I can't see. There you go.
It comes and goes. Like it comes and goes depending on where my mouse is moving. So that is not. I can't control it. If I move my mouse near the top, the white bar will appear.
Well, then we're going to work on getting rid of it because I can't see the price or anything.
Well, you can see it now, right?
Now we can, yeah, because the bar's gone.
Yeah.
Okay. So was that the top? Was that the
No. So here. Oh wait, I'm in 6. What am I? I'm in 60. Let me get to SPY. Okay, high of the day 680.67. So like 50.
We're right there.
Yeah, we're right there. We're near the high.
We're right there.
Is this the start of the Santa Claus rally?
I don't know, Jenny. Yesterday was so painful. And
I
don't know why yesterday hurt as much as it did. And we were talking, we got a text from Fazio, we got a text from other people. And I think that seemed to be a general consensus. Yesterday was weird, right?
It was painful. And You know, it's painful when you have those big swing days where it's like you're up in the morning. Was this the day where we were up on, or it was the day before? You know, we were up on the train, we're riding in the morning. Our accounts were looking great. Then took a turn, and yesterday took another turn. I think my P&L to the downside between noon and 3 doubled.
Yeah.
Yeah. Yeah. So it was painful.
I was like, oh, it's not that bad. And then I opened it up the next time and I fell off my chair.
Luckily, I wasn't paying too much attention. I was paying huge. Wait a second. How could it be exactly the same?
It's insane. Something is awry.
But still, yeah, like a big volume today. Big volume today. Big volume. All right, let's take a glance at our positions and see if there's anything we want to do. I think today I took off my ZB. I was like, I know this was a roll, but I took mine off. And honestly, we might
37% take it off.
We might be in the same boat. My ZBH year to date was positive. So I thought, well, heck, I know that was a roll, but I'll get out of it. Yeah, 25. Where? Oh, what are we paying here?
32. We were trying to get 25. That's fine.
Let's just, I think we take it because it's we've got a decent move today. So we'll keep an eye on this. If we drop back down, we can get back in.
For sure.
Yeah. Okay. So that's one thing gone. And crude oil, that's turning around. That's having a little bit of an up move. Little bit. What do we have that's having a big move today? Oh, our CRWV buffer. Now this is a buffer with $600. Oh no, we didn't do the buffer. We didn't. We just sold the put.
We did the buffer in Marvell, I think.
Okay. All right, let me just replace this. Let's take this put off because we made 32% overnight.
Yeah, I agree. That's the one that's got the crazy, weird, good buying power.
Honestly, like I was selling puts this morning and I already took them off. Because it's kind of crazy. Vol's come. Where's VIX? Vol must be coming in.
I'm gonna say 16 though.
Yeah, 16. So yeah. Vol's down to 8 more cents, and we're down in the 15 handle. Vol's coming in, and the market's going up. But 32% overnight. Let's take this off. And that market's tight enough. I'm just going to mid-market that. And we're going to get a lot of buying power back today, I think.
Well, the core we didn't give us a lot of buying power back. It gave us $500.
Well, I thought we might have a decent amount of items to take off today.
Oh, I see what you're saying.
What do we have? So we have this put spread, 55.45. And this 145 put is just left over from something else.
So then you can close that.
Yeah.
Yeah.
29 days to go.
You're getting $50 in a $5 wide put spread. Because $10. No, yeah, $10. If you look at that, it's 87.22. Yeah. So you might as well.
Yeah, sure. And it's right there. Okay. Anything else that's having a decent move? We've got crypto making a move to the upside. This only has 1 day to go. We have the 50 and let's leave that and hope for a little rally tomorrow.
Yeah, for sure. Okay,
we need IBIT up 50 cents more. So we'll leave that. Marvell, this was our buffer. And we put it on when it was trading around 82.5. It's 84. We'll keep that on.
Yeah, I mean, we should at least make $100 on a buffer because we had $600 in profit.
Yeah. Palladium continues its rally.
Can't stop, won't stop.
Look at that.
Silver and gold both up too. I'm looking at
pretty soon. Tim Knight's going to be living on a beach with all of his palladium.
He might be living on a beach right now with all of his palladium. He's in an undisclosed location with a Zoom background.
All right, so here's gold.
He's up a little bit, 0.5%. And silver?
Silver.
Ooh, down.
Down. I know. Did we?
Not much though.
So our gold is up 26.72. Our silver's down 59. So it still hasn't come back.
No.
I'm not against taking off our gold and leaving our silver. I'm not against it.
I'm against it. I really don't care, though. I really, truly don't. I just think, like I said, we put them on as a pair. Let's take them off as a pair.
I know, but our pair is so small.
I know, but at least I want it to be at least a scratch when we take it off.
Well, it can be a scratch if we take $26.91 out of gold, and then silver gets to be.
Jenny, you know I'm having fun with you when I say this, but take it off so I don't have to hear about it again, because you do it every time you run a platform.
Taking off our gold and just leaving our silver.
Just do it.
I took off my gold and left my silver.
I'm long both, so I shouldn't be saying anything about this.
Second, what is this? What is this saying? Where are we? 401.15. It's bouncing all around. Sell our 2 shares. Sell our 2 shares of gold. Sell our 2 shares of gold and leaving our short silver. Liz is going to lose sleep over this.
This isn't my account, so I'm long, and it's been done very, 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 very good for me this year. But I have been taking profits. I've got the zebra, so I really can't get hurt if it comes down a little bit. So I would like this account to make some money too.
Any other big movers? 41% in Netflix. What do we have? A Jade Lizard. Yeah. Let's take that for sure. Jade Lizard, we took in $1. It's trading. We made $41 on it. The most we can make is 100. So I say we take that off
for sure. And wait, I was looking at it. I thought we were maybe going through it 100%. And that got us back a lot of buying power.
I know. That's why I said we were going to get a lot of buying power back today, because I knew we had a handful of things we can close. If we're up to me, I'd close our palladium too.
You close gold. Don't take palladium away from me.
All right. Did we have?
You know what's funny is I think I did the same. Do we have 2 shares or 1 share of palladium?
2.
I think I put 1 in mine. Mine's even smaller in my account because I just wanted to know where the price was.
You had to watch it.
Yeah.
Okay. That's it for taking positions.
Can we take a look at our SPY position?
It was a diagonal. It was a terrible.
I know. I just want to take a look at it. It's not making money today. Oh, wait.
So look, I was trading 685 when we put this diagonal on. Now it's trading 680. 5 more points and we're up to where we were.
Well, that's what I'm saying. Look at the one that's expiring. It's worth 6 cents. Let's get out of that.
Yeah, let's buy that back.
Yeah, that's the only thing I was kind of looking at doing is that then it does, not that it matters, but then we have, do we want to sell something else against it? Probably not, right?
There's not going to be nothing to sell because we were in the 8-day $5. Like, I guess we could. So we have the 15-day 685. If we go into,
you can go to the 8-day, and I honestly don't think you need to, but you can go to like the 690. But why?
Yeah, you can. Yeah, I mean we could.
How much did we pay for this diagonal?
Too much. Too much, probably.
You have a 5. Look at this, Jenny. And I'm just going to give you this amazing scenario. If we don't sell anything against it.
773.
Yeah.
We leave it. We just leave our long.
Yeah, let's leave our long because if it pops up, if we get 2 days in a row like this, 15 days Santa Claus rally, that's our Santa Claus rally play, right?
I have so many leftover like residuals from diagonals that are in January, and I just said to myself, like, I'm just leaving them. Like, I'll look at I put those into a bucket and said, I'll look at those on January 16th.
That's a good idea. I'm not saying these are not the mechanics. Do not follow these mechanics, but I like it.
I mean, what are you going to do?
Yeah. So that's our Santa Claus rally play.
Okay. As far as, Micron, Jack JT, I know he was selling calls against and doing stuff to protect himself. Micron had a massive move. Liz, I don't know. If you can read to me everything that's here, my Zoom is blocking it all.
Oh, is it? Okay, I would love to tell you this because this I can see. Micron, it's got a 41 rank. It's trading 251.81. It's up $26.65, which happens to be, Jenny, you don't have to do the math. It's 11.8%. So it's trading 251 at 252. Up 11%.
Yeah. See, normally I could see this, but now the whole thing that says like you are screen sharing, it's blocking it.
Oh, yeah. Sometimes, remember, you have to log out and log back in, but you can't do that during the live show.
It's fine. I've got you. You've got
I've got eagle eyes.
You're running on all cylinders today. You could read it to me. So, I mean, what a move in Micron, but it's just back to where it was last week. So, or 2 weeks ago, I know.
And to kind of tie it together, can you pop into Twitter? Because Jack JT did talk about Micron.
All right, let's see. It doesn't look like I'm going to get to add more shares and reduce my cost basis, LOL. Meaning if he had short puts or downside ratio spreads and it blew through those, he'd be adding on more Micron.
Well, yeah, because if you look at it, he's worried about the downside, so he added short calls.
I know. I mean, hopefully it didn't blow through his calls, but it depends on when he added those calls because we were here, not that long ago. That was the big earnings. Tonight we have Nike, FedEx, KB Homes, Carnival Cruise, and ConAgra.
I'm not gonna lie to you. You're gonna need to call me tomorrow morning and remind me to get on the show because I literally thought it was Friday until just now.
Well, that's why I said, like, with the Japanese yen trade, we can look at it tomorrow.
I know, but I didn't think we had a show tomorrow. I mean, I really thought we were off on Friday. Okay. So,
I mean, you're in holiday mode. JD's coming home from college, and this is nice. This is like he's a freshman. He came home briefly for Thanksgiving, but now you're going to have him home for weeks and weeks.
I know, and we get to take him on vacation. Although he's already in the penalty box, he'll go through it.
Free JD.
Okay, so Nike, FedEx, KB Homes, and CCL. So we got another home. Toll was took down everything. We got KB Homes following it. Nike's always a good one. So I do want to look at Nike. A lot of the retailers. Now, would you consider Nike a retailer? No, right? It's a brand.
I mean, I guess.
Right? Kind of ish. Kind of.
Yeah. I guess so. Let's see what expected move 466. You could do a Jade Lizard in Nike. It looks like a decent Jade Lizard candidate.
Ooh, that does look pretty good. And we got a lot of buying power back.
Yeah. Do you want to?
Yeah, I do.
Okay. So we're just selling the 62.5 put, gets our break even beyond the expected move, right?
Yep. Love it.
And the 71.72 call spread, we're taking in 99 cents.
I like it. We haven't done a Jade Lizard on earnings in a while.
No, that's good. That was easy. All right.
I know we just placed the trade, and I don't want to throw anything in there, but do buffers work for earnings, or no?
Do buffers work for earnings?
So I would put a buffer on as an after earnings play in the 1D. We can't. I mean, it would be tomorrow. You know what I mean? Like if there's an earnings on a Monday and a stock goes up, a lot of times I'll put the buffer on for the weekly. I don't think it works for earnings, really, does it?
You can. So here, 136, and then if I sell the 69, I mean 269. I think that 269, and it's kind of bringing my break even. You know what I need to do? You're getting 218. At that point, I would just, I guess you could, but I almost would rather just sell a put because you need it to go up to make the 218.
I see what you're saying. And I wouldn't do it versus the put. I was just saying, in my mind, we've never done a buffer for earnings. Do you know what I mean?
Yeah.
Because then it has to go up. Otherwise you do lose.
Okay. So we've got that on for Nike. Oh, I did want to ask you, and I know, well, let me make sure we get to everyone on Twitter. Let's see. We had Jack JT. Dak was yesterday. Hopefully everyone survived. I was telling Liz, I worked so hard. It's funny. If I have a winning SPX trade, I don't really think about it in the afternoon. But if I have a losing SPX trade, I work so hard in the afternoon trying to scalp this, scalp that, scalp this, scalp that to make some of my money back. So I worked so hard to chip away at my loss because I had, it blew through my put spreads yesterday.
I'm laughing because you act like you're in the coal mine. You're like, I worked so hard. But that's kind of fun work, right? So you chipped away and made back some of your losses from the rip your face off.
And honestly, maybe that's why I wasn't that worried or concerned about everything else. Because you talk about this, like we've got these big portfolios, and all I'm worried about is trying to make back my SPX losses. Not even looking at the whole of the day. I'm just trying to scalp in and out of these zero DTEs. And this morning on another news station, they had some girl talking about zero DTEs, and she's like, these are ultra risk. These are so risky. These are the riskiest things. She just kept saying for the ultra risk takers, talking about the zero DTEs.
What? That's insane. I mean, sure, anything can be abused, right? Like you could abuse it. Like if you're going to sell naked puts in SPX, a little risky. Like yesterday, if you sold the naked put in SPX and you used $175,000 and sold the naked put yesterday, you're never coming back to the well. You're never coming back to the well if it was yesterday.
But I was going to say, like, obviously, if you're going to go out there and say, like, these 0DTs, the biggest risk, they're so risky, you basically could, like, you know, you could make, what was she saying? She's like, you could risk $5,000 to make $50,000 in a one day.
But that's not risky.
I mean, I think obviously she's never heard of a spread. Obviously she doesn't understand options and doesn't know how you can define your risk on the riskiest of risky trades.
So I do think there is something to be said, and this is the 9th day of Christmas, Jenny, and we're going to talk about how everybody started getting trading. So on the 9th day of Christmas, the traders
on the 9th day of Christmas, our traders give to me.
How we got into trading, something like that. Okay, we're supposed to show like a lot of the capital requirements, which you and I do on a daily basis. We talk about how much capital each trade is required, and there are articles on here. But we were going to talk about how we got into trading. But my point, kind of springboarding off that, was with the 0DTE, they are options. So if somebody's talking 0DTE, so I love when people get out there and be like, options are really risky. That's insane. You need to understand options in order to trade them. And, I was talking to, when we were in taking the Christmas photos, I was talking at the table to James or Jamal and Nick. And Nick's like, no, everybody's just YOLOing. Everybody's using those SPX trades to YOLO long calls. So that's what that woman is saying. And then you look at your Jack Tuckers of the world who are smart and methodical and saying, I want it to stay within this range, right?
Right.
So it's so insane to me that somebody's going to get up there and say it's risky. Jack Tucker knows exactly what his risk is.
And if someone's just buying them to YOLO long calls, that's not risky. That's like a lottery ticket, and you're just paying. It's like going to the casino and putting, throwing your money on black, right?
Yeah, that is for entertainment purposes only. I agree with you. It's doing that. And that's what I'm saying. Jack Tucker, if you're trading this style, I know exactly what my risk is for the day. Exactly. It's not like I could lose. Jack Tucker can't lose more than he thinks he's going to lose.
Right. If you've been on Tasty Trade, we've been saying this for 15 years. Your risk is defined at order entry. We know our risk going into the trade. You can define your risk and take as little risk as you want. So I do think hopefully more and more people out there are starting to learn options, but they do have for people that don't understand them, they have this connotation of like options are risky. And now my in-laws, they just recently inherited some money, so they moved some into a Tasty Trade account, and they wanted me to help set it up. But they're like very old school. They want just like dividend paying stocks, and I was trying to explain how we could do some covered calls against those stocks. And if I dared, Liz, to get into those stocks, like if I dared start selling like at the money puts every week to get into those stocks. Like, and if they told their friends,
yeah,
dun dun dun,
which is insane because you could probably sell in the money calls against their stock, and they wouldn't know that they had an out of the money put.
No, I bet I could, like, if you think about it, instead of just buying the stock, I could sell at the money puts every week until they get put the stock, instead of just like going out and buying that stock.
Exactly.
I know, and they'd probably make more on that. Then they'll who knows? You never know. But you never know. But we just
that's like our friend Cutter from the trading floor. He now manages people's money, and so he manages it. And he was using synthetics, and people kept being like, "Where's my stock? Where's my stock?" He's like, "Well, it's right here. Synthetically, you're long this." He's like, "I don't see my stock." He finally just threw the towel, and he's like, "Here's your stock.
Forget it.
You're not gonna forget it. Forget it. You want to use more capital? Fine. Here's your stock."
Oh yeah.
Good times.
So anyway, if we're taking live tweets, hashtag LIZJNY, send us your tweets. In the meantime, Liz,
we have about 6 minutes left.
Oh, we do?
Yeah.
Jeez.
That's why you're like, in the meantime. I mean, we don't have a meantime.
In the meantime. Okay. Well, here, let's get to our tweets at least. So, this was Jack. Wednesday recap. Rolled call site down.
Oh, yeah. This was 18 hours ago, though.
Yeah, right. I just wanted to see what happened. I wanted to see what happened to him yesterday. Rolled the call side down, total premium 42,000. The SPX closed 67.21. So all positions expired worthless, giving him a full profit of 42,000.
Jack Tucker.
Jack. And I was killing myself. And they
Jack Tucker.
Oh, Jack.
Wait, can you retweet that?
He's the master, the man, the myth, the legend, Jack Tucker.
Oh man. And you know what's crazy? It's all there.
He puts it all there. He puts it all there. Frank, not to dismiss you, but after that post, I'm gonna go.
We love you too, Frank.
All right. Okay. That was
so
amazing.
we did put something in at Nike. Did you want to take a look at FedEx?
Here, I just want, because since I've got my in-laws coming over today, and I have a question for you. If I go to watch list and I go to Dividend Aristocats or Dividend Champions, either one, and I sort by where is the dividend?
Yeah, it's probably on yours, not on this one, but you can change it to dividend yield.
Okay, so then I put in dividend yield. Where is it? Dividend yield. Put this in here. Okay.
Yeah.
All right, so I'm gonna put that on there, and I sort by dividend yield. Do any of these that you see like jump out at you?
So I'm gonna give one tiny little piece of advice, not to be taken, and this is not real advice. Okay. You got to let them pick, because you don't want to go down the rabbit hole of being like, you got me into
No. Like I gave them a list. I was giving them a list. I'm just asking you, like, if you look at these, do any of these jump out at you? Do any of these jump out at you as like, yeah, I this was one that I've been in, and
no, I'm not in any of these.
Well, do any jump out at you, Liz?
No.
As products that are, so like for me, if I look
Target.
at
the only thing on there is Target.
So if I look at this list, I Target, because I know that's the liquid. Clorox, I know we've been in that. Chevron, because like certain symbols will jump out at me just because I know they're liquid products that we can trade options as well. That's what I was asking. Anything jump out at you?
No, Target. It's the only one I like.
Target. Okay. Yeah. All right.
Other than that.
That's the Dividend Champions. And then we've got the Dividend Aristocats.
It's Aristocrats.
Did I say Aristocats?
You did.
I always do, because it's my.
I know Lily loved that movie.
Yeah. My daughter loved that. The Aristocats. All right. You see the same cast of characters. Ben Franklin, Clorox, Target.
Yeah.
Chevron.
Yeah.
All right.
No, I don't see a lot of that. But you gotta let them pick it.
I'm giving them a list. Like if I said to them, like, go find yourself a bunch of dividend paying stock. If they say, oh, we want to buy some high dividend paying stocks, and I say, go find them, like I need to provide them with a list, then they can go and decide what they want to get into. Otherwise, I don't know.
They have to be the deciders. You do not want to. Those are your in-laws. You do not want to get into.
I am. Their account is going to be mostly all boxed up.
Perfect. All right. So, is there anything else we want to do? Did we want to get into FedEx? No. Let's get out of Etsy.
I tried. I've got an order in, right?
So Etsy is one of those. I'm going to go into our thing real quick. Etsy is one of those where we're out of.
Here. I don't want to give up too much. I'm sure this was a roll.
No, it wasn't. It was a profitable one, and we sold another one.
Oh, really?
I believe so.
I'm going to order chains. I'm taking a tape. Etsy, down $457.
You get the hell out of Etsy. I can't stand this product.
I love Etsy. And I bet Vanetta does too.
I'm sure she does.
As a product. Okay, so You want out of it? Fine. I wanted out of gold. I got out of it. I'll get out of Etsy for you.
Oh, thank you. That's very nice of you, Jenny.
Final, like I keep taking it.
No,
up.
I wouldn't go up farther than that. That's insane. Just yeah.
Because what did we get for that put spread?
$5, I think.
Oh,
No,
it was a roll. It was a roll, and then we had to buy one. So
that's why I was going to say if you go back farther, it was a put spread.
$2.
No, can you go back farther? Go back 60 days, Netsy. Just because it's supposed to be showing your chain.
And
go
then
to
we
60
couldn't
days.
get filled.
Yeah, go to 60 days. I couldn't get filled, right? So we had the spread. We let that 145 roll off. It was a winner. Then we just sold another 55 and bought another one. So it was a winner. This particular trade was. Yes.
Yeah, $1.90, $1.50. So we're going at $3.40, but then we paid that. So $3. So we've got like $3 in credit, and it's $2.40. Fine. I'll pay up to $2.50 to buy it back. Then,
because it was one of those where we were just like, okay, we'll just do it again. Thank you very much.
Yeah. If you don't like it, we can get rid of it.
Oh, you're so nice to me sometimes.
Now, I'm curious. I know we put on our yen FX position, but I just want to take a look. 6J. If we take a look at 6J with the announcement coming out, what kind of premium we have here, how far you can get, what kind of move they're going to have. If I sold at the expected move, you're risky. Oh, look at this. It's not bad. You're taking in 130, risking 175 to take in 130.
Ooh, I kind of like it.
I know. How about that?
Yeah, do it. I mean, it'll be our final trade for the day because we've got option trading concepts live coming on after us.
Right. We're just did that all come up accurately?
I think so.
It's hard because I don't see everything here. Let's see.
It's got to be max profit 130. Yeah.
Let's see. It's 137 credit. Buying power 235.
Yeah.
All right. So that's working.
I wouldn't cancel replace that because I don't know
Yeah. Okay.
I don't. That's the only thing with this is I don't understand what
130 or 125 or something like that.
You know, it's so.
Because it's like 0.0000.
I know. That's why I was like, what is happening? When I looked at that, I was like, what is she? I was like, that many shares to trade? And then I was like, that's the gamma.
Well, that's working. If we get filled, we get filled. And we are out of time. Liz, today is Thursday. Show up tomorrow.
I'm going to. I'll talk to you again. Call me in the morning.
I'll see you. I'll see you soon at 11:30. We've got a meeting.
All right, everybody. Good luck with your earnings trades, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
I'll be here. I promise.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
What's up, TC Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal. And I don't know what happened. I've been in meetings all morning, but we're up 80. Bitcoin up 2K. NASDAQ up 500. What's going on?
What's going on, Mikey, is it's all a part of the master plan. It's all a part of the master plan.
The Santa Claus rally? I think so.
I said that we're going to be a little bit lower. We're going to trade around 68.50. Still hasn't happened yet. Still, give me time. Give me time till tomorrow. But I said it was going to feel like a lot happened, and sure enough, that's certainly what it has felt like over the last couple of days. I mean, it's looked ugly until today. It seemed like everybody was kind of waiting on this number, I guess. And I guess it delivered. So here we are. Big day in markets.
Yeah, I mean, we had so right at 7:30 Central, E-minis jumped up a little bit, and then that was really emphasized at 9:20. You can see I've got the minute chart here. E-minis at 7:30, that's when we got the job number, CPI, all that came out, but then continued throughout the morning. We are now up 80 points, but the initial jump was still decent. It was up 30 points and then got up to almost 40 before the market opened, and then right at 8:30 sold off a little bit, but we are still climbing higher here on this nice bullish day. If you position for it, you're loving it. And volatility was already low, but still coming in a little bit. The F contract at 1820, the G at 1960, so pretty strong contango there. And then sort of flattens out over the next two cycles. But the VIX down 7%, down to 16. And this is what we've talked about this before. Like, we shouldn't be surprised to see some rips in the market when volatility's in the teens. Like, it's as simple as that.
Yeah.
But yeah, did have earnings in MU yesterday. Whoa, up 30 points. It was kind of,
couldn't believe that one.
Yeah, it was an inside move after the market closed yesterday. It was pretty flat. But I think we're seeing just a general market rip here.
Well, you know what's funny about MU? I feel dumb, not because of the little call calendar, the put calendar that I did. I don't care about that at all. I feel dumb because you remember yesterday we were looking at somebody's trade and we priced it out, and I'm pretty sure that strike for that butterfly was at 260. I think, and you remember I was like, dude, if MU was moving to 260, that'd be crazy.
And here we are.
Wow.
Yeah, I think it was a 250, 260, 270, 1 by 3 by 2, if I remember correctly.
I hope you didn't listen to me, and I hope you put it on, whoever that was.
Yeah, I'm sure they did. But yeah, that's a nice trade for sure. That was a low cost. It was like a $200 trade for a $1,000 max profit, something like that. But yeah, seeing a big rally here in a lot of the S&P 100 products. Palantir up 5%, Starbucks up 5%, Tesla, GE, Meta, Amazon, AMD, Nvidia, Microsoft, Google. All of those names I just rattled off are up over 2%. So seeing a pretty broad market rally here, heading back to 6850 or above 6850. To the downside, not too much in the S&P 100, UNH, IBM, Exxon, which is interesting because crude's up a little bit, up 60 cents. But looking at the NASDAQ specifically, NASDAQ 100, I should say, Micron up 12% on the back of earnings. Lulu somehow rallying 6%. Somehow.
Wow.
Starbucks in there as well. But yeah, a lot of products over 2% and really nothing. Only 1, 2, 3, 4, 5 products down over 1%. A lot of chop in between there. But yeah, kind of a crazy day here. Nothing was spooky about the jobs number and CPI. CPI came in at 2.6, 2.7 year over year. Core was 2.6, and then the jobs came in right as expected. So where do we go from here?
I mean, as excited as we are, we're still down on the week. That's the funny thing about all of it. But look, we needed a bounce here because markets just really have been pretty weak, and there's just been again, it hasn't even been bad news. Like you said, the jobs number was mixed. CPI obviously was positive today, but it was just still kind of this overhang with Bitcoin and with the AI names. And I think we just really needed this. And I think you're just seeing a strong relief rally as a result of that.
Yeah, couldn't have said it better myself. Yeah, lots of movement here. We do have a slightly shortened show today. We're going to go to a VOD from 11:30 to 12, and then we'll be back to live programming after that. But if you have any trade ideas, questions, we can field them in the YouTube chat. If you want to join us on the YouTube channel, just head over to tastylive. You can throw in your comments on the right-hand side chat. I've got the referral program, tastytrade.com/referral, pinned to the top of the YouTube chat. If your friend joins, you both get $100 if they meet the qualifications. So check that out. But yeah, today we have FedEx after the close, and what was there's another one. Oh, Nike. FedEx and Nike, both after the close today. Nike pretty flat, 4-point expected move on a $66 product, pretty decent, especially relative to Jan and Feb. And then FedEx, still an expensive product, almost $300, 16-point expected move, much less implied volatility overall in FedEx compared to Nike, slightly higher in these near-term cycles. But let us know if you have any ideas, and we can check them out here. Have you done anything today?
I really have. Gosh, what did I do? The only thing I did was. Well, first of all, I got to give you props. Late yesterday, I was able to get filled on the 1x2 in MCL, much like you did when you did the 1x2 to the basically short to the upside, and the ratio spread, if you will. I did the in my case, and again, this all stems from us buying MCL at a time when it was higher, and obviously the big fall that happened. We rolled our futures, but my cost basis was 58.80, and so I wanted to get something on kind of like you did. It was a great idea, so I ended up doing the similar thing, and I did the 56.5, 58.5 ratio, short 2 of the 58.5s, And again, my upside, I originally bought an MCL contract last week at 58.80, even though I've rolled since, but that's my cost basis. And so I figured I'd get a ratio spread with something to the upside there. So I put that on late yesterday. As far as today goes, the only thing that I've done was I actually rolled out the Costco calls. So I closed out the D26 Jan 910 call spread. And now I have the same strikes, but just Feb Jan.
Cool.
So that's
Love it. Yeah, the MCL position, that was a nice adjustment. It really didn't hurt us at all. It just gave us the ability to double our delta from a 2-point window. So similar to you, I mean, I have the long contract, but my basis from the one I rolled from is around 57. So bought the call ratio with being long the contract means I have an extra call spread from 55 to 57 and no additional risk to the upside since I'm long the contract, which offsets my extra short call. So literally the same exact trade that you have on, just throwing on a call ratio where the short option is at our break even gives us the ability to profit if we get back to our break even on the contract. So definitely like the adjustment. It's working out as of now. We're kind of sitting right in between that range. And this position is up 35 cents today, 70 cents overall. And yeah, I'm just looking for a move to 57 or above, and we'll be A-okay there. MES position coming in nicely today. Pretty flat, but this is the year-long trade for 2026, so I will be keeping up with updating this one. But yeah, nothing to do here. Again, just going to be rolling the put out and down or just out, depending on the situation. If we get tested to the downside, if we get tested to the upside, I'm going to shift the whole thing up. I'm not going to have short delta in here. And I think it'll be a decent setup for a low vol potential rally next year. But we'll see.
Maybe we're getting too excited too quickly. We've dropped about 20 handles since the show started.
Oh, no.
Yeah. Wow.
Two-sided action. We'll take it.
Yeah, for sure.
But yeah, everything else, I'm just keeping my eye on some stuff, but nothing too crazy here. A lot of these positions are leftover positions that'll fall off, but yeah, if we see anything, we will make adjustments. But yeah, let's pop over to the YouTube chat, see if we have any trade ideas over the next 20 minutes here. Short AXP at the 410 strike, Jan 30th expiration. AXP has a dividend coming up on Jan 2nd. What is my early assignment risk due to the X dividend? Let's take a look. So you're at 410 in the Jan 30. You're fine. Just from the initial, yeah, if you're short a call, it only applies to in-the-money calls. So an in-the-money call, if we look at the dividend here, 82 cents was the last one. So you would need to be short a like 300 strike call for you to have any assignment risk here. And that's just because your extrinsic value, first of all, your call's out of the money. So there's no reason for the counterparty that's long the call to exercise to get shares at 410 when they can just buy shares at 375. So your assignment risk only applies to in-the-money calls. And your in-the-money short call would have to have less extrinsic value than the implied dividend. So even if you had a 320 call in the Jan 30 cycle, you are still not at assignment risk from the dividend because there's $150 to $200 in this in terms of extrinsic value.
Yeah, just take a look at the put side and just kind of like Mikey said, it's an 82-cent dividend. If you were short that 320 call, you see that put side is already a $1.50 bid, so you'd be fine. It would have to, the value of that put would have to be, 82 cents or less than 82 cents. And the number one thing too, I think, just look at the volume. If you ever have a short in the money call on a dividend that's coming up, if you look at the volume that's transpiring on that day and you see a ton of volume happening, you're probably going to have to take action on your call.
Yeah, I think you'll be fine here, but especially because you have an out of the money option, so it's not going to be an issue. I did a tasty trade yesterday. Sold a Palantir cash secured put at the 170 strike for $815. Got out today for $650. Yeah, I mean, Palantir is is one of the leaders in the upside moves here, up 5%. So yeah, great timing for you. And yeah, the Jan 30 cycle, you sold it pre-earnings, so that helps it lose value, not only from theta decay, but also just it's not going to hold on to out of the money implied volatility value because you are outside of the earnings cycle. So yeah, that's a great trade. Nice work. Very nice work. Who do you like tonight, Rams or Seattle? I think if Devontae Adams does not play, Seattle will win. Because then you can just double Puka and make your life a lot easier.
Where's the game?
It's gonna be great. This is the first time in NFL history.
It's at Seattle.
Yeah, I think it's the first time in NFL history. Might be Thursday Night Football history, but could be NFL history where two teams go head to head that both have 11 wins.
Really?
Yeah.
That seems crazy, but maybe that's right.
Fact check me. I saw it on the internet, so it must be real. Shorting Tesla today. Wish me luck. Lol. Yeah, I mean, if you're going to short it, why not do it into a 20-point rally? This is the minute chart. Let me swap out of this here. But yeah, I mean, it's sitting near recent highs, and it's had a hard time exceeding that, so don't mind it. Still a big product, though, so it's hard to do. We're kind of forced to do calendar spreads or credit spreads in here.
Yeah. Monster move. This thing seems like it's on a one-way track for 500, but I guess we'll have to see.
Coach Chris sold a put before earnings with Lulu, blew up to the downside, I assume. Maybe. But
stock went up big.
Stock went up big.
Oh, before earnings? Okay,
maybe before earnings.
Way before earnings. Okay. All right.
Been rolling the put still, just like the DraftKings short put. Yeah, I mean, it should be working out now if you sold it anytime from July until now with the gap higher here. So nice trade, but yeah, I mean, that's the name of the game. If you sell a put with undefined risk, it should be a small enough size to where you can just roll it perpetually. And ideally, of course, you get the rally you need to get out of the money, and then you're just left with all the credit you collected along the way. Yeah. Let's take a look at Nike. I kind of want to trade Nike for earnings. We talked yesterday about how the shoe company might be dead here. Not dead, but there's nothing propping it up. How are you playing this? Are you going to do anything in here?
I'm actually more interested in FedEx than Nike.
Really?
Yeah. I don't know. I just tend to be more interested in the bigger names when it comes to earnings, just because of the potential moves, right? I mean, I don't know. I don't foresee a 10% move in here. But I don't know. I could be convinced. What are you thinking?
I mean, I'm still defined risk all the way. If I do anything in here, but I like the premium relative to the cost. If you do a diagonal spread like long Feb, short Dece, it just has to make sense. I guess it does. You can get I'll do this. So
at the money.
I think you can do an at the money upside or downside, but yeah, $500 for a at the money upside call in Feb, and you can sell the 70 against it for $1. So $4 calendar spread, 5 points wide, long Feb, 64 days out, gives you a long time for it to work out. Or a downside, there's no premium to the downside, which is interesting. If you look at the 60 strike, 5 points out of the money to the downside, only 30 cents, 90 cents to the upside. But the premium here is also much more expensive at 65 relative to the put. Am I missing something? Yeah, there's a dividend here. Well, the dividend was in December, like a couple weeks ago.
Yeah, the div was a week ago.
Something's afoot here. If we look 10 points out of the money, you just have call skew, lots of call skew here. It's weird though, because you can't,
earnings?
Like a downside put diagonal, you're not getting paid anything to sell that put.
That's right. It did have a pretty big move on last earnings. The last two earnings, actually, now that I think about it. Yeah, in June, that's right. It went from like, it had like almost a 10% move.
Yeah, I think I'm just gonna buy this call calendar here. It's significantly less risk than the diagonal, and it's just like your trade yesterday, like putting up $1 to hold an option for 64 days. There's a lot of ways to be successful with this, just because the cost is so low. And if we fast forward to tomorrow, where we get all this premium out, even if we crush implied volatility a little bit, there's still such a wide range for you to be profitable on this trade, even if it's a neutral move or slightly downside move. So I'll throw this on just to get involved a little bit here.
Get involved.
70 strike calendar. And then FedEx, similar story. $280 product. Feb, 32% IV, super low. And then you have 130% IV reflective of a 16-point move in the 1 day. But this is like where this actually, you're getting a lot of cost basis reduction when you consider 64-day option reflective of a 27-point range, 1 day option, 16-point range. So you have plenty of implied volatility value here. What are you thinking for FedEx?
I mean, why not 300, right? I mean, that would be the thing if it makes a big move, 300.
Why not? Are you looking like 8-day 1 day or Jan 1 day?
Yeah, Jan 1 day is 278. It's a little on the higher side than I'd really want to do. What is 8-day 1 day? Well, that's really cheap. Definitely that.
Yeah, it's almost that's $1.
Yeah.
$1.
That's pretty easy.
8-day 1 day for $1. Yeah, that's really cheap. And yeah, similar story here. If we fast forward to tomorrow, you can see how your P&L shifts, but we also have to crush implied volatility in the 8-day. The back months are at 30%, so let's just bring this down to like 40%. You'll still see this a little elevated, but yeah, even if you crush this to 30%, you still have a nice wide range to be profitable here between 285 and 315, simply because your net payment is 80 cents on an option that's trading for 370 right now. So yeah, even in the worst case scenario where you just get an absolute crush in the 8-day, you still have this 30 point range. I like
They'll give it to you for 80 cents.
I like it. The old 8-day 1 day filled instantly. Oh God.
Yeah, I know, right?
Nike.
And it seems like they got a lot to go. Clearly, they gave it to me. They gave it to you. They gave it to any of us.
Yeah, Nike. They don't want to offer here.
You're doing for what? What was that? The Jan. You're doing Jan.
Nike.
Versus What are you doing? Feb versus
the Feb 1 day. Yeah, for $1.80. Just a slight upside bullish move here. Just really only because the put side, you can't do anything you can do stuff on the put side, but you're not getting paid to sell anything against it. So just kind of it's pretty much a neutral trade here, being so close to the stock price. So just using the calls to get that extra cost basis reduction.
It's interesting when you do look at the volume, there's a lot more volume to the downside, but I feel like it's going to bounce.
Yeah, Steve
has the last two earnings.
Steve's point here in Nike, wanted to do it with a credit put spread, but just not feeling it. Yeah, there's just not a lot of premium there. So because there's not a lot of premium, you're forced to go closer to the stock price to get anything. But I don't like I don't like these setups where you're right at the money, your pop is basically 50%, but you're only collecting 1/3 the width. It just doesn't feel right. If I'm right up against the stock price with a 5-point wide spread, I expect to collect 250 because it's a 50-50 shot. So if I'm not collecting 250, I don't like these types of setups. So yeah, I hear you there. Oklo 100 call calendar March Jan.
Where's that? I was gonna say I thought it was like 75 bones.
Yeah, this thing is. Yeah, I don't mind this. It's a longer term trade for sure. And if we look at just looking at implied volatility, 100% implied volatility across the board. But yeah, you've got 3 times the amount of time in March, 27% range or 27-point range relative to a 14-point range in Jan. But yeah, you've got an $8 long call here that you're buying in March, selling a $2 call against it in Jan. You can roll from Jan to Feb and reduce basis further. You could diagonalize it if you do get the rally, or if you don't. There's still plenty of premium here to reduce basis and get into a March Feb diagonal spread or calendar spread. So yeah, I like the low cost exposure there.
Volatility has calmed down in this because IVR was much higher like a week ago, believe it or not. I was looking at selling something in here.
Yeah, it is super high IV. Selling a put, totally viable too. A little bit elevated buying power relative to notional, $2,200, but you're getting paid a lot to take that risk.
Yeah.
Gold, silver down, dollar strength suddenly, market down 40 points from highs. Oh, we're still selling off too. Wow, Bitcoin just got hammered.
Wow, gold is down. Wow.
What is happening here? TastyFX.
Risk off.
TastyFX getting clobbered on all these positions. Hate to see it, but still super small. I'll just hold that until we're in a different environment entirely. Couple minutes left here. In Nike, just sold a put. Just do it. I see what you did there. I see what you did there. Yeah, I'm gonna stick with the defined risk. I like the defined risk calendars diagonals. That way, if the trade gets blown out, it's just the debit paid risk. But if you're trying to take shares at a lower basis, fine. There's just not a lot of put premium there on that side. But I'm gonna leave it at $1.78. I don't feel the need to increase this cost much at all, especially since we were instantly filled in FedEx.
Yeah.
Super small trade, but this is an exciting trade because it's an 80-cent debit. If you do get the rally up to our strike, this could still be a $150, $200 winner tomorrow, especially if we rally to like 295 and you hold it to 295 or you're close to 300 by the end of the day. You get all the premium out of the 1 day. The 8-day increases in value a bit. Could still be a nice trade. Yeah. Crypto selling off here. If we look at the 1 minute, big sell off right from 88, dropped all the way down to 85.7, and that was right at 11. What's going on,
good.
people?
I mean, if we continue to fall here, and we go red on the day, that seems like a very scary proposition.
Yeah, this has been a tough one in terms of trying to buy the dip, but we seem to be kind of flattening out around this 85.7 mark, 85 and change. So we'll see if we can hold that level. But yeah, craziness. Volatile day all around. But yeah, we got filled in FedEx. I'm working this Nike position a little bit longer term just because it's a smaller price product. I can afford to go further out in time and still only pay $1 for this thing. But yeah, I'll keep my eye on the rest of the portfolio, see if anything else is moving today. But I don't intend to do anything too crazy here, given the moves we're seeing. And some of these positions, we just need time. Like this meta position, I have a 750 calendar long January, but seeing a pretty big lift here today. If we get a couple more days like this, back to 700 or above 700, we'll be looking good on this position. We'll see.
Yeah, we just need a little bit more of a rally here. But again, hopefully the market clings to what it was clinging to this morning, and positive drift as far as like downside in inflation, and that seemed like the market liked that. Hopefully that continues. If not, the reoccurring theme that has been the main theme for the week, which is AI struggles might resurface. That's kind of where we are right now, and I think that's the fear that we're seeing potentially happen.
Yeah, it's crazy though. You have this euphoric move in the morning, and it's just hammered down. They're selling the highs pretty consistently here, but it's such a weird market because we're still not seeing vol. Like even into this sell-off, we're still green on the day. Don't get me wrong, but we're not seeing any vol get pumped into this move at all. The VIX is still range, down. Huh? It's crazy, but we've said this before. I think we need to see continuation. We need to see bigger sell-offs. I mean, we've seen a big sell-off from the highs in the E-minis, but the market seems to be requiring even bigger, more volatile sell-offs to the downside for volatility to react in any kind of meaningful way. So I think we chop around here. We should expect to see some decent ranges, but at least right now, volatility isn't telling us that anything crazy is on the horizon. We'll see if that changes. But yeah, big intraday range today. A lot of uncertainty from the price action standpoint, at least. But that's it.
It's like a TV show. Tune in to see how it ends up.
Yeah. Tune in and tune out. That's all the time we have for today. Thanks for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler. Again, we're going to go to a quick VOD for the next 30 minutes, and then we will be back later on today. So stay tuned. If we post any trades, if we get filled in the Nike trade, we'll post that to the tastytrade follow page. We will both post the FedEx trade for sure. We'll see what happens with those after the market closes today. But yeah, have a great rest of your trading day. We'll see you same time, same place tomorrow. Peace.
We are back, son. You know what that means. Enough out of you. We've got trades from the research team. Who is our first researcher? Shark, what's up, baby?
Good.
How are you
guys? Not much is going on right now.
Right. You are right. Volatility was anemic yesterday as the market.
Anemic.
Yes.
That's a nice word, right?
Thank you. As it was sliding.
Yeah.
But you came up with something, I think.
Yeah, I came up with a little something.
All right, what you got for us?
Hey, yeah.
What do you got? I was going to say, my girlfriend went to the aquarium the other day, and she gave me a fun fact about sharks.
Fun fact about sharks?
Yes.
Well, I was wondering how this was going to tie into the whole trading thing. It's about
they turn off half their brain when they go to sleep. Like they turn on. That's how they sleep. They have like part of the brain that like they turn it off, and then that's.
So what's the segue? That I turn off half my brain the entire day?
No, man, you're always working.
You are 100%.
You're 100% on.
Sometimes you're half day.
Yeah.
Not half brain, but half day. But.
Wow. Okay.
But. I just wanted to put out a fun fact about sharks that I learned.
Sunrise to sunset like Gad. Okay.
Yeah.
The hours.
That's right.
See how it is.
Well, what do you got? What do you got for us? I've never. I don't think I've ever traded this.
HUT. Hut 8 Corp. These guys
This
were
is
a
not Pizza
Bitcoin,
Hut, right?
a Bitcoin mining company, and now they're investing in AI data centers.
Soon to be nuclear too, right?
Yeah, soon to be
They'll do
nuclear,
something.
which is why their stock has risen like the 7% or whatever yesterday.
It's a $4.5 billion company.
Unlike being bearish on the market like everybody is right now, okay? Got to go full bullish, covered call, okay? That's what's up.
Okay, I like this.
You know, some people in our immediate circles are a little bit bearish all the time. You know, don't want to be like that.
We'll learn. It's
So you want to do a covered call on here, huh?
Yeah, covered call.
Huh.
I mean, you got some juicy options here. I mean,
You do have some juicy options. Expected.
You probably want to
call skew.
$10.
Tons of calls. You probably want to wait a little bit because you know it was up a lot.
It's up $2 this morning too. So I wish you did this yesterday.
We'll take a look, or maybe a poor man's covered call or something, or just to define risk.
Even a 1/2 ratio spread might be
to play into this.
Might be a play here. I mean, I like your covered call here. I mean, it seems
all these
to be
Bitcoin, AI, nuclear. You got to hold these stocks, right?
It's just one day they'll just go zooming.
You remember the time you wanted to buy Costco or Nvidia like 10 years ago?
Wasn't allowed. Wasn't allowed. Hands were tied. Hands were tied. Hands were tied. Wasn't allowed. Wasn't allowed. All right. I think your timing, obviously, with this market higher, HUT up by $2, up yesterday. I don't want to go full out, covered call in this. I'd rather kind of buy it on a dip when it was going lower. But maybe a call ratios. But you brought something to my attention that I would never look at. So that was
good.
valuable.
That's the goal.
That is the goal. You did well. You did well. Go back to half sleep there on the shark. Who's up next? Who's our next researcher? I gotta hold my coffee like it's a Cavassier or something like that when my man.
Good morning.
Good morning, my friend. How are you?
Good.
You got a good voice for radio.
You do.
Yeah.
Yeah.
You do.
I'm doing on your recommendations, training my accent. So.
Oh.
Yeah.
Okay. All right.
I'm reading, listening. Yeah, working on my accent. So.
See, we got one. He's like overtime. He's working on things. And then we got one that's sleeping.
You gotta aggregate them together.
Yeah,
it's the sum of the.
It's a team,
all good.
It's a team. It's a team, yeah.
So Hill's like me, you know what I mean? Yeah, I get it. It's all right.
Nick, you got
Gad's like you.
We give them flack, but this is the world's
This is it. Believe it or not, this is all we got.
They're amazing. They're amazing.
Let me tell you something right now. Everybody's replaceable. Not these guys and gals.
Not those guys.
That's right. That's right. What do you got for us, Gad?
I got an MOU.
All right. MU. Ooh, a post-earnings trade.
Post-earnings trade.
Okay. Did you adjust these strikes? I didn't mean to interrupt.
Yeah, this morning, yeah.
Okay.
I did.
Okay.
So it's a little bit skew, put skew, I guess. So I'm doing the FAB.
Okay, you're doing FAB. Good. 64 days. Sahil was in Jan.
Yeah.
Which I kind of agree with in HUT. I don't want to be there too long either. But go ahead, MU. More
I'm doing a
stable
FAB.
product, but market's still wide. Go ahead. I'm sorry.
$50 out of mine.
Yeah, I'm doing like 10 wide on candle. A little bit skew the puts. 190, 200 for put side, 290 and 300 for call side.
Yeah, you're going to be about. I mean, you have to wait for pricing on here, right? I mean, and see what the credit is because these markets are a little bit wide in MU, and I'm going to expect with the stock up, $30-ish or so, that these markets are going to be extra wide on the opening. So if you're going to put on a defined risk iron condor like this, you're going to want to wait a couple of minutes, 5, 7, 10, until the markets kind of tighten up.
Yeah, that's true.
See what your real credit is here.
I was trying to give you a little bit of talking points after the market.
Yeah, no, I like it. I like it. He's going to have a lot of trades to take off in MU, which uses a lot more buying power than this. So this might be something that we'll look at doing. Yep.
Okay.
Very good. All right. Good. All right. Good job out of you, my friend. Good job out of you. Who is our next researcher? Yeah. Don't you just want to go and just beat something up? Hey, Kai, what's up, my man?
Go into one of those
mosh pits or something.
Like they have those rooms now you can rent out where you just smack.
Oh yeah, you put on goggles and you get a baseball bat and you hit a broken computer or something like that.
That concept came out like 20 years ago, right?
Yeah. I don't ever see myself
for angry
doing that.
people.
Yeah.
Doesn't seem beneficial to me.
Yeah, it's for like the
Like if you can't do it in real life outside with friends and family, like
you're a happy guy.
What's that?
Because you're a happy guy.
No, but we used to play hide the belt, which was good. We would hide a belt in the park somewhere, like 4 or 5 guys, and one guy would hide it. He would be out. The other 4 or 5 guys would try to find the belt, and if you found the belt, you got to whip the other guys with the belt until they ran to a tree or a pole that was safe space. It's a fun game. Hide the belt. That's how you get your aggressive.
Sounds traumatic.
What do you got for us, my friend? Marine Park, Brooklyn. If you know anybody there, we used to play it all the time, especially when they were building the tennis courts. Kai, what's up? Because they had all these mounds of dirt, which was easy. Hide the belt. Go ahead.
Not much.
Yep. How's it going? We say hot, cold, cold, hot, cold. It was great.
Yeah.
Go ahead, Kai. Sorry.
Go ahead. Okay. AMD.
AMD. Bullish.
Iron condors. Bullish. So I have wider wings on the put side, and also it's skewed on the delta is strong on the put side too.
So leaning slightly long into the.
Slightly long, yeah.
And your
January is what I'm
January,
looking
you're going
at
to avoid
right now.
earnings coming February 3rd?
Yeah. So this iron condor is relatively tight, only $20 between two short strikes.
Yeah.
So taking off the profit, as long as it's the underlying move as long as the delta becomes neutral.
Right.
Because this is already a kind of a more aggressive iron condor.
Sure, you're collecting almost half the width of the strikes. I mean, you could argue and say it's almost like
iron fly or something.
Iron fly, yeah, where the two same short strikes.
Yeah.
You got a $20 expected move. It is up about $4 this morning. We got a $20 expected move for all of January, and let's extrapolate out. Maybe you move this by a strike or something like that. You're basically outside or just at that $20 expected move, collecting almost $9 and change or so. So I don't hate it. I mean, that's probably the way I would look to trade AMD, with some sort of defined risk to it, with the shorter dated 29 days and the Ivy rank around 19.
Yeah.
It's been volatile for all the AI related stocks, so I don't want to hold too long right now.
This would not be the type of trade where I'd be looking for 50% or maybe even 25%.
IVR?
I might look to take 10, 20% on the whole thing of my credit that I receive. I want to manage it a lot quicker. That's the real takeaway from this trade. You're not looking to make $450 on this trade. You're looking to make, $100, $200. At least I would be.
25% is our target for iron fly. This one is 25-ish, 20-ish is fine.
Yeah.
We make it more aggressive, so your profit should be taken in much faster.
Beautiful.
I like it.
Good job out of you. Good job. Let's
and decently wide. 20 points wide is a good width.
Yeah.
$200.
You can.
Using $1,000 worth of buying power, collecting almost $1,000 worth of
$5 or $10 wide spread like this won't move quick enough for you.
No, that's the reason. I don't want to make $5 wide because this
you'll
moves
be staying that all the way into expiration.
Doesn't change.
You get your 50 or $100 out of this, you got to make it a little bit wider.
Yeah, the wider the better.
Yeah.
Yep, totally agree.
Good.
More like a synthetic strangle.
Yeah.
Beautiful. Who is our next and last researcher? What's up, you little black cat, you? And that's the name of the song.
Oh,
what's up?
That isn't. I couldn't tell that was the name of the song. I'm doing great. How are you guys?
Good. No complaints. I mean, we just saw the team. Now we've got the head honcho here. What do you got for us?
Oh, yeah.
Oracle.
Well, I don't know. There might be complaints. I don't know. Oracle,
it's like a bad word.
Oracle's kind of a bad word. It took a big dump yesterday, and it's up a whole bunch pre-market.
Yes, it did.
This trade's adjusted, but it might already be outdated. It's up an awful lot this morning. I think like last I checked, like 1.5%. But I think it's still moving. So it took a big dump yesterday because one of its big partners kind of pulled funding out of a data center project. Market freaked out, obviously. So after these kinds of moves, after these kind of like one-off, well, maybe one-off events, I don't know.
Yeah.
I tend to be neutral around this. I think, a lot of the times I see it sort of like bounce around in some kind of channel. So that's kind of what I wanted to do. I went 64 days. I went with the 160, 230 short strikes and then $10 wide, collects 304 in credit for just under $700 in buying power. The put side collects so much more than the call side. So even though I'm kind of neutral after these kinds of events, like I was debating even putting the call side on there, honestly. I think at that point it could be a choice, but that's what I got.
Beautiful.
Yeah, I like it.
I like it, and I'm pulling for you. Because I need it at the higher end of that range. And above it, 185. It's 182 right now. 185 would be better for me. 190 would be even greater.
Maybe we'll take a look. Some added
it's
push.
still going.
He gave you a maybe he'll be free this weekend. Otherwise, maybe not. But best you're going to get.
Man, yeah, you know what? I'll take it. Not going to sell
tough crowd.
It's good if you don't already have a position. I think you've been in this.
Yeah. Oracle's been a battle.
Well, this is a 64-day one. So this is out in the next cycle. So if you're currently in the previous cycle, then maybe rolling over.
Great Ivy rank
51.
post earnings too. It's been hanging in there, 51%. So
after earnings, this might be a roll potentially, depending on where you are kind of beforehand. But the Ivy rank is like high enough. I would for this, I definitely went to find risk because of how crazy this thing has been. But yeah, I don't know. That's what I'm thinking.
Cool.
All right, awesome. Let's take a quick 90-second break. We'll come back. We got the opening bell next. Back in 90 seconds. Tasty Live. Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with this market measure. Even the S&P is up 67. Volatility in by 50 cents in 2.5%. Yesterday wasn't in anything. It wasn't up anything with the move down.
Yeah.
Yeah, what you think about?
I'm just looking at some of my positions and trying to get back in.
Get back in what?
That was a junky little Starbucks call that I had. I think this goes back to October. I did the 90-95 call diagonal spread. I mean, the stock is at 90 right now. It's up $4.
In October, the stock was probably well, you could look on your paper, probably 80. Why don't you do that? So you had a leftover long call, is what you're telling me?
Yeah, this was a cheapy little call diagonal spread, and the stock was at. Sorry, I should have shown that.
That's okay. Putting on a little clinic with these holes that you have, with these holes.
I mean, this was just a junky. This isn't even nothing to write home about. But we had this diagonal spread. It was a $2. It was a cheapy diagonal spread. I think we did it into earnings. If you right click on here, the stock was at like
$86 is exactly what I was going to say. $86 was what I said.
But it went down to 76 when I bought back that short call, and now today on a $4 move, which is silly, and you got bailed out. But this option was nothing. It was $0 yesterday. You wake up and the stock's up $4. The question becomes, do you hold that? I think most people get greedy and they're like, oh, well, it's going to be up $4 tomorrow. You could, for 60 cents, you could hold that.
Yeah. I
look at that and I'm like, I want that off my portfolio page. No, it will be off there tomorrow.
Okie dokie. Let's do that. Are you ready?
You want to do let's do the market.
Yeah, let's go to market measure.
Cool. All right. Same delta, different damage. A 5-year look at calls versus puts.
Okie dokie. Let's do it.
Cool. So we did a study on the probability of an underlying continuing to go against you after you are tested on either side of a strangle. The results, although biased due to the bull market over the last 10 years, showed that calls get tested more often than the underlying, and the underlying tends to continue to rise higher even after you are tested. So this is kind of a follow-up to our confirm and send question this morning. Consider that calls are cheaper to begin with than puts. Why would we even sell calls?
Why would you even sell calls?
Yeah.
It's a great question.
If you knew that you were going to have 5 to 10 year bull market,
you would never sell them.
You probably wouldn't.
That's right.
But it's hard.
And you actually wouldn't look at the market either. You would just close it up and go on vacation.
Yes.
I mean, it's a simple thing, right?
Yes.
Yeah. It's an easy game.
Yes. I mean, we're sitting here trading on a 30-day time frame. That's why you do these strangles. That's why you do on iron condors. Is because right now, this moment, you don't know what the next 30 days are going to be like.
That's correct.
That's the whole point. When you look at these research pieces that go back to, it's all hindsight. Everything we're looking at here is hindsight. You got to keep that in mind.
Yep.
Next slide here.
Hard to be a hindsight trader, right?
Yes. So the study, we're looking at SPY. We're doing 2020 to 2025. So the last 5 years of craziness here. 45-day and managed at 21 days. Sold separately the 30 delta call and the 30 delta put, 45 days till expiration. So we're looking at just the puts and the calls themselves. So we computed the win rate, the average P&L, the worst loss, the average premium, you got standard deviation of P&L, you have return on capital, and coefficient of variation. We compared the results. Do you want to take a look-see? What do you think? Puts or calls? Puts or schmutz? Come on.
Puts are always schmutz. Obviously, puts are schmutz. I mean, come on. The long delta is it's all about delta here. It's really what it comes down to. It's all about delta. And then the market cooperating.
Yeah. Next slide here. So from 2020 onward, across a combined total of 2,900 and change here trades using a 45-day cycle. And so it's important to note that roughly 65% of the periods resulted in the market moving higher. So we're talking about the 45-day windows. 65% of them went higher. That's higher than normal. Or at least when you look at over a very long period of time.
Higher than average, higher than the mean.
53, 47 is your day-to-day kind of up-down metric. So you have to keep that in mind. Yesterday, the world was ending. Today, everything's amazing. That's how it is in reality, right?
That's trading, and that's trading. What you can't get caught up in.
But that's why you can't look at this stuff and be like, oh, well, it's so stupid to sell strangles or sell calls or whatever. Because in the now, in the short term, it doesn't feel that way.
It doesn't feel that way at all.
It doesn't feel like 65%. It's, or I guess it does feel like 65% of the days it's been up this year. But you don't know that. That's a feeling you have after it happens.
You definitely don't know it going into it. That is correct.
So the environment is inherent, or this environment, the environment we have had, I should say, not this, going forward into the future. But in hindsight, it's been unfavorable to sell the calls, obviously, over the last 5 years. And when we get to the next slide here, so looking at just the data around these two, again, these are separate. You're looking at these in a vacuum separately. So the key trade-off of selling calls versus puts, your outlier risk is obviously the biggest key here. With puts, it's this, the markets are typically staircase up.
Stairway to heaven?
Stairway to heaven.
Is that what you're going to say?
Stair step higher, elevator down. That's kind of how it happens, and you can see it here in the data. You have the average.
Although it's the opposite if you look at this over this time frame where we've gone basically straight up.
Yeah, but the outlier, the tail, like your April tail, is that number.
Mm-hmm.
Like that's the sort of thing, it skews. You have that one occurrence that's super, super big on the downside, but you could see, most of them, you're picking up, a couple $100.
That's correct.
And it's, free money until it isn't.
Free money until it isn't.
No paycheck. No paycheck trade.
No paycheck.
No paycheck trade.
No paycheck.
So you can see it here. But even with the calls, they didn't really hurt you when you look at this. Like you have a 54% win rate, which tells you that, you still kind of, you basically scratch the calls, but they help you when you need them. The short delta helps you when you need it. It doesn't hurt you into the grind higher. It hurts on the big moves up, and it hurts on when you look at day to day, one day. But having you have to be on both sides. You can't be just one-sided because then, you got your shark chiefs calling you when you get your one market down move.
It's feast or famine.
And you feast or famine. You got to have a little bit of both sides.
Good point.
Next slide here. So because the market has been strongly biased to the upside since 2020, which is our data set here, selling the 30 delta calls naturally produces negative performance on just that option.
But what if it allows you to hold on to the whole position longer? Like, you got to think a little bit, in the background here. What if it allows you to put on other positions that you look for long delta someplace else? Sometimes when we do these segments and these market measures, we're getting so granular into we're not thinking about its totality. What if we're rolling up the puts in an aggressive manner where you're when you get to you start out with 0 delta, and when you get to around 15 delta, you're rolling up those puts, taking in more premium. There's a lot of kind of trading involved in this that we don't put in here because it's so subjective. We don't want to curve fit it. So you got to take this with a little bit and just say, all right, this works this way. Go ahead. I'm sorry.
No, keep going.
I'm good. I'm
perfect.
I'm done for now.
So you're obviously, and when you're looking at shorter periods of time, they tell you more about what the market has been doing recently. It's not, and I think even extrapolating this out to longer duration stuff, I don't think I care much about what Strangles were, in 05.
That's right.
You're talking about different stocks. You're talking about different tech, different politics, different everything.
Different everything. Different
world.
market.
Different world, different market, yes. You know, in rising markets, you're obviously going to have risk on those short calls, but again, you have to keep in mind, I think that's a great point of maybe these calls and trading around them allows you to be more mechanical and be able to hold positions a little bit more and take some of the emotions out of it. Because it does, you know, you get a down move and you take off some short calls, it's a good feeling.
It's a wonderful feeling. There's no better
Even though
feeling.
the pain is still on the put side.
Of course.
It's a good feeling.
It's a great feeling.
If you're all puts and everything's just getting nuked, it's not a good feeling.
Not a good feeling.
Yeah, you got to be able to ring the register on both directions.
Yes, you do.
Next slide here. So this is just like a breakdown of what they're giving you. So selling a 30 delta call might give a positive P&L in a falling market, but because the premium income helps mitigate the loss on the short put. So this kind of goes to what we were talking about of like, sometimes it helps to have the short call there to take some profits on against the short put. A couple takeaways here. So although calls are cheaper and more susceptible to positive market drift over time, the worst case outlier is far less dangerous than the put side. So you have the, you know, your calls are losing more frequently, but the losses are lesser than what you see on the put side because you typically have that outlier risk on the put side. You know, in a bull market, selling the calls, you know, has basically broke even. So you really haven't been hurt by selling the calls, even though, you know, you look at them and you're like, why do I do this into these stair step hires? It hedges you.
You did it because it's the right thing to do.
Yeah, it's the right thing to do, and you don't know the future. Short puts, they've obviously been great. You know, the market has doubled or tripled. So, yeah, you make money there. That's it.
Very good. Let's take a quick look at this market. Even the S&Ps are up 50 handles. They're off of their highs by about 25 handles. NASDAQ up 290. We've gotten down to this level multiple times and then rallied back off of there. Volatility hasn't moved. 1840 down 34 cents. Russell up 22 and the Dow up 226. If we are like we've been the last couple of days, you should get a little two-sided action coming here now. Even the S&Ps expected move is around, let's take a look here. 1 day to go, the 19th would be $58. 0-day options would be around $33 expected move on the D's 18s. Volatility still hanging in the 0-day options. When we take a look at the bonds, they're up 15 ticks. When you're looking at oil, it's up 43 cents. Gold is down $13 and change, about $20 off of its lows. Silver finally selling off a little bit here, but it's still over $65, $65.40. It traded under.
Should have held that ratio. Damn.
You had every opportunity after to put it back on. I know you. I mean, you can't do that to yourself. You'll hurt yourself by doing it.
Yes.
You really will.
I just sold the HUT 8 put, not the 8 strike, the HUT 8, which is the company. Sold the 35 strike put.
In HUT, this was a shark trade here, right?
Yeah.
He wanted to do.
You wanted to do the covered call.
He wanted to do the covered call,
which I think you could. I mean, to be completely honest, the covered call probably does. I mean, it gives you the same break even.
You sold the 35 puts in Jan. Selling the puts gives you a higher probability of success than the covered call. Less risk. I don't know. I like the put. I agree with you.
Yeah.
I mean, if you're going to get.
But you're not playing into that call skew.
No, you're not playing into the call skew. If you're looking at playing into the call skew, it'd be some sort of ratio spread.
What about we do 100 shares and 2 calls, which is basically a straddle?
You could do that. You could definitely do that.
Let's do 100 shares.
So
2 of the 50s.
Okay, so you're gonna.
You want to do 2 of the 45s?
The 45s have a 50 delta. I would rather go out to the.
Yeah.
We have to. You just sold the puts. That's giving you long delta.
I'll close the puts.
Okay. All right. You'll close the puts, and you want to do. You're gonna have to do this. You can do a one by one.
Oh yeah, you got to do the 1 by 1 and then sell that
covered call.
Okay.
If you want to, and then you have to sell an extra extra call. So why don't you put an offer in for the call? And that would be the hardest one to get filled on, probably just the naked call, and then you can do the covered call after that. Does that make sense?
Yeah, so I'll be...
You'll be what?
Good little trade hack.
Oh.
I like that.
Okie dokie.
Oh.
So you're looking to buy stock, sell...
I'm going to try and... Okay, so I sold the call.
You sold the 50 call at around...
I did that at $3. So
$3, which is just about mid-price.
Yeah, this should trade at 39.25 to 30-ish, which is what it's marked at. So.
You're gonna use the same strike that you just did. You just did the 50s. Mid-price.
Did you push the puts through, or
I will.
You don't have to do the put because I'm gonna just.
I won't. Mid-price is 39.27. I don't think you get filled.
It's gonna be 30.
You need a downtick as a bullish strategy. You need a downtick in the market.
So you're selling like $6. I'm gonna try.
You did it at 39.35 debit on that.
All right, got it.
All right, so you have a
cool. So I'm long 100 shares, sold 2 calls against it, which is basically delta neutral. It's a straddle.
That is correct. Delta neutral, which would make it a straddle because you have risk to the upside on this covered call, right?
Yes, and downside. So I can show you this on the.
Okay, why don't you do that?
So you got 100 shares, and this is why I say it's basically a straddle, is because you're selling these 2 calls. The calls are not quite a 50 delta. If you're selling a put, selling a call right at the money, it's going to be this risk profile that's right at the money. And so here, this is like a skewed straddle, right? I mean, that's what it is.
That's a good way of putting it. Skewed straddle.
You got a little bit of delta to the upside, but you do have risk above, 60-ish here if something happens here. But it's I guess it's a downside defined risk straddle. That doesn't make sense. It's a straddle, okay? It's a straddle.
Synthetic is what you're looking for.
Synthetic straddle.
It's the word you're looking for is synthetic.
Thank you.
You're very welcome. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up next? Trade Desk. That's right. We'll be back in 90 seconds. He's going to show you something. We're actually going to, to the powers that be, he's going to come sit in my desk.
TV magic, is it?
TV magic.
TV magic.
And show you something that I think you're going to find very useful on the Tasty Trade platform. We'll be back in 90 seconds. You're not going to want to miss this. We'll be back in 90 seconds. It's Tasty Live.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
What is going on, everybody, and welcome back to Risk and Reward. Today is Thursday. We got another volatile day in the market. We had some CPI about an hour before the bell. So we got some things to catch up on, some things to talk about. We got a day left before the last full trading week of 2025. Hope everybody's doing well, Brother Gus. How are we feeling today, bro?
Feeling good. Yeah? Feeling good. Yeah, I saw some people in chat saying we were taking a stream off to do the Secret Santa gift exchange. I wish it was that exciting, just meetings, but yeah, feeling good. And the Secret Santa thing brings to mind the fact that it occurred to me this morning that every Secret Santa and white elephants to an extent, but mainly a Secret Santa situation where you're assigned somebody and they don't know that it's you. It's basically a prisoner's dilemma. In an economic game theory context, it's sort of a prisoner's dilemma because you either. And I guess it's more of a prisoner's dilemma if you are gifting to the same person that is gifting to you.
Right.
And so then it's this whole game theory of, if you go too expensive, you're gonna outshine them like crazy. You're gonna make them feel bad. But if you're not expensive enough, then then they give you something way better. You're gonna feel bad.
This is exactly why I've always been a fan of white elephant.
Yes, white elephant is good.
It's one of the reasons why I prefer the white elephant because that game theory dilemma. I don't know. It's a tough one to deal with every time because you're right.
Best white elephant gift you can get. I will float this for everybody. Go to your bank and have them give you like $15 or $20 in pennies in a box.
Okay.
And then wrap that up, and thank you. And the entire white elephant, everybody will want this heavy box that feels expensive, and at the end, it's full of pennies. That's
great. You know what I like to do? I just get a sock, put some butter in it. No, we've got some volatile actions of the day. Less than a week till Christmas too, so we'll see if the Santa Claus rally is going to continue. We got a pop to the upside from CPI. We pulled back a little bit, chopped around a little bit, made new highs, and then we pulled back right before we hopped on. So maybe the Santa Claus rally is not too far-fetched. I don't know. We'll see if we hold up, but we can jump straight into the tastytrade platform, and then we'll go over to the TradingView platform and see what we got going on over there.
Yeah, I'm looking to see how many trading days we have left in the year. Are we into official Santa Claus time yet? Because I think it's the last 7 and the first 2.
You think we got to be,
including today, there's 2, 3.5, 4.5, 7.5. Yeah, so excluding the Christmas Eve half day, this would be the 7th to last trading day of the year.
It's the 7th to last?
Yes.
Wow.
I suppose formal Santa Claus rally time technically starts tomorrow.
There we go. Let's see what we get, but the overall market's kind of flat on the day. In terms of VIX is going to be also a little bit flat on the day too. We were getting a pop in VIX the other day. I thought maybe it was almost go time, but no, we're going to have to be a little bit more patient on that end. As we're heading into the end of the year, I really cleaned up my portfolio. I know there's a lot going on. Don't get overwhelmed, anybody. Don't get too overwhelmed, right? No futures positions, no crypto positions, but we did bombard the follow trader page today, so we can catch up on all those micro.
Can we jump over to my platform for a second for the contrast and the appearance of?
Yeah, absolutely.
Yeah, here we go. this is my set of positions.
Yeah.
At the moment.
Yeah.
I think it's a funny contrast. But I posted 0 trades in the follow feed today. So, you know.
No, I was.
It's not always about what you got open.
I was sitting there clicking for about an hour, and I was like, man, I haven't uploaded the trades about a week. Sorry, guys. Sorry about that. We'll get them up. But no, with that being said, since we're on your platform too, anything standing out for you on the day? Any individual underlings?
Rivian finally taking a little run again here, and then Starbucks finally catching a bit on Starbucks. I think that they made big strides with the strike today is what's causing this move, but they had a huge strike.
Where is that at? Do you know?
What? Where is the strike?
Strike.
It's like they have.
It's a nationwide.
There's a Starbucks like baristas.
I was wondering if it was going to be the one in Seattle, Washington. That was the first time I got to see the Starbucks headquarters.
Yeah.
Back, so.
No, but it's been a whole thing, and they've been going back and forth with the union on what they were going to do. But I think that they're making some strides on that today, so things are going swimmingly there. And this is actually an upside 2x1. So I have the second short put down here. It's not a standard vertical, so. You know, there's different schools of thought here. I choose to look at this as, you know, it is defined risk, just, you know, way more risk and, you know, a more potential upside as well. The other way to look at it is that it's a standard short put vertical, and then additionally, I just have another short put floating out here in the ether and you could look at it as a defined risk position and an undefined risk position. But love the 2x1s. I'll do 3x2s sometimes as well. The Starbucks actually was a 3x2, but amid the sell-off last month, I cut this down to a 2x1. So
what's Starbucks been up to with the strike today? What's Starbucks been up to with the strike today? What are they looking like?
I'm not exactly sure what kind of progress that they've made. I've just been seeing
more
headlines.
so just from a visual point on stock. Yeah.
Big jump
gap. So that's bullish.
Yes, and and they've been channeling here forever. And I have this position is a 75.80, and they've just been smack in that range. These lows are 77, 78, and then these highs here are 87. So we've stayed mostly above my range, but have been seriously channeling. So this is a very welcome breakout on my end. Additionally, finally got long some core weave that was hurting me yesterday, but things are starting to turn over there today. Everything's just going green today. And then Meta showing me some love. Look at this behemoth. Look at this irresponsible Meta exposure.
I need the visuals. I need the visuals on Meta. What they've been up to.
Well, okay. Here's the chart for starters. This whole thing began amid this dip. I couldn't tell you exactly where on this dip. I originally entered Meta, but I was like, oh, you know, this is looking like a good buy spot. I think it might have been off this gap. So we started to run up, and I thought I was a genius, and then this happened, and so then I bought like here, and then I bought again like here, and then I did catch the very bottom with the last contract, and since things have started to reverse.
There we go.
And again, it seems like irresponsible exposure, and I mean it is to an extent, but at the same time, these are all defined risk positions. None of this is insane. I don't have any. There's no 2x1s in here. These are all just in their respective pairs. So while it's a lot of capital to post up, the risk is not that insane.
Yeah. Big Deal said, did ServiceNow have a split or something? Are you familiar with the underlying?
I'm not.
Big Deal. What's the underlying for that? We'll throw it in here if you throw it out there. We'll throw it in here if you throw it out there.
Other thing I need to move is crypto. That's my other bit of irresponsible exposure. This is the current situation for me on iBits. And it just keeps juking me out.
Yeah, no, I mean, it's been volatile, right? I think, crypto, it's been having some pretty big ranges. Like, we'll move to the upside, a very large, sizable move, and then in the same way, we'll have a sizable move to the downside. And it's like, man, we're not really going anywhere. But, I mean, it hasn't gone too far. So, I mean, you still got a lot of time on the contracts, too.
Yeah, Bitcoin may be a better example. But, yeah, I've had some iBit forever. I bought, somewhere up in here, I bought some leaps just as a bullish case for Bitcoin. And then, it was sliding, and I bought it, when it broke 100, I rebought, and then when it broke 95, I rebought, and then this is another one that I do have some contracts down here at 86 or 87 spot. But yeah, really need Bitcoin to move. But on both of these, Meta especially, but both of these, good time horizons.
Yeah.
So we'll see.
I got you. No, I was taking a look at Bitcoin again. It looked like Bitcoin was trading at 90,000, almost, not today, but almost earlier today. You touched on the big pop and drop that we had seen on Bitcoin, and it's just same kind of price action that we're seeing today. We're ripping in like a 5,000 to 10,000 range. That's a pretty big range. But anyways, right back to the downside. So, see what we get there.
Now is the ticker on ServiceNow?
Now.
This doesn't look splitty from this side, but I'm not exactly sure. $ now. That's funny. I was actually, my first thought was that it's S now, but then I realized that is Snow, which is very much a different company.
Flower Power would love to see Pete Molmat back on the show. Maybe we can convince him. We passed by him not too long ago, just a second.
We were just sitting in a room.
Yeah, we're just sitting next to him. So maybe he'll hop on. I know. Funny you bring him up because the other day I was looking up something in the library and a video with Pete and Frank popped up, and they started diving into the weeds of all the good education they usually get into. But it's funny you bring it up because it felt like a fever dream for a moment.
Oh.
Now split 5-1, 12-18.
Thanks, Jackie. Appreciate it. Yeah, there you go. 5-1 split.
There we go.
Were they a $700 stock yesterday, or have we just not priced in the split yet on the platform? Sometimes it takes a day. Not sure. Interesting.
Yeah. See what we get over there.
Yeah. Oh, yeah. And then this is the other one I want to talk about. Accenture, which is hurting me. And it's recovered a little bit today, but this is like the best position in my account right now.
Okay.
I bought exact same expiration off this big dip. Yeah, something like here. This would have been a summer trade.
It was quiet. It's catching a little bit more.
Yeah, and so I went.
Now.
I have a 230, 240, and then also a 260, 270 with the same expiration, which is usually not wise to do. But I was feeling particularly convicted about this, and it pretty promptly just went to the levels that I needed. And I thought we were going to keep climbing higher, but big gap down this morning that it's pretty much already filled. So this is an interesting spot with Accenture. Still 92 days left on these, but I do need it over 270, and that gap down to 263 this morning had me sweating bullets a little bit.
Just a couple bullets, just a couple of them.
Yeah.
3 months, 90 days, 92 days. That's nice. That's nice.
Yeah, but that's pretty much all the excitement I got going on.
Yeah.
Have some MicroStrategy as well on air the other day. Yeah.
No, that's awesome. I mean, we can jump over to the TradingView platform, look at some of the metals, maybe some crypto, just what's been going on the NASDAQ as well. There were some opportunities today on NASDAQ. And to be completely transparent, I was facilitating some other things at the same time. But we did take these, just not over here on this, but we will point it out because if you are trading some of these levels of value on NASDAQ, I think you'll be able to spot some of these opportunities for yourself. And I think it'll be pretty cool whenever we come back here on stream and talk about some of those moves. So with that being said, I know we got a little bit of a sell-off out of the gate, or after CPI, we got a little bit of a sell-off in the morning, which really validated our value area low. And this is the main area of opportunity for the day. As you can see too, like these trades for today were a little bit, I don't want to say easier, but it gave you some type of opportunity. And I personally would say it was a little bit easier than some of the price action that we saw earlier in the week. But I mean, with that being said, the market remains resilient because one thing down here is like, yeah, it's kind of nice that the market is getting some type of response at our value area low. So, I mean, if you're looking to trade that range, you're able to take those good opportunities. But what's kind of difficult is the market is now kind of disrespecting this value area high. So this area is going to be very tough to have any type of confidence to buy off of this type of level, right? I mean, now we've kind of held the value area low once again, so it is more so looking like price is accepting value higher and higher. But at the same time, in my opinion, whenever things get a little fussy or a little ugly on the charts and things start to disrespect or not acknowledge certain levels like they were, I like to step away until I can gain a little bit more clarity. Or you can just size down on your position or on your position as well. But that's kind of what's been going on in the market in terms of these levels of value. A couple opportunities, but sometimes too, you can see if you're not sitting there ready and prepared, you can miss it in a 5-minute window sometimes.
Yeah, you can see we got a WMW pattern forming here, which is usually a bullish indicator, but it is bearish on Wednesdays. So be careful. You got to be careful when this gets validated.
No, actually today is like 40-something degrees. So actually we're a little bit more bullish. Exactly.
I forgot the temperature index is up today, so that really changes the dynamic of things, and it's raining outside.
Exactly.
Ooh, okay.
You see what I'm saying?
I know cup and handles are more valid when it rains.
Is that?
I think,
you got to check those stats.
Well, because the point is that you're catching the water in the cup.
That is true.
And you need the handle to hold the cup. What are you going to do? Burn your hand on this cup?
So one thing that I've been using a lot more recently is those. I forget exactly what it's called. My dad bought it for me back in the day when I was in college, but I just busted it out for the first time. But it's those things you can heat up water in. I'm going to sound so dumb. It's the thing you can heat up water and you can pour it, right?
Like a teapot?
It's not a teapot. I mean, a teapot you put on the stove, but something that you can plug in. It's like the electric one where you just have warm water. You put the thing. I forget what it's called, but anyways, so much better than putting your mugs in the microwave. So highly recommend. You don't got to take out your hot mug from the microwave, and then also sometimes throwing those mugs, those holiday mugs in the microwave can kind of crack that ceramic a little bit. So this is not a sponsored post, but it's about the little things in life. Right? I'm telling you, that really made my day. It's about the little things.
That's awesome. Yeah, that's funny. I've never had a need for any sort of hot water appliance.
Yeah. It's nice. Instead of putting your mug or your bowl and taking it out all hot and can barely hold it, it's just like, you got the hot thing ready right here and just pour your hot water in.
Yeah, that's sweet.
You don't got to worry about cooling your mug off.
Yeah, some people around here have the mugs that heat, like at the bottom, like they're the electric.
Oh, absolutely, just
like I know
flexing.
Julia has one.
absolutely flexing on me so hard. I need one immediately.
Yeah, there's one plugged in. There's one like
them.
plugged in on the little counter out there. I see it every time I walk by. I'm like,
might not be over there. It might not be over there when you walk by next time. No,
electric kettle says.
Thank you. That's exactly what it was. An electric kettle. That's fire. Yeah.
Spill the tea on that.
There we
go. Knowledge. That's a bar.
Spill tea on that cup and handle knowledge. Big deal. Come on now. That's good. Electric kettle, exactly. That's exactly what it was.
What's going on, E-Media? Looks like eyes, and we need a smiley mouth below. Okay, I'm seeing the smiley face pattern.
Exactly. No, I mean, other than today, I mean, going into tomorrow. So one thing that I've noticed, so I remember I think 2022, I had a really good year in 2022 on my personal account. I remember in December, I gave back a lot of my profits in December. So like after the years after that, I've been
PTSD.
Yeah, I've been so cognizant, and I had a stellar year, 2022. Trading for 12 months, intraday trading, shorting a lot of small cap stocks. Actually, it was like kind of like the wild west a little bit. And I remember I wanted to surpass a certain benchmark coming into the last month, and I gave back maybe like 25 to 30% of my year's gains in like 1 week. And I was hurt, bro. I was hurt. So from that point on, I'm like, whenever it comes around to December, we're not gonna put. It's not pedal to the metal come December. It's not. Let's see what we can crank before the year ends to prop these numbers a little bit more. So we're gonna take it cool. If the market gives us an opportunity, it gives it to us. But if it doesn't, it doesn't. So
just do what all great companies do and say that your fiscal year spans from the previous December to that November, and you're good.
Write that down. No. Let's check out some of the metals, though. I know silver made another high, if I'm not mistaken, an absolute beast.
Yeah, Donna, if you're here,
an absolute beast.
Congratulations.
Donna's not here. Donna's out. No, let's zoom out a little bit, see what.
You don't know that. Donna, if you're here,
wait, was
make your presence known so I can prove Errol wrong. What?
Wait, no, was Donna long or short?
She was long. Yeah, she was long.
And we made new highs.
Yeah.
Donna, if you took profit, what I'm saying is if she took profit, she's not here. She's chilling wherever she wants to chill right now. That's
no, I think she was saying yesterday that she hadn't taken profits yet. That she was seeing higher highs here.
Oh,
I'm not sure. I'm not sure. But Donna, we would love updates on your silver position if you have them.
Donna's balling. She already forgot us. She turned Hollywood on us.
Donna switched up on the day ones. Donna got that bag and switched up on the day ones.
Silver making new highs again here, like Gus was referencing. Will this calm down? I have no clue, but this is one of those markets where it's going to be, a little dangerous to kind of hop on and try to pick off the top of this one. So maybe taking advantage of those pullbacks getting long, but at that time, it's like the risk to reward might feel off trying to get long and take advantage of the long opportunities at those highs. So it could be tough. It's a tough trade.
All right, how about this?
What's that?
Gun to your head and assume they both cost the same amount of premium.
I'm buying it.
You have to short.
Okay.
You have to short either silver or Palantir.
Hold on.
Which one is it?
Wait. Forever?
Let's say 6 months.
Oh, that's still tough. Palantir. I'm going Palantir. I'm shorting Palantir. I think silver can get a little out of hand. Silver seems like it can be a little bit more irrational longer than PLTR. That's what it's giving me right now. So
I think that I'm inclined to agree, especially given that Palantir has been on the bull run for so long.
Right.
And silver's
going to be here for a lot longer, I think, than Palantir anyways, just generally speaking.
Yeah. So let's just go to $100 an ounce.
Let's just do it.
What are we waiting for?
Might as well. And I mean, with that being said, it's only right that we check out gold.
Talk about natural gas futures, guys. They've been going crazy. We'll do that. Fib zone, I do not keep up with natural gas one bit, but I will happily take a look at the chart.
6 months is like 3 eternities. 4 eternities, maybe 5. I mean, just sitting here thinking about that was stressing a little bit.
That's easy, short and Palantir. Yeah, I agree. I agree with BDH, and I agree with you. Palantir would be my choice as well. I'm kind of a Palantir bear in general, really, which obviously I actually have never traded on this conviction, but I've said this on air before. I think that Palantir will catch a massive correction sometime when
do you like the CEO of Palantir?
I can't. No is the short answer.
Hey guys, why do you take so long to answer that?
It's just I hesitated and still said
I know.
Yeah, Yeah, I can't get there on Alex Carr, but it's
maybe we get him on the stream.
Well, I should say, I mean, there's two schools of thought here. Do I think that he could potentially lead this business to great success? I do. But like, as a person, do I love him? I wouldn't say so. I think he's a liability. Is like my main concern.
That's funny.
They're doing damage control with the headstand incident that when he was on cocaine at that show right now. So yeah, now have you seen that?
No, I didn't.
Did you see the clip when he was like coked out at that show?
No. What were the mannerisms?
It was like a whole thing. Like it's like the most comical thing. I'll make you watch it after production if you guys know the video I'm talking about and want to pull it up. But he was at this he was like an interview style like panel thing in front of an audience, and he was like just so clearly coked out and like tweaking the whole time. And then in the middle of it, he like did some acrobatics on his chair. It was like a whole thing. He was like freaking out. So anyway, now to do some damage control and try to paper over that, Palantir said they're starting a program for people who are, they posted that video and of him doing the headstand, and they were like, if you ever find yourself relating to Alex in this video, we have a neurodivergent program now, and you should enroll. And it's like,
wait, what did you just say?
They said they have a program for people who are neurodivergent, which is like great that they're doing that in a vacuum, but we are not going to sit here and blame neurodivergence for that cocaine-fueled incident at that panel. I refuse. I refuse to believe it.
That's actually really interesting, though, that they're making...
It's because they're trying to do damage control. They're trying to say he wasn't on drugs, he's neurodivergent, and that's why.
That's crazy.
That's
Just
why
pull the neurodivergent people into this?
Exactly. Yeah, and that's what I say. That's what I'm saying. I think this is a net negative for neurodivergent people if we're going to push that this is the perception. If somebody's neurodivergent, this is what they do. That's not a good thing at all. Yeah. So yeah, that's how they're trying to paper over that.
That's crazy.
But yeah, that incident was kind of the final. Before that, I was always just like, he's just this esoteric, like slightly crazy guy. But that's kind of what you want in a CEO. Yeah. But when that happened, I was like, okay, this guy might be a liability. That kind of shifted my tone.
6 months should have said 45-day duration. Tasty methodology, boys. That's a tough one. I mean, silver and PLTR over the next 45 days, that's going to be a tough one. Going to be a tough one for me, at least.
Leave me out of it, says Big Deal. I'm not shortening. That wasn't the question.
Big Deal got his hands up.
Big Deal said, gun to my head, pull the trigger.
Lastly, we'll check out some Ethereum before we head off. And I mean, we were looking at gold here briefly. Gold barely swept the all-time high today, actually. Didn't recognize that gold was taking the highs. Up here at about 4,398 an ounce. So just above 4,400 on gold we're topping out of today, as we were on the show, I believe.
Yeah, I'm in the midst of scripting a TikTok right now for the PNC Bank does this thing they call the CPI, but it's the Christmas price index.
Okay.
And so what they do is each year the basket of goods that they track is all of the stuff in the 12 Days of Christmas song.
Okay.
And so obviously 5 golden rings is in that bunch, but I was just discovering in my research that the 5 golden rings are what have appreciated the most from last year of all the things.
Yeah.
Yes, amid the lords a leaping and maids a milking and drummers drumming and everything, the ladies dancing, they've gone up a little bit since last year too, and ladies dancing is something different now. But gold is mooning. Gold is mooning.
Gold is mooning.
If you were planning to buy your significant other the 12 Days of Christmas, maybe push it to next year, or maybe get long gold against your purchases. I don't know.
Cameron Vincent is still bullish on PLTR. He says. I think that's PLTR CEO's burner account actually.
I mean, I think that might be a reasonable opinion too. Like I say this all the time. I just think Palantir's valuation is so crazy bloated that I can't get behind them right now. But that said, I think that they absolutely could be an Apple caliber company someday. But it's just having a whatever their valuation is now, 400 billion, 500 billion, whatever we're talking about, 300 billion.
Yeah.
They did 4 billion in revenue last year. In revenue, not profit, revenue. So we're talking about 100x. It's
one of the reasons why I am
crazy. Maybe it's 40 billion. Maybe I'm speaking too parabolically here. Sorry.
No, all good. Maybe another reason why I'm bullish on PLTR is because of the fact that the government has their hand in there a little bit. If the government has their hand in something a little bit, the government has the upper hand in anything, in business, anything. So if the government has, not that it's right, but I'm going to err on their side a little bit more. But to the point you made, these valuations seem crazy right now.
Yes.
I think PLTR might have been the second underlying that I've ever traded with the options.
Yeah, and to Mikos' point here, every item in the 12 Days of Christmas actually is a different type of bird. The golden rings are referring to like something with a gold ring on their neck.
Oh, they're 12 different types of birds?
They're all birds, I believe. And the drummers are a type of bird. Yeah, it's all birds.
Childhood's been a lie. Childhood's been a lie. Childhood's been a lie. Now, anything else top of mind before we wrap for the day?
Palantir's market cap is $450 billion.
Yeah.
that's what's on my mind.
With that being said, everybody, thanks for taking the time to hang out with us as always. We'll see how the market wraps up closing into Friday. Be sure to stay managing our positions and stay tuned for more segments coming on next. And we'll catch you guys next time. Peace.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tengo tanta paciencia. Contigo quiero una indecencia. Por eso te quiero desacatar. Dale pa' acá, dale pa' acá.
We're back. It's still Thursday, December 18th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio in New York. He's Ilya Spivak in San Francisco. Ilya, thanks for coming on today.
Of course. A chance to speak into a camera after U.S. economic data? Yes, please.
Oh, I know. This is exactly what would delight you on this Thursday. Thomas has been drawn into other projects, so maybe you're going to be a more frequent guest on these Thursdays moving forward for the foreseeable future. But until then, Ilya, there is a lot to talk about because we do have now a week of important data, at least as the macro people would tell you, behind us in the rearview mirror. We would see that the sum of all data doesn't necessarily translate into any significant shifts for Fed cut odds for the month of January, considering where we started the week to where we have arrived after NFP on Tuesday and CPI here today. The market's had a heck of a session so far, rallying up to effectively clearing out most of the recent losses, even from Friday last week, to finding an elevator lower around 10:45 a.m. Central Time. We have since recovered some, but we're not out of the woods just yet. Certainly gold tried to break out, and that has since reversed, Ilya. Overall, the market, as we turn our attention to those CME FedWatch odds, I would point out that we're sitting still at a very paltry 24.36% for the month of January. And that, without context, of course, does not matter. So where have we been in recent days? Well, yesterday, Ilya, we were sitting at 24.4%. Oh, that's exactly.
Oh, and the day before, 24.4%.
And a week ago, 24.4%. And a month ago, 20%. So net, after everything we've seen, from not having U.S. economic data to getting some of it in bits and bursts. And there's a short video up on YouTube that I encourage people to watch, or you can hear it here now. The CPI report today missing at 2.7% versus 3% expected is good-ish, except for the fact that because of the discontinuity with the October data series, a lot of the numbers that we look at have not been updated, and you're missing a big chunk of figures that would help you determine whether or not we're seeing a legitimate decline in inflation for the right reasons. So can the Fed put together anything here? Powell last week was looking upon this week's data releases with a discerning eye, casting doubt about some of their credibility, noting that there'd be wider error bands. And the market here is taking that in stride. The market's telling us, we shouldn't be over our skis about NFP or CPI. They give us nothing determinative that will help the Fed make its next rate decision.
I think that pretty much sums up what we're looking at here. And sort of for me, the next question is, okay, so last week we had the Fed. Powell came out and said, okay, here's your cut. It was a narrow call, but there you go. As far as going forward from here, you all want at least 2 cuts. That's what's in interest rate futures, but we're only going to write down 1 cut on our summary of economic projections. So we'll go ahead and disappoint you there. And then as far as the guidance going forward, just so you know, we're not in a hurry at this point. We feel like we've gotten to where we need to be. We're going to let this thing sit at neutral because our objectives are in tension and we don't quite know how to calibrate it exactly. But we felt we needed to do some cuts because it looked like the labor market was getting a little bit iffy. And we don't think inflation is going to be a lasting thing after the tariffs rebase out of the numbers somewhere in the first quarter going into April, which is when all the tariffs hit, because we see the main source of inflation, the part that we've had so much issue with, the service sector, we're seeing that come down. And so we're encouraged. We think we can turn our attention to the labor market, but nobody's going anywhere fast. Be cool. We're going to wait here for a while. Not the thing that you want to hear if you're the markets that want 50 basis points at least. And the Fed is saying you'll get 25 at some point next year and in no kind of hurry. So we see last week, right. And so we see last week, markets go, oh, can I spin this to not be something I'm disappointed with? No. For 41 hours, they mull this thing over. And of course, on Friday, we get a very disappointed sell-off. Where does that leave us here? Well, nothing has changed. And this is, in my mind, why the stock market is having such a hard time. After NFP, again, it thought about it for a second, said, okay, these jobs numbers are worse. The pacing in the Fed's own kind of framework is worse than they thought. Maybe this means more rate cuts. Yes, no, not enough. And yesterday, we get a violent sell-off. Today, CPI, as you said, cooler than expected, supportive of what the Fed is saying, but not really moving the needle anywhere. And so the result, no conviction, no breakout, kind of soggy, more corrective relative to yesterday.
The implied rate month over month relative to where we were in September, Ilya, in the CPI figures would imply a 0.2% month over month run rate in inflation, which if we are running at a 0.2% month over month, you're talking about just over 2% year over year. That's not, it's not great, but it's better than where we are.
Yeah.
Right. You take 1.02 to the 12th as a simple arithmetic, you're going to get 2.68%. So you want to keep going down, and we got 2.7% today. So all that's kind of wholly consistent. So inflation is trending in the right direction, but why? We don't know.
Well, and the makeup of the numbers is not the worst either. I mean, we got disinflation at the core. Most of it came from services. Even goods came down a little bit.
Housing is really, I think housing is going to be the big disinflationary force moving forward. I mean, that is one of the reasons
it's been trending aggressively lower basically since 2023, and we're hitting levels we hadn't seen in a while.
Yes. So where does this leave us then? A market that was getting a little excited, perhaps, that we had some data that suggested the Fed could proceed moving forward, right? If you thought that the Fed has, had to wait a little bit because inflation was going to be at 3%, to give you another 25 basis points. Well, inflation is now 30 basis points lower than what you presume. So, hey, in fact, policy is a little bit tighter on balance. And so the Fed has already the room to cut rates again in January. That's a very generous way of looking at that. The market, of course, decided for some reason today to dump off the data, 11:45 a.m. Eastern, 10:45 Central. Since then, as we get through the European market close, maybe that's what it is, Ilya, stocks have rebounded. That's a very long lower wick here. 4-hour candles giving us a 68.1175 low, but we still have not crossed the Rubicon yet here for bulls to really feel a little bit more. Of course, has been both resistance and support in this market. It feels like forevermore, going back, well, a full month now to November 17th, both on the up and the down. We've got to do a little bit more punching here, but this is basically no man's land right now for both the bulls and the bears. You can make a credible case, I'd say, on wanting to be both long and short, but it's not the best setup in either territory. Although IVR, that is coming in over the course of the session. That should be noted, and one of the hallmarks of a market that's probably not too spooked.
At least not more spooked than it was yesterday. But if we look at the structure here, I mean, when was the last major top in this market? It was October the 29th. That was the last Fed meeting. When's the most recent local top in this market?
Is it the most recent Fed meeting?
It's the most recent Fed meeting. So, the day after. So, I mean, there's not really a very complicated thing to see here. The market wants cuts, and the Fed doesn't want to give them the cuts, and the markets really aren't very happy with the persistence of this disparity. And they're not, every time they're reminded about it, they go, oh man, this thing. We don't like this thing.
No.
It seems to sort of portend, on the one hand, are they afraid of something? Are they concerned about what happens next year? Is there some sort of thing they're expecting to come home to roost next year? And when you see them respond the way they have, some of the recent, not bad news from AI, just hiccups, and not even major hiccups, but certainly not the kind of hiccups that go, oh well, that's it. Forget everything we've talked about. This LLMs, going the way of Betamax. Obviously not. Obviously, what we're seeing are kind of reshufflings in the space, but there's no reason why there needs to be exuberant concern. And in fact, if we'd gone back a few months, there wouldn't have been exuberant concern. But now that we're getting a little bit more clear on what the Fed is or isn't going to do, because they're saying very firmly, hold on now, we don't know. We're driving in the fog. The market is starting to get a little bit sensitive to things that it wouldn't have been sensitive to before, which seems to suggest not so much that the absence of the kind of rate cuts that the markets want is a problem in and of itself. It is a weakening of the immune system. And so any which shock now, maybe going into next year, that the markets perceive, and certainly there's a big assortment, actually has the ability to punch through the market's armor.
You know, if we're turning a corner here, Ilya, I'd point out that core CPI is at its lowest level since March 2021 at 2.6%. I'd show that the market is probably, given the clustering of where the forecasts were for where inflation would go, this was a 5 standard deviation move to the downside relative to the expectation forecast.
Yeah.
You look at the 3-month annualized CPI, it's sitting at 2.06% right now. These are all things that if you're a Fed member and you have concerns about the labor market, you get another round of data like this, you're probably going to feel a little bit more comfortable with pulling the market's expectation forward. Maybe not for a January cut, but there is a meeting in March 18th.
Yeah.
That seems plausible. That's currently sitting
Give them
at
a new
65.
SCP. You see some data?
Right, that's 65.6%. So Powell would be giving us another cut. That's the favorite position right now. I mean, but you'd have to get really like CPI data and NFP in agreement that there's slowdown but not recession imminent for the Fed to move again in January. And I don't think the market would want a January cut because it reeks of cuts for wrong reasons if it's accelerating there. But a March one, that could be a happy spot if we can convince ourselves that things are proceeding better than anticipated, which by all accounts, if the data is accurate, then 2.7% CPI is nothing to be ashamed of.
Well, that's actually a great point on the data being accurate. So when you look at how realized CPI, both month on month and year on year, but especially year on year, that's the important one, and both headline and core, when you look at how closely they follow the Cleveland Fed's model, you can see that model is very close. Very, very rarely do you get meaningful deviation from the model. In fact, not in recent years at all. These reports that we saw today, in particular on core, went way off in a way that we haven't seen in recent memory. I mean, I'm just eyeballing the data here. I don't think we've seen a gap like this. The forecast was for core at 2.95 and we got core at 2.62. So we're talking about a 30 basis point gap, give or take. I'm not sure that we've seen anything remotely like this really for the past maybe 10 years. I would need to look more granularly at the data, but just eyeballing it. So can we trust these numbers? Unclear. So, and surely the Fed is thinking the same thing. So when you look at the January move, the markets, I think, their expectations aren't high unless there's an emergency. And it doesn't look like there's an emergency. So
no,
if there's not one, then January kind of goes by the wayside. And I think everybody kind of concurs that that's the thing that's most likely. I mean, the markets seem perfectly comfortable with that idea here. March is really the question. And in March, you're just over the even odds line. You're at, what, about 55%, give or take?
I see 65, yeah.
Yeah, so you're looking at just a little bit better than even odds. And that's when you get a new SEP. So that's the bogey. In the meantime, because obviously there's a ton of time between now and March. In the meantime, there's all kinds of things that might occur in the economic data because ostensibly we're going to start to get real-time numbers now. Although, and you're our resident U.S. politics expert, as I recall it, this shutdown deal expires in January, yes?
Yes, there could be another government shutdown in a few weeks.
So in other words, we got a bunch of apparently suspect data, and in a few weeks we could shut back down so that we don't get data again for some amount of time. Could be. I'm not saying it's likely. I have no idea. But when I look at this and I go, okay, January is obviously a no. If March is going to be a no, that's going to be disappointing.
Because that becomes a breeding ground for the sentiment that the Fed is running late.
Yes. And if contemporary data from third parties, PMIs, ISM numbers, if that kind of stuff starts to tilt, then you're going to get into a really hairy situation. I think we're still in a very headline sensitive kind of a space here where every little tidbit of economic data that feels semi-credible is going to be poured over now because everybody's trying to figure out where in the world all of this is going to go. And nobody has a very good idea.
Yeah, the stopgap spending measure that ended the prior government shutdown funded the government through January 30th.
There we go.
So 42 days. And I think that's one of the reasons why you're seeing some of these members of Congress in swing districts that are on the Republican side of the aisle. Yesterday, 4 of them signed on for this discharge petition to bring a vote to the floor on ACA subsidy extensions, because if you get to January 30th and nothing has been passed, you can imagine that Democrats are going to shut down the government again.
Mm-hmm. Yeah.
So for those 4 Republicans who are in places like New York and California, what does that make them look like in their reelection year? Probably not great.
Probably not great.
So that's why you're seeing this move now. You want the single thing to me, a government shutdown does not occur if an ACA extension is voted on and passed by both the House and the Senate and Trump signs off on it. But if there's no movement on any healthcare plan before January 30th, then the shutdown's going to happen. Is that a winning strategy? Who knows? But this is where we are. That's my view. That's how I'm interpreting the recent data and the votes that we're seeing, which is fun. If you ever want to really, you're having too much fun in your life, Ilya, put on C-SPAN.
No, it's good stuff.
NASDAQ here remains in its downtrend that's been in place since more or less, we'll call it the 8th of December. It's been a pretty clean channel. Both ES and NQ have had pretty clean down channels in recent weeks. You had asked the question, what can we use to measure inflation, perhaps, if the data is not accurate? Trueflation puts out an update daily. It's at 2.52%. So pretty close to where the official figures are right now.
Yeah.
You can see it's been trending higher in recent months, but over the past 2 months, it's been more or less moving sideways to flat. So perhaps that's a sign that whatever crest we had gives, again, the Fed more clearance to start thinking about cutting. Ilya, the whole idea is that the Fed wants to keep rates at a certain level. And
Yes.
so they determine that by looking at what they'll determine the real Fed funds rate, the difference between the Fed funds rate and inflation. Okay, the nominal Fed funds rate and inflation. And so when you have inflation come in at the headline level, missing, so to speak, by what is equivalent to a full rate cut,
Yeah.
it does necessitate asking the question, can the Fed do more imminently? And so with an economy, if you look at Atlanta Fed right now, 3.5% growth. New York Fed nowcast is 1.81%. If that's really where we are, the Fed's cutting into a modestly strong economy that's in a bit of a hiring lull, and perhaps more cuts can help shake off that lull, and you can kind of keep the flywheel going. But right now, you're going to need a little bit more evidence for stocks. Volatility is coming in. I think that's the important notice. In this expiration week, we don't have that significant of a spike in vol anywhere. VIX today, 16.5, so it's down 1.12 points. We go out to the futures market, down 44 cents. If we were to close here today, Ilya, for the VXF26 contract, this would be a low close for the cycle. We got through the bulk of it. I think it was the market the past few days really felt like they were worried about this inflation report. You could even see VIX 1D came in from what was a high close for the entire month of December yesterday.
Yeah.
So a little tension unwinding. Maybe that is enough to get people to cross the Rubicon again. But yes, we got to get through the 68.50, 68.60 area.
Yeah. I mean, this is really the key thing here is look at the cadence. Fed comes out, markets go, okay, and they think get over and then resolve. NFP comes out, they go, okay. And the day of, they think it over. There's not a big sell-off on the day of. It's the next day. But the time frame starts to shrink. So it took them almost 2 days to think on the Fed. It took them about 24 hours to think about NFP. They're through the inflation numbers. There's nothing else really left for the week that's this eye-catching. We've already had the rate decisions from the Bank of England and the ECB. Those were non-controversial. If you look at both the euro and the pound, they're not really doing anything at all because you didn't really get anything that deviated from baseline. The ECB came out and said, we're leaving rates unchanged. Everything appears to be essentially where we need to be. They revised growth expectations up a little bit. And that's really it. You look at the Bank of England, they cut as expected. No big deviations there. Vote was about as expected. In fact, a little bit more consensus than last time, 5 out of 9, but that was in line. So nothing really there. I guess you have a Bank of Japan policy announcement, which could be something, but you already expect a hike there. So if the Bank of Japan comes out and says, yeah, here's your hike, but we're done, and though you expect us to go up again one time next year, maybe we're not doing that. But even if they do, I mean, we're talking about 25 basis points all year next year is what the markets expect. It's not exactly a juicy tightening cycle. So you're running out of event risk. And if the default for markets was think on event, any changes to the Fed calculus? No, risk off. If that's the cadence, then tomorrow we might be giving up a lot of this stuff.
So pin near 68.50. It feels like it's been the story for the past several weeks and months. This is the H6 contract, but if you were looking at ESZ5, it feels like 68.50 was that line. in the sand as well. Ilya, why do I care about where the market peaked out today? I see two potential things, three maybe even happening down here right now. And on the daily chart, you could add in a fourth, but this is the hourly. There is a clear down channel in place that has very clean, a very clean cadence, both in ES and NQ. Here in ES, it's highlighted by these yellow lines. Maybe there's a bit of an expanding wedge here, which is a prototypical, fairly stereotypical bottoming pattern. Those are the orange lines. But for both cases, you see how you got to get through like 68.70 to feel comfortable. Maybe even a little bit more than that, like 68.90 to feel like you've turned a corner. And this has been a false breakdown here. But if volatility is leading the way, that's one of the reasons why I've just been hanging on tight to the long deltas in equities. Volatility has not made its move yet. And so for at least today, partially rewarded for that patience with a nice bounce here in ES. I need a little bit more. And I think other people are probably feeling the same way.
Yeah, I mean, the bottom line is until you cross some of these key levels, what this looks like is a retracement in a trend that points down. And until you get through these levels, that's what this is. Maybe it's a rally that will have legs. It's not impossible. But at this point, at least structurally, that's not what this looks like. The Russell is actually a great example of this, because if you look on the daily chart, this looks like a textbook breakdown with retracement to test the underside, making this basically the spot you might want to look to sell, just from a technical perspective.
The Russell's complicated because you'd think that on a day where you can see potentially squint, you get, why isn't the market giving us more of a bump in rate cut odds? Russell should be probably leading the pack, but it's not. It's the NASDAQ, 1.78% higher. Maybe it's really happy with the news that Truth Social's merging with a nuclear fusion company. That was a big deal. But I couldn't help but notice this morning, Ilya, Kevin Hassett, the director of the NEC, was out around 8:22, 8:23 a.m. Eastern time. A few minutes before, this is when I saw the comment, so maybe he spoke earlier, like 8 a.m. Eastern. But within the hour prior to CPI this morning, he said that he felt that the Fed's next move should be a rate cut, which I don't want to put up my tinfoil hat here.
But I mean, are we surprised?
The NEC director is going to be one of the people who's going to see the CPI data at 5 p.m. the night before it comes out. And he's jockeying for Fed chair.
Yeah.
So I know that Trump's saying that he's going to announce Fed chair soon and he's going to announce it before the end of the year. But like, hear me out on this. If we get into the next layer of significant data releases, January 9th is when we have non-farm payrolls. Then you go to January, what is it, 14th? I'm looking at my calendar here. January 13th, excuse me, for the next CPI report. If Hassett hasn't been named or anyone hasn't been named for Fed chair yet, I'd be keenly interested in seeing if Hassett's speaking up those mornings before those reports, because he did more or less tip off that it wasn't going to be a hot one or coming above expectations today.
I mean, but how much of that, though, is confirmation bias, in the sense that Hassett, like Stephen Mirren, thinks every Fed move should be a cut because that's what the president thinks?
Well, Mirren has laid out a case, to his credit, that you'll be able to see more cuts by the Fed, in part because you've seen disinflation in shelter components, and those are going to really accelerate and start to show up in the data as you make your way into 2026. And as we know, shelter is such a big component of services.
It's by no means an unreasonable argument.
Bro, this has been his logic. And in today's report, at least, you know, you got to put a tally in his column with how shelter components moved.
Yeah.
So maybe he's right.
It's possible, of course.
Which isn't the greatest thing that, wouldn't it be great if he was right, because it means that you could potentially see disinflation for the wrong reason, right? Shelter falling and pulling back in weakness in the housing market. That's a direct knock into construction jobs and so many other things, consumer spending, Ilya. So careful what you wish for if that's where we're headed. But his observation has been thus far a little more in the column after today. We should move on, though. We've been talking a lot about equities here. We can go into treasuries, which have been inching up over the course of the session. So CPI data coming back in. We have treasuries able to move up, not on the highs. IVRs are still pretty low. Okay, so the high tick for today is 112 and 31. We're currently at 112 and 22. Over in ZB, it's an even weaker IVR reading, Ilya, down at minus 5.2. And oh gosh, this thing has been whipping me around. I thought we were breaking down, so I got short deltas. Now it looks like we may be starting to break out a touch here. We haven't quite crossed the Rubicon because over the past few weeks, really throughout December, that 1 month moving average, the yellow line here, has been resistance. I'm just going to get you out of the way for now. This has been resistance, Ilya. Today it served as resistance again. We're not through 116 either, which has been the neckline of this potential pesky head and shoulders pattern that is not working out the way that it should. But that happens from time to time. So a little bit more price improvement here. You know, the 1 month is 115 and 28 ticks. You give me 4 more ticks on top of that, we're back to 116. It's going to necessitate turning the corner and flipping back long. And I know it's been a grindhouse, at least in this trade, but there's a lot of sensibility in doing so, considering the accumulation of that move would also mean a return back into the uptrend off of the yearly lows.
Yeah.
So how could you fight it?
You shouldn't. I mean, I'm of a very similar mind here. I mean, this has been annoying, but also you have to trade the price action that's there. So if the price action is telling you your long position is wrong, you got to get out. And then if the price action tells you, well, actually, on second thought, maybe it wasn't wrong, I'll get back to you. Well, then you have to be ready to get back in and be a buyer and just go with what the price action says. Because clearly whatever conviction there was in this down move hasn't materialized, at least for now. It looked like we were breaking down and then momentum didn't happen. So now either momentum's going to magically appear, and that's possible. We could be in this, let's call it a 2-week window, where last week we have the Fed setting the table. This week we have the catch up of the data that was disrupted by the shutdown. Okay. Table is set. Now what? So maybe the markets were waiting for that. Maybe we're going to get some resolution now that all the pieces ostensibly that we needed, or at least that we thought we could get, are on the table. Maybe now we get something. But for now, there's no conviction. And so I'd break down and go, oh yeah, I'm selling into this bounce because this looks like a convincing sell-off. Russell looks like a convincing sell-off with a bounce to sell into. In fact, that's what I've just done here. I now have a put vertical there as of a second ago. But that's not what this looks like. This is very debatable still. And so just because it had an aborted break doesn't mean that you shouldn't be ready to buy it if it well and truly wants to go higher.
You could see how ZN, the 10-year notes, are close to turning a corner again, which, given the fact that we had agnostic positioning here earlier when we're sitting at 112, it was this thing just needs to get away from 112. Our approach has been the reverse iron fly. Why? Volatility is really, really, really low right now. And so simply looking for a move away from 112 without having to pick the direction. Typically I would be like, oh, I want to buy at the money, out of the money calls or out of the money puts. For at least notes, it made sense to me to look to just get away from 112. Volatility's got to pick up at some point over the next 70 odd days. That's working out well so far. So if this thing keeps going up, it's not going to bother me. I'm not caught off sides here because, if it goes to 114 or 110, it doesn't matter to me. Just get away from 112. ZB, on the other hand, is what's really going to cause me a little bit of indigestion, particularly because we're in a shorter expiration window right now at 36 days. And so this movement that we're seeing here, it's been bleeding out a little by a little by a little. It's getting close to the point where flipping back long is going to be the appropriate move, because on a pure technical basis, if we're rallying off the yearly lows, getting back into that uptrend, if we're doing a bullish wedge here as a failed neckline breakout occurs, just from a technician standpoint, there's no reason to be short. It might be short again at better levels, but certainly the path of least resistance, in my view, would not be to the downside, which is all the more confounding because, hey, don't we have a Supreme Court decision on tariffs coming up? How on earth is the
certainly
Treasury?
do.
How on earth is the Treasury going to reimburse all that money if that's the decision that arrives?
Yeah, I mean,
probably means issuance of debt.
Yeah.
Ilya, this is the heartbreaking part of today's programming. Gold, what are you doing to us?
It was
a
so
beautiful
close.
looking chart. I guess you can accuse me of top ticking it because as we started to poke through the 43.85 level, I took to Twitter and I said, "Oh, gold's trying to break out here."
I
That
mean,
was short-lived.
I agreed with you as I was looking at it.
Yeah. Well, what does this mean now? So a few things. A failed breakout typically means that when you return into the uptrend, you're going to go to the other side of the uptrend. So to that point, if we were to take the most recent swing low prior to the breakout, that's going to give us something that looks a little bit like this for fine tuning on this 1 hour chart. That does mean that gold could keep falling here down to about 43.45 before it stabilizes again in the pattern, if that's the assessment we want to make and how we want to approach this market. But first blush, trying to break out, not exactly the most convincing action here, especially as someone who is sitting in a position that's now 5 DT at the 43.50 strike. So moving up to 4,400 was wonderful. This is now making me grit my teeth here on Thursday, Mr. Spivak. Do you find the chart compelling enough to remain long? Because I see triangles in gold and silver, and they've worked out so well for us recently. Feels like we should keep the faith.
I don't see any reason to look at this as anything other than continued spinning of the wheel. I don't look at the failed push here as capitulation. Maybe it is capitulation, but you're going to have to show me something else. Because if what today looked like was, let's say, a run that in its kind of intraday fizzle is telling you, okay, this market is getting ready to turn, you're going to have to see more convincing evidence. You're going to have to get back under 4,300, let's say, that blue-gray former resistance turn support that you've got running horizontally across the screen there. That's my line in the sand, essentially, because you can see here that we've held that level now on at least 2 major tests, and that's basically our range bottom. Until you get through that, you're either sideways or up, and the trend, not even just this most recent one from mid-November, but the trend since the beginning of the year, up. So there's really no reason in my mind to get overly engineered on this. We didn't get conviction today, but that's fine. We might get conviction tomorrow. As we've talked about, gold is not exactly the same creature of the dollar and yields that it used to be in the past. Now it's much more a speculative narrative. And you don't really have speculative conviction today. What you have is cross currents from old things that gold cared about before this charming the U.S. is tearing down global economic norms, so you need a backup currency vibe that we've seen in the past year or so. So in my mind, this is just waiting. Note, gold doesn't break out last week on the Fed. It breaks out after. And it breaks up, not down. Despite the fact that you get a risk-off response in stocks, despite the fact that the Fed basically disappointed markets ultimately on how much easing it wanted to put on the board. So in my mind, gold's just waiting. It's waiting for the cross currents to fade so that the longer term structural advance can be re-engaged, because the story here is none of these things. It's a much bigger, much more kind of structural function of the emerging deglobalized environment kind of story in my mind. And it's just waiting for this noise to subside so it can get back to business.
Well, you know how I like my confirmation bias, so that works well for me. Also, very
The
much
best
agree.
of all the biases, confirmation bias.
The drivers haven't changed. Ilya, silver did have its breakout. It did make its move up above 67 briefly. It's looking a little softer here today, down 2.5% now. We recently rolled out positions to buy ourselves more time for a breakout up through 67, 68. So not too concerned about this pulling back in. Such is the life of a silver trader these days. It's volatile on both ends. I do see a line in the sand, though, here in the short term, maybe 65, 65.10. If you break through 65.10 here and you think about gold potentially setting that setback to 43, 45 or so, given how volatile silver has traded, maybe that means even a little bit of a bounce down towards 64 and change, where the market was consolidating and finding resistance intra-week this week prior to making its jump up towards 67. So constructive here. The big picture for silver with its 81 IVR, and note a day where we're down 2.5%, IVR is lower today than it was yesterday. That's a fairly stable relationship still. If silver is really going to rally, it's going to see IVR going up. That said, it's still an 80 plus IVR in silver. So like slow your horses. If this was really the top, the IVR collapse would be a lot more significant in my view. I digress though. What's the point here? We still have this up channel in place that's been guiding the silver breakout since the third week of November. If you start to lose 64, right? And that's why I have that line in the sand on this week's consolidation highs prior to the breakout. You lose 64, you're losing your horizontal level, Ilya. You're also losing the backbone of the rally. And then going into year end, what do a bunch of people say to themselves who've been riding this thing long? You know what? I'm going to take my chips off the table while this thing corrects. And then it becomes a self-fulfilling correction. So silver right now, fine for the time being. But gold, maybe $15 more of weakness. That probably translates, given how they're both moving today, maybe another % or so in silver. And then we start having that conversation about what 64 looks like. First blush, I'm probably going to add to a position. Because if it's going to be in an uptrend, I want to buy on dip still.
Yeah. I mean, as I look at this, I'm not in silver, I'm in gold. Whatever this pullback is going to be, wherever it finds its support, if there is an entry point to get back on, I'm getting back on. I will have missed only a small chunk of this rally. I've been there for most of it, but I certainly got out before some of the more recent highs, maybe before the last few % of this rally. But if there's an opportunity, there's no reason to fight this. There's a structural story in precious metals that clearly doesn't care about the Fed, doesn't care about the dollar.
Exactly.
Pauses there when that news comes out to kind of go, you know what, if this is really out there, we're going to have to move on it. Hiccups every now and again around geopolitics, but the story isn't any of those things. All of those things are just things that knock you around the bounds of the trend, but ultimately don't change it. So if an opportunity presents itself to be a buyer of silver on this discount, let's go.
Here's what alarms me about the metals. It's not the silver chart. It's not the gold chart, although neither, again, silver falling within an uptrend. It remains in a bull market. Gold, okay, it tried to break out. It didn't, but the overall chart on the longer time frames looks great still. So don't get too bothered by intraday wiggles. Copper is a little more complicated. I'm not a big patterns guy. I hear people in technical analysis say this is a crab, this is a bat, this is a this, that. They call this one a diamond.
Old McDonald had a farm.
Yeah, there's so many of them. And there's various mathematical rationales. People are using different Fibonacci ratios. And I get it, right? To each their own. And certainly, like, who am I to judge? Because I'm already using technical analysis. It's like I'm calling I'm calling other people in the crazy tent like those are the crazy ones. That's not a fair assessment on my behalf. So whatever floats your boat, if it works for you and you make money using it in the market, all the more power to you. Okay. But I wanted to put this up here on the screen, even though it's not something that I would ever trade around, because the interpretation would be for a top. When you rise into a diamond pattern, the consensus is that you reverse lower out of it. And likewise, if you fall into a diamond pattern, it's the sign of an expansion and ultimately then a reversal to the upside. This is fairly textbook. Maybe I'm just seeing this and it's how my eyes are shaping up. And these eyes are, they're losing their strength day by day now as I'm coming to learn. But this is really looking like one of those patterns. So folks can look it up themselves. Diamond pattern trading, go to your Google machine or Chat GPT, whatever you use. If that were to be the case, if copper were to have a more meaningful pullback from here henceforth, narratively speaking, that seems like a violation. Because of course, as we've joked here on this show this week, Ilya, lots of news articles and financial publications about how copper is the hot trade going into next year.
Sure.
Which makes me think that someone's selling a story to unload a position.
Yeah.
Okay. And like, oh, by the way, if that's the narrative that's forming, a diamond top would make a lot of sense because there's your top ever drawing in all the new suckers like me who are sitting long. And then you get your flush, clear them out. You can buy back in at a lower price. Copper's a thin market, 31.2 thousand contracts traded. I'm still leaning long, but this makes me uneasy for sure.
Yeah. Yeah. I mean, I look at this and I think, you know what? If you're going to put exotic technical patterns on anything,
it's a good way to call it.
Maybe don't put it on things that are jumpy and less than perfectly liquid. Because how much conviction you're going to get out of these things, you're probably going to get more of it if you see these things on more liquid assets, which is not to say copper is not liquid, but it's not the euro. It's not the yen. So when you look at this, I mean, is it maybe something? Maybe. And frankly, all these are just a bunch of trend lines that are giving you the bounds of a consolidation where you can see what the higher highs are doing on the way in and the lower lows. And so you get this kind of broadening into digestion, essentially. So digestion that's uneasy and now digestion that's less aggravated. Because now you're getting consolidating tops and bottoms. But you could call this whatever you want. If you were to break the lower highs rather of the current side of the pattern, you'd have a violation of the bounds of a down move and a signal higher. If you instead broke through the higher lows and had a lower low, you'd have a violation lower. Does it need to be a diamond whatever for those conclusions to get reached? No.
No. And this isn't one of the classic harmonic patterns when people look at the Fibonacci relationships.
Yes.
In markets. Nevertheless, it's something that's considered a reversal pattern. So you have into a triangle mirror image. That's how you get your diamond. Something to keep in mind because Ilya, we tie what's happening in copper so closely to our next point of conversation, which would be oil. They are both growth commodities here, and oil's bounce itself feels fleeting, if only because of the influence that has driven it higher here in recent sessions. We did have a gap open higher today, 56.77. We've closed the gap at one point during the session because we closed yesterday at 55.81. The low for today is 55.73. How did we get here? Looking for potential war signals with Venezuela. Did Trump mention Venezuela last night in his speech at all? According to Polymarket, they did not pay out on that, 0%. I was also wrong. I thought he was sure mentioned golden age. He's been talking about golden age in the economy, and he spent a good deal talking about the economy last night. But he also didn't mention MAGA, which was really interesting. Either way, no mention of Venezuela in his speech. And oil, after gapping open higher, it trades a little bit weaker, I suppose you could call it. Ilya, if copper reverses and we think that oils rise because of what's happening off in the Southern Caribbean is fleeting in nature, wouldn't those narratively fit together then? That there's going to be another leg lower in oil eventually once this geopolitical risk clears the deck?
Yeah, I mean, you already have a level of sogginess in oil that looks more like you're preparing for the next move down than you're getting into some sort of rebound. If you pull back a little bit and you look, as we were a few days ago, at where sort of the relevant lows are here, you can see that you're sitting right on top of where you've found a bottom before. And let's call it sort of mid-yearish, where you had the last kind of most convincing test of this. So the low from early April, of course, amid the Liberation Day kerfuffle.
Sure.
You're sitting right on top of that here. And does it make sense to sell into that? Maybe the risk reward is not the best. Maybe you're looking for something shorter term, in which case maybe it does. But your range seemingly is something like 54, 55 up to 57.
Mm-hmm.
And if you're near that top, as we are, if you're closer to 57 than you are to 54, 70, 55, then maybe it makes sense to sell. It's not enough for me at this point. It's all kind of hemmed in. But if we were to take out that low, if we were to take out that April bottom here, that's an important move. That's likely going to get people's attention and suck in some momentum on the downside.
Yes, and unfortunately, we can't make a determination whether or not. I mean, oil markets have a positive disposition naturally when you look at futures data. Okay, we're not going to have any of that until the end of January, so we can't even say whether or not we have to wait for the banks to report on CTA positioning, which is one thing. Natural gas here off another 2.5% after yesterday's biggish bounce. Back down near the lows, Ilya. This is an ugly market, an ugly chart for me. It's an ugly trade. No reason why I subject myself to this. I'm almost getting ready to tap out. I know there's 40 DTE, but the fact that downside strikes have been challenged so quickly, it obviates any sort of good feeling I have towards keeping this on. So we move on. US dollar here holding up. We're running out of time, so we're going to do this quickly, Ilya, and you and I have more time together anyway in about an hour and a half, so no big deal there. We have an ECB that's out today. We have a Bank of England that's out today. Ilya, what did they tell us? We have 1 minute on the clock.
Not really a whole lot of anything. The ECB left policy unchanged. That was in line with expectations. Lagarde came out, the president of the ECB, Lagarde, came out and said, we're data dependent. We're taking it meeting by meeting. She emphasized that the ECB does not have a predetermined path, la-di-da. If we look at where we stood before this meeting, the ECB was not expected to do anything on rates for the rest of this year, obviously, but also for all of next year. That has not changed. You got a little bit of a wiggle on growth expectations. It was revised up for this year and next, and a little bit for 2027, but ultimately a rounding error. Not really a big deal on the inflation forecasting either. It was revised up for 2026, but that's really it. And you really see that this wasn't really a big mover because if you look at the euro, it hasn't done much of anything at all. It's not a different sort of story for the Bank of England. There you were looking for a cut. Shock of shocks. You got the cut. Not really anything different. Again, the way that the DOE works, it's one person, one vote. 9 of them vote. The expectation was it'd be a 5 out of 9 call for a cut. That's what you got, a 5 out of 9 call for a cut. It was the first cut since August, but widely expected. So no one really took much issue with it. If you look at the sort of way that Bank of England policy expectations evolved after this, they really didn't evolve all that much.
And then no wonder the pound hasn't moved all that much today.
And when you look at the pound, you can definitely see that. At this point, we're looking for, it looks like 38 basis points in cuts for next year. That's a little bit less than yesterday. Yesterday, it was 42. So ostensibly the odds of 2 cuts versus 1, they've come down a touch. But does that really change anything here? Not really. The pound really tells you the whole story. There wasn't enough here to move the needle. And that's despite the fact, by the way, that UK inflation slowed to 3.2% in November, which was an 8-month low. So you might think that the BOE would go and signal something like, oh, we can cut some more. No.
Well, we're going to talk more about this later and queue up what may be an interesting yen trade on overtime today, because we do have a Bank of Japan rate decision tonight, and they are expected to hike rates tomorrow as we make our way through the calendar. Core PCE data, what the Fed cares about, personal income, personal spending, and existing home sales to wrap up the week. I don't see any Fed speakers on the calendar, Ilya. But you know what? We're done talking here as well because we're finished on this show. I'll see everyone with Ilya on Overtime today at 4 Eastern, 3 Central. Until then, grab a quick cup of coffee because Dr. J's up next year with From Theory to Practice. You're watching Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Thursday edition of what it is that we are trying to do, man. I'm so glad that you guys are here. You guys are with us. I was gone there for a day, but man, we are back. We are back indeed, and we are about to take a 29-minute victory lap in Micron in the next couple of seconds here. So if you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the show. Man, you can celebrate if you're a bull, you can commiserate if you are a bear, but it is usually a good time had by most. So, Paul, go ahead and bring us into the market here today. How we doing out there, man? It's, strawberries and sunshine the last I checked. Let's take a look here. Even S&P's up 53. You've got the risk-free instrument doing some risk-free things. The NASDAQ futures, which is an extremely high-risk product, just to be clear about that, up 356. Got the boomers. The boomers are struggling a little bit, but yeah, they usually mail it in around Thursday of a given week. So that makes sense with the Dow only up 101 and the Russell 2000 futures index up 21, almost 22 on the day. Man, bonds are up, notes are up, oil's up, UB40 is up. The shifties are struggling a little bit today with gold down $8. You got silver. Whew, man, the Hunt Brothers, they're probably going to start seeing some pizza promotions this weekend. Like, I would check your neighborhood Hunt Brothers pizza. You're probably going to get some BOGO deals this weekend because they got to push product, man. Like, they got to move some of that merch to make up for some of the silver decline here today. But you got the British pound is up. You've got, I would imagine the euro is also up. Let's see, the euro. The euro's down. Okay, so British pound up, euro down. You got volatility down a little bit on a day like today. It makes sense. Volatility futures down 43 cents. And then, of course, you've got the spot volatility. The old VIX, that guy is down 85 cents on the day. Look at Tesla. Father-in-law is cooking today. Absolutely cooking today. Tesla up $17 right there on the doorstep of greatness. That is $500 per share. So, okay, so I got a lot to do today because we were gone yesterday, and I don't remember who brought me the Micron trade on Tuesday, but it wasn't my trade because obviously it's working out. So it can't possibly be my trade. It's either one of y'all or it's Amelia. Right. And if you're brand new to the show, I have a trading assistant. I have an intern who only works for this show. She does most of my trading analysis for me. She is also my 5, soon to be 6-year-old daughter, Amelia May. She does a phenomenal job. She just basically goes based off of green or red and kind of how she feels in the moment. Right? Like you may read on the internet that hope is not an investing strategy. Oh, I disagree. Au contraire, mon frere, because Amelia May, man, she dials it in on the hope as a trading and investment strategy. But who gave me the Micron trade? Somebody please tell me in the chat. Take credit for it, and I will give you said credit. And by giving you said credit, I mean, I'll keep all the profits, but we may throw you a little internet love there out there in your neck of the woods. And so, all right, let's go through. Couple of things in the portfolio. I mean, we have so many things to go through. I mean, do you really think that I'm only going to do one victory lap on a day like today? Like, do you really think I'm going to let you off the hook with just one Micron victory lap? There's not a chance. I mean, look at this, man. The P&L Open Bros, we are smashing them to pieces. Like, we have absolutely just beaten them to a pulp. I mean, look, they got nothing. They got $200 in Costco. They've got $15 in SLV. That's all they're left with. Like, yeah, sure, you got your Best Buys from yesteryear. You got your Chipotle's from yesteryear. But that's old news, man. That's 2000 and late type of stuff. And so when we look at the P&L Open today, it's a thing of beauty, man. Like the P&L Open, the P&L Day, I don't even know which one is better. They're both actually looking pretty strong. And so we're going to talk about Micron for about 28 to 33 minutes. We're going to talk about Starbucks for about 31 to 36 minutes. And then, of course, we're going to talk about MNQ. We're going to talk about MES. I mean, there's just lots of green on the screen. This has never happened before on the show. And so we're closing in on 10 years having been on air on the Tasty Network. That's crazy because when I started, I mean, there was a pool going on in the office, like in the studio. And it was like somewhere between 10 to 25 delta that I would make it through the first year. Like the highest bid was like 27 delta. And here we are almost 10 years later. And so, all right, let's go through, let's do Micron first. And then maybe we'll go to Starbucks and we'll go to, we're kind of wherever else the wind blows. Oh, and by the way, let me look and see here. Yes, we've got FedEx earnings tonight. And so tonight, thank you, Mike, for reminding me of FedEx earnings tonight. Boy, do I have something for you all. Man, like we've been cooking something up here at the Schultz household that you are not going to want to miss this. So we got FedEx earnings on tap coming up here in the next few minutes. All right, let's go to Micron though. So Micron, this was a butterfly that we did put on Tuesday. If I bring up my my Allison chains here really quick, you can see we did this trade on December 16th, and I did this because I knew I was going to be out yesterday. And one of you brought this to me. Yeah, take a look at that, man. Look at that timestamp, man. For all of my AC Slater fans out there, all of my Zach Morris fans out there, all of my Kelly Kapowski fans that might be out there, I know there are many of those, of course. You guys saved by the bell. Like we did it right before the end of the show. Like, man, you guys did it. We snuck it in there right before the show was over, and we got you guys onto some Tim Knight trading the charts. But man, this Micron trade looking pretty good. Looking pretty good indeed. So we did this trade 2 days ago for 383. If we go take a look at the strikes of the strategy, I mean, Micron is 253. Take a look at the short strike on the butterfly, 255. You couldn't really pick a better price. I mean, sure, you could pick 254 or 255, but man, for a $300 stock or a $250 stock, this is pretty much the best possible price for us. Now, what's interesting is if you look at this, again, this is another good example. We've seen several of these over the course of the last few months where we've done like a Wednesday butterfly going into Thursday, or maybe like a Tuesday going into Wednesday, whatever, where you actually get the move that you wanted, like pretty much the exact move. I mean, I don't know how you guys would score this at home. You're free to score this however you so choose. But I'm scoring this as basically a David Ortiz against the Detroit Tigers in 2013 grand slam home run to tie it, and then they go on to win the World Series. That's how I am scoring this specific trade right here. You couldn't get it much better than this. You really couldn't handpick a better price for this trade. Take a look at the butterfly though. The butterfly is $20 wide. Right, so here's some quick butterfly math for you guys. $20 wide on the butterfly, right? That means that my mark price has a maximum value. Ooh, that's a scary looking M, but that is an M, by the way, that's on the screen there. The Final Jeopardy pen, it kind of lets me down here and there. But the mark price, the max price of said mark price is $20. So I know that the greatest possible price or the highest possible price for this mark on the strategy is indeed equal to its width. Well, take a look at where it is marking. It is only marking at 1170, 1165. Now, let's be clear. Am I upset? No, I'm not upset. Am I not super, super happy? No, I'm pretty happy with this trade. But I just wanted to point out that, again, in order to get anywhere near maximum value on a strategy like a butterfly, you've got to nail the move, number one. And number two, you've got to do it at the very end of the expiration cycle. Again, look, we're only 1 day away, guys. We're 1 day away. We're 26 hours away from this strategy being done and over and sent out to pasture. And still, there's $8 of potential value left in the strategy, even though we're only $2.40 away from the perfect possible price. And so this is just another good illustration that, it's one of those things you hear about. It's one of those things that maybe you like read in a textbook. I don't know if people still read textbooks, but I mean, my students used to read the textbooks that I made them read back in like 2009 and 2010 and 2011. I mean, I know they weren't reading them, but they were supposed to be reading them. Nowadays, I don't know what they're doing there in the old the classroom setting. But you're listening to a podcast, you're watching a YouTube video, right? The irony, right? And you're learning about these things, the maximum values, the maximum profits, whatever, but you don't really quite understand it until you feel its weight. Like you need to really feel the weight of the actual concept that you might be learning. And this is a good example of kind of feeling that way. And now it's like, okay, now I understand. I've nailed the move. I've nailed the magnitude. I've hit the price, and I'm still $8 and some change off of maximum value. And that's because of the nature of the strategy. Like because you have that shared, those shared short strikes in the center, they're going to cling on to the extrinsic value until the very end. Like you're going to have to rip the extrinsic value out of their cold, dead hands. And that's not going to happen until expiration. And so obviously that's still 24 to 26 hours away. And so Micron, are we going to push it any longer? No, of course not. Like we're going to go ahead and take this profit and let's move on to greener pastures. All right, so let's go to Micron. Let's see if I go to let me see here. Let's close out of some Micron. Let's see if we can get 1181. Yeah, that looks good. Let's see if we can do it for 1181. That'd be fine. All right, no takers at 1181. Let's do let's see here. If I do I'll do like 1165. I had to go down a lot because the mid price dropped by a lot. Okay, so we got filled at 1165. That's fine. I mean, somebody may have gotten us for Vinny may have gotten us for 11 cents. Hey, that's fine, Vinny. Go get yourself something nice for Christmas. And so Micron overdone with. Nice trade. Again, thank you so much. Somebody needs to claim that in the chat. Even if it wasn't your trade, I'm basically just going to give it to whoever claims it first. And so it's jungle rules at this point. So Micron over and done with. Look at Starbucks. Guys, they laughed at us, man. They laughed at us. They mocked us. They jeered us. And they said, what are you doing with the Starbucks position? Like, don't you know that they're just slanging some rather C-plus quality coffee? It's like, oh, I know that. I know that quite well. But the market craves it. Like, you crave it. Like, you know that you go to Starbucks and you take a sip and you're like, this isn't very good. Like, this coffee could be a whole lot better. But then you go out to other places, you try other things, and then where do you end up at the end of the day? You end up back at Starbucks. It just lures you back in. It has a very magnetic pull on its C-plus level of quality. And so obviously the market has come around. You've got Starbucks up $4.55. And so right here, we've got our 100 shares that we put on. Man, we did this almost a full year ago. Yeah, I'm going to bring that up here in a second because it's almost the anniversary of the beginning of this Starbucks position. And what's really funny too is it's almost come full circle in the words of Shakespeare. We bought the shares for 92. It's currently marking for, just a hair under 90. So it's essentially unchanged. It's like unchanged on the year, but we're up a significant amount of money on this trade because of all the premium that we sold against it. I don't have the actual number for you. I should probably work that out because I think it would be a good exercise. It would not be a good exercise for me to do on air because it'd be a huge waste of time and I'd be fumbling through the credits and the debits and whatever. But just to give you guys like the end result, you might be curious as to know, like, okay, for this year-long case study, like where do we stand P&L wise? Like for this specific position, I know that we're significantly in the green. Not to mention, take a look at our little dollar cost averaging substitute where we bought this deep in the money call. We did this guy, it was maybe a month ago, 2 months ago. Let me bring up my chains here on Starbucks. When did I buy this call? Yeah, we did it on November 3rd. So yeah, 6 weeks ago. So it's about a month and a half ago. So I was kind of right in the ballpark there. We bought this deep in the money call. And the reason why I did this was Starbucks was down significantly. And so I wanted to tap into what most long-term investors do because I'm kind of treating this position like that. I've been very consistent the whole way through for the last year. I'm like, hey, let's get a position in the portfolio that we can kind of trade like a long-term investor might trade. And not even like trade, but like invest, right? Obviously. But we've done some things around it because I wanted to give you guys a case study and, what you can do if you're a long-term investor, if you're more of a passively minded investor. You've done very well for yourself, obviously, over the course of the last 10, 20, 30 years, even 3 years or whatever. And you're like, hey, is there more that I can do? Is there, an active approach that I could start taking with my portfolio? And of course, the answer is yes. But I think that the easiest bridge to cross from kind of this passive investment only island over to something that has more of an actively managed feel to it is going to be covered calls. It is going to be selling calls against the shares that you own because you have the benefit of the familiarity of the long shares. I think that's incredibly valuable and it's just a great place to start. And so oftentimes the long-term investor is when stocks go down or when the share price goes down on a stock that they still really like and they plan on holding for a long time. What do? They average in the position. Right now, are they going to call it buying losers? Of course not, because the internet will rake you over the coals. Are they going to call it averaging down? Of course not, because the cyber bullies, man, they will take you out behind the woodshed. So what do they call it? They call it dollar cost averaging. What do they call it if they really want to join the elite crowd? They're adding a tranche. Right? That's how I refer to it in my mind. And of course, that's exactly how you should too. And so for Starbucks here, it worked out pretty well. When the stock accommodates, when the market moves in your direction, guys, things just have a tendency to work out okay. And so Starbucks is looking great. I'm not going to do anything right now. Like, let's just sit tight and let's play. We got the Santa rally on deck. You'd be out of your mind to do something to the short side, in the next couple of weeks. We're going to play FedEx to the downside, obviously. But you would, generally speaking, be crazy to fade the Santa Claus rally that we know is all coming down the chutes here. All right, so that's Starbucks, that's Micron. You know, there's other victory laps we could take, I suppose, but I'm actually going to pass on those because I do want to do FedEx. I do want to do a little something in FedEx. And then, of course, I want to get to you guys, and I want to see. Let's see. Look at you guys, man. You guys are doing some work. You guys are doing some work on the algo in the YouTube chat. So I appreciate you guys. Again, drop your comments in, drop your questions in now. You may get surprised and delayed. Like you may drop a question right now, think there's no way he's going to get to me. I may surprise and delay you here in 3 minutes. So don't necessarily, run away from adding something to the chat because you don't think I'm going to get to it, because I might get to it. But even if I don't get to it, you know who is going to see it? The algo. You know who is going to respond to your comment or question or story or joke? The algo. And so drop something in there for the love of the algo, and I appreciate you guys. So let's go to FedEx. FedEx, let's go to the trade page. You got earnings are tonight. Whew, baby. All right, so let's think about FedEx. Listen, guys, we don't need to reinvent the wheel. I'm not splitting the atom here. There are certain things in the world where you have to pick a side. You're either a Republican or a Democrat, obviously, right? You're either squats or deadlifts, obviously. You're either pancakes or waffles, obviously. Another one of those, you're either UPS or you're FedEx. And look, guys, this is basic stuff. Like, we don't need a chart. We don't need balance sheets. I don't need to be looking at 10Ks and statements of cash flows. Just think about FedEx as a philosophy, right? Just think about them as a thought experiment. Does FedEx have the Amazon return business model on lockdown? The answer is no, right? UPS has that thing on lockdown. And when you go to UPS, what's the only reason you're there? To do an Amazon return. What is the only reason the other 7 people are there? To do Amazon returns. What does FedEx have that can compete with that? Nothing. Right? They need to start doing some Temu returns or something. Like, give me a Walmart return system in the hopper here pretty quickly, because otherwise they're going to be going down in flames. And so we are going to ride this thing to the downside. So we're going to do, it's a Thursday going into a Friday, obviously. Let's do a butterfly to the downside, and we're going to cover the whole expected move lower. So I'm going to buy a 285. I'm going to sell a 267.5, so get a little jankiness with the strikes there. And then I'm going to buy a 250. And of course, I'm doubling up on my 267.5. And this is only, guys, you can do this today for the one-time low price of $4.40. Now, I can't promise you that this price is not going to go up later today or even tomorrow. But if we can go to business right now, I can get you in a brand new, certified pre-owned downside butterfly in FedEx right now for the one-time low cost of $4.40. I mean, this looks like, I don't know how you can possibly walk away. Like, I don't know how you can possibly look at this and say, man, there's at least a 25% chance that he nailed this one. And so let's go ahead, 285, 267.5, 250, 17.5 points wide. We're going to pay $4.40 for it. I could smell the smoke in the air, but man, let's do it. So let's go in here. $4.46, it looks like. So the price is increasing as we speak. And so let's go ahead and I just glanced at the chat. See people talking about, I see BDAs talking about FedEx charts. Nah, man, we don't need FedEx charts. Again, just think about it, right? Just channel kind of your inner feelings about FedEx, right? It's all there in the chart anyway. You're not going to find anything in the chart that isn't already inside of you, right? And so I would look inward for the answer on FedEx. And so let's go 446, 449. And we are on a little bit of a hot streak here on the show. I mean, hitting Micron was pretty nice. And so I haven't done the tally work, but I think we're hitting about 20% of our earnings trades now, which is about 18% higher than we normally do. So, man, they're really driving a hard bargain on this FedEx trade. 451. Let's try 450. Oh, we got filled at 451. All right, beautiful. So we're in FedEx. So we did FedEx. Wait, isn't Nike tonight too? I think somebody was reminding me. Somebody was talking about Nike, I think, right? Is Nike tonight? Let's see. Oh, Nike's tonight too? Wow, okay. So Nike is a little trickier. Nike down to 65. Oh, excuse me. Let me look at a chart of Nike though. So this time we are going to look at the chart because 65 seems very low. Yeah, look at this thing, man. Wow, look at that. So let me zoom out a little bit. So let me get like a Yeah, I guess that's about the best I can do. I mean, I'm going back about a year in Nike. Now, I mean, when you look at that chart, draw your own conclusions, and you are very free to do so, sir or madam. But when I look at that chart, man, I don't know that I've seen a more bullish chart, right? Like when I look at that chart, I see rocket ships to the moon. When I look at that chart, man, I just see escalators. I see elevators. I see everything going higher and higher and higher. And we all know, I mean, what's the only thing that's faster than an escalator? An escasooner. And so when I look at this chart, I'm seeing escalators, I'm seeing escasooners, like I'm seeing all of it. So I think for Nike here, let's go into the trade page. I think for this one, though, let's be a little bit strategic. So we've already lit one stack of cash on fire with, FedEx earnings. Let's do something here where maybe we're a little strategic. Maybe we're selling puts. Maybe we go to like the February cycle with 20 days to go, and maybe we sell a 62.5 put. Like, I don't know. Again, we're just browsing at this point. We're just window shopping. Nobody's signing on any dotted lines. Like, we're just checking it out. We're kicking some tires, right? 68% pop, 87% P50, $2.89 in positive theta, 35 positive delta. The buying power effect is only $1,000, so that's only about 3% of the account. That's pretty nice. The maximum loss, of course, would only occur if Nike went to zero. Is it possible? Of course. Is it your theoretical maximum worst case scenario? It is. Is it likely? I'm going to personally say no. You are free to draw your own conclusion there. The credit collected here, $2.49, and that, of course, is going to translate to a maximum profit of $249. And so this looks pretty nice, man. Like, I really like this trade. And again, we're being a little bit strategic. We have some downside protection. I mean, I saw nothing but bullishness on that chart. Again, you guys take a look at the chart and, see what you think. And maybe Tim Knight can shed some light on the subject as well. I mean, I'm pretty confident when he looks at that, he's also going to be mega, mega bullish. But I'm thinking 62.5 put in Nike, man, I like it. I like it. So we've got FedEx to the downside. We've got Nike to the upside. And there you go, guys. So those are your December 18th earnings plays. And again, if you've seen the show for any length of time, you should be on the opposite side of every single one of my directional plays. Don't let the Microns fool you. Don't let the other things fool you. Don't let the fact that we are just absolutely taking the penal open bros out behind the woodshed today. Don't let that fool you. Don't let that fool you. If you want to retire early, you should be taking the opposite of all of my directional trades. All right, so let's see. Let's go to where are you guys at? 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 Man, I'm going to surprise and delight somebody at the very end. Let's see. Joel James says, Dr. Jim, Uber looks good for an upside trade. Uber, are they earnings today? No, Uber's not today, is it? I don't think so. Maybe it is. Uber. Okay. I'm not going to play. Wait. Earnings. I don't even see when I don't see an earnings. Oh, there it is, February 4th. I'm going to pass on Uber for now. Maybe so, but we've already, there's too much smoke in the air. I mean, the detectors are going to go off here in a couple of seconds. And so I don't want to do anything else from a trading standpoint. I don't think. I'm free to change my mind here in the coming minutes. And so let's see, where are we at though? Man, look at you guys. Let me surprise and delight somebody else here in the middle. Look at you guys, man. You guys are just doing some work, and I appreciate you guys so much. Let's see. Well, Ron Vashara says, downside FedEx seems risky with 300 on tap and all of those part deliveries for Dr. Jim's fence repairs. Now, man, let me tell you a little something about my fence. This fence might be the sturdiest structure in the Southeast. Like, I'm talking Florida. I'm talking Georgia. I'm talking Alabama. Roll Tide. Like, I think this thing is the sturdiest structure that's ever been created. Like, it hasn't moved. Like, it absolutely hasn't moved. I mean, part of the gate is kind of dangling off, but it's really not that big of a deal. You can only see it from the inside. And so I think that for FedEx, I think we're going to be good, man. I think we're going to be fine. I think it's going to all be okay. And so, all right, let's go to the beginning, though. Where are you guys at? Man, look at iPod Touch in the house. iPod Touch here with the beginning comment. Dr. Jimmy, we did it. We did what, man? NASDAQ's up 320. NASDAQ's up 330. No, I guess you're talking about yesterday, right? Like yesterday. Nobody takes man, nobody takes an after the fact victory lap better than iPod Touch. He's my guy. Like, I thought that I was the only one that did that, and I thought I was the best one who did that. I don't think that I am anymore. Like, iPod Touch, like, he'll be laying low, like, he'll be super quiet, for the days and weeks and months on end when the market's up and up and up and up and up. But then all of a sudden, NASDAQ down 90, iPod Touch all over the chat, right? iPod Touch everywhere. He's in the YouTube chat. You're seeing him show up on your Instagram feed. Like, I mean, he's my guy, man. He is my guy. But yeah, look at NASDAQ here. Yeah, yesterday was pretty ugly. It was definitely pretty ugly. And today, a nice little recovery in the market. I mean, we'll see what happens, obviously, from this point forward. But iPod Touch, man, we appreciate you, man. We appreciate you very, very much. I mean, the people were calling for your name, like Barabbas. Like, the people were calling for your name the last couple of days, and you were nowhere to be found. I mean, yesterday was the day, my friend, to take your victory lap. And so, but I appreciate you, of course. Brian Dowdy, hey, Dr. J, it looks like Micron might have blasted 30 strikes. Now, we crushed it on Micron. Was that your trade, Brian? I think maybe it was. How about we make money by doing FedEx and Nike? Man, I got you. I also put on a short put in Oracle today. Do they have earnings today? It's been about 10 days. Right? I mean, if they really have earnings again, like, it's over. I'm done. I can't do it anymore. Oracle down to 178. Man, if you think this thing isn't rigged and manipulated, I don't know what to tell you. Oracle was 360 like a couple months ago. I mean, I love it. I don't love it any less. I mean, the riggedness of it and the manipulation of it, like, it's amazing. It's incredible. But this is just like, wow. I mean, what happened to cause Oracle to go down by 50% in what? 2 months? 3 months? I mean, we're talking about September, right? So yeah, September to December. I mean, what happened in Oracle land to cause the company to go down by 50%? That's crazy. Is that just like, all of the AI stocks and all of the tech names and all of the Mag 7s and Mag 10s and whatever, they're all just so far out over their skis? I mean, maybe. That's very possible, I guess. And man, Oracle, wow, that's really something. Yeah, no earnings for Oracle. It's probably next week. And so, yeah. But good luck, my friend. I'm going to pass on that, of course, because, again, I'm trying to keep the smoke detectors from coming on during the show, at least, and we are right on the razor's edge of that happening. Sam L. now, Doc misses one show and my trades immediately go sideways. Not blaming you, but also blaming you. Yes. Sam L. says, MU earnings nailed. Is it still trading, or is just Doc farming W's before the caffeine wears off? Man. Yeah, I don't know what it is, man, but we nailed Micron. And by we, I don't know. Brian, was that your trade or was it somebody else's trade? I don't remember whose trade it was. Somebody please take credit for this trade because it wasn't mine. It wasn't even Amelia's. And so it's one of y'all's. And I appreciate you. Scrum everything. Welcome to the best Dr. Jim PowerPoint 3/4 of an hour show. There you go. The Dr. Jim Power 3/4 of an hour. There it is, where trades are graded on a curve and always come out a B-. That's what's amazing about the curve. They always come out right around that 82% level. Like, we're right there to where you're like, there's so much potential. Like, there's so much opportunity there, but he just keeps falling back to that 82% level. And so, but I appreciate you. Thank you, traders in the house. Dr. Jim, do you like, I'm assuming, do you like to cut your delta in half, or is that just a bad thing? This is a very good question. So I'm assuming that you're referring to like a strangle, right? Where if I have a strangle on and the stock runs to one side and now my directional bias is changing, because when you put on a strangle, you're obviously delta neutral or pretty close to delta neutral. When the stock starts running to one side, you become, the opposite of that run, so to speak. So in other words, if I put on a strangle and the stock runs higher, I am going to now become bearish. I'm going to want the stock to come back down to kind of recenter itself in the middle of my strangle. And of course, the reverse would also be true. Stock falls down, I'm going to become super bullish. I'm going to want it to come back up. There's all kinds of different philosophies in terms of adjusting a strangle. I mean, the research team has done so much work on this front, and I think it's amazing work. And it gives you guys so many resources and so many things to think about. Some traders, like Tony, for example, likes to, kind of aggressively adjust as things get out of whack with his delta. I don't know what number he uses. I want to say it's maybe 15 delta or so. 15 or 20 delta, that's when he starts rolling the untested side to kind of clean up the delta and get it closer to neutral, maybe only cutting the directional bias, in half, potentially. I'm a little bit more conservative than that, and I'm a little bit more patient than that, which is not to say that my way is better, but there's a reason why I do it my way. I'll let you decide which way you prefer yourself. But I like to just sit tight and let it work. I'm like, man, as long as it's inside of my strikes, as long as everything is still out of the money, like it's all good to go in my opinion. Like I just want to sit tight and just let it work. I don't typically like to go in and kind of start overriding the natural process of the strategy because oftentimes I feel like I'm just chasing my tail from the standpoint of 2 days later or 6 hours later, I'm like, I shouldn't have adjusted at all. I would have been in a better spot had I done absolutely nothing. So there's a reason why doing nothing is oftentimes our default setting, and it is a strategic component of the repertoire there. So those are my thoughts related to that. I'm assuming you meant to Strangle. You didn't say in the comment there, but I'm assuming that's what you were referring to. Brian Dowdy says, I was shocked I didn't see you in the chat yesterday, Dr. J. Yes, I did that to you guys last time. No, I was actually gone. I wasn't even here, so I wasn't able to be in the chat. But the last time I was out, I snuck into the chat, and it was so fun for me because, you know, until the very end, you guys were convinced that it was an imposter. You guys were convinced that it was a bot pretending to me, but it was actually me. And so that was pretty fun. But Wolf says, happy Thursday, Dr. Jim. Love the show. Quick thanks for all you do and the obligatory algo pump, man. I appreciate you. And yes, it is obligatory. Like you guys are required to do this. Like if you're going to be part of the team, I need you guys to start pulling your weight. And the way that you can do that is no fewer than 4 algo pumps per stream. 4 algo pumps per show. And mix it up. Because these algos are getting smart, man. Like the first one could be for the love of the algo, but then the second one needs to be, you know, I like the positive theta, my negative delta, so that I'm neutral gamma, blah, 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 blah. It's got to be something related to trading that still doesn't have to make any sense, as evidenced by what I just said. But you got to mix it up a little bit and just kind of keep the algo kind of off its game. And so, where are we at? Sam L engaging respectfully with the algorithm so it doesn't fade the show. I appreciate you very much. Theta Trader says, also, what's your favorite bias? I agree with Ilya. Confirmation bias is the best of all the biases. I'll tell you what, this is such a good question. So confirmation bias, listen, it's kind of like confirmation bias is like it's like the chocolate chip cookie of biases, right? Nobody doesn't like it. There isn't anybody out there that says, man, I can't stand that. Everybody likes it to some degree. Now, some people love it, and for some people, it's their favorite, but nobody doesn't like it. It's like pizza. It's like, man, I mean, it could be the worst pizza ever, and still like, this is some pretty good pizza, right? I mean, that's just the nature of the beast. That's the nature of the product, right? Confirmation bias absolutely fits that bill. Personally, though, I'm a bit more partial to survivorship bias. Because survivorship bias, man, that can lead you into some worlds that you should not be in. Because everyone else got killed long ago. Like everyone else is gone on the Oregon Trail, right? With, you know, sepsis or whatever they came down with. What was it in the Oregon Trail? Not sepsis. It was, it was like typhoid and there was something else. Some cyst. Not bursitis. That was the old Madden injury you always got in like 2003. You're like, man, my Jay Fiedler came down with elbow bursitis again. That's brutal. But what was the other thing on the Oregon Trail? Somebody help me out in the chat. Help me out. But yeah, survivorship bias is amazing. Because again, it leads you to believe certain things that aren't even, not only are they like, you know, it's not that they're partially true. Like they're actually not true at all. Like confirmation bias, at least, okay, that could be true for some people. Survivorship bias is like, man, you're only looking at the one that made it through. The other 99 got crushed long ago. You're looking at the lone survivor. Like you are looking at Mark Wahlberg face to face. And it's like, man, I should not be here at all. And so, yeah, I'm a big survivorship bias fan. But I appreciate you. Trader Nate in the house. What's going on there, Trader Nate? And following the no more than 20 to 50% of buying power used with short premium positions, is there any reason you wouldn't put like 50% of your cash into something like SGov? Thanks, Dr. Jim. No, not really. A lot of traders like to do that. I mean, a lot of traders like to do that where, you know, they know that it's very rare that they would go over like 50% of their buying power. So they take the other 50%, they put it in SGov or BIL or whatever. And also understanding that you're going to get like 90+% of that back anyway for additional buying power. Because essentially, you know, tastytrade, and I'm sure many other brokers do this too, but tastytrade is just recognizing, you know, that capital as essentially risk-free. Like there's no risk in that. Like, you know, the U.S. government is assumed that it's not going to default. Could it default? Yes. Theoretically, of course. Is it going to? That's not the way that the financial markets are structured. And so a lot of traders like to do that. Now, what would be one exception to that? Well, if you're in a situation where you like to trade a lot of futures, you have to be careful with that because, whatever you put aside for BIL or SGov, it is going to eat up. I don't know if it's a 1-for-1 with your cash. Like I'm no expert when it comes to like maintenance margins and variance margins and, cash equivalents and starting day balances and all that kind of stuff. I just like to just get in there and kind of slang them. I just like to kind of get in there and start whipping them around like backyard ball, kind of Brett Favre style. Like, is he triple covered or is he wide open? Like, well, let's find out. Like, that's kind of the way that I look at it. So I'm not exactly an expert when it comes to that. But if you do futures and stuff, you have to be mindful of the fact that, you're putting your cash aside for SGov, BIL. You may not have that cash available to do, MNQs, MESs, ESs, NQs, whatever you like to trade, ZBs. And so just be mindful of that there, Nate. Hopefully that helps you a little bit. Let's see. Dr. Ram Bashar in the house. What's going on? For the love of the algo, man, I appreciate you. Dr. J Money in the house. I am here. Big Deal Donuts in here. Let's go. Yes, let's go. I appreciate you, my friend. Samuel, Doc, jokes aside, huge respect. You make markets understandable, trading survivable, and losses at least funny. Truly underrated, man. I appreciate you so much. You are part of the core position, as so many of you guys are. I appreciate you, Samuel. I appreciate you very, very much, my friend. You guys give my job tremendous amount of purpose, and I just thank you so much for that. Scrum everything. Dr. Jim, I missed the show. Missed the show that holds up the market to talk crypto with some unnamed sources talking about building on Anton. The market crashed without the power hour to pump it up. I'm not sure what you're referring to there. That message is a bit cryptic. I feel like I'm missing some context there. I don't know. Yeah, I'm not sure, Scrum everything. I got to pass on that one. It's not necessarily clear to me what you were getting at there. And so that's probably my failing, but I got to pass on that one, my friend. But thank you so much, of course. Theta Trader says, most of my cash is in SGov. The only reason to hold some straight cash is if you might need to trade after hours or want to buy crypto during times you can't sell SGov. Yeah, or the futures aspect of it. I mean, play around with it, right? Like, you'll see what I mean. Like, look at your account, look at your numbers or whatever, do an MNQ future. I mean, not if you don't already trade futures. If you don't, this is not the reason to start. But if you're already trading futures some, right, and maybe you're on like the Il Coleman program where you're doing 30 to 60 MNQ trades, and that's before lunch, right? And that's only the first phase of that program. Like, once you do all three phases, I mean, it's pretty much around the clock type of deal. And so take a look at the cash impact when you do a future trade. You're going to see you don't get the relief that you do with options trading and things like that. So just be aware of that. But Brian Dowdy says, wow, that MU is printed well for Dr. J. Glad I put him on that one. Okay, Brian, thank you, my friend. I'm glad I got to this comment before. Wow, the show's almost over. Wow, guys, it's so fast. You have no idea. No idea. But I appreciate you, Brian. Thank you for giving me this trade because I didn't know who it was. And this is very, very helpful. And so, again, Brian Dowdy, thank you for the trade. I appreciate you. I'll take it from here with all the profits and, the taxes and things like that. Don't worry about that part. That part doesn't concern you. And so let's see, Tomas in the house, the GOAT at Tasty Trade. Good to see you in good order, Doc. I appreciate you, my friend. I don't know that I'm the GOAT at Tasty Trade or Tasty Live or Tasty anything. I did make a pretty mean pecan pie back in the day, and I've shared these stories before. But I had a 9-month stretch, man, when we were in Charlotte. So this is before we were in Chicago. I was teaching, undergraduate finance classes and MBA finance classes at a small university in South Carolina. And we lived in Charlotte. And, man, I don't know what got into me, but there was an 11-month stretch. It was 11 to 24 months. Man, I was in it. I was in it when it came to baking. I was doing cookies. I was doing pies. I'm soaking lady fingers for tiramisu. I did the whole thing, man. And I used to bring them to my classes to give them to my students, just kind of fatten them up before the slaughter type of thing. And so they appreciated it until I dropped the hammer on them with the quizzes and the exams, the impromptu speeches, things like that. But then I got so good at my pies, actually, I was selling them to our neighbors. I had neighbors coming by the house for the pies. It was amazing. And so, they were pretty good in my own mind. I think I saw somebody vomit in the yard though. And so that may have been not the greatest sign ever, but anyway, I digress. And so, it's a Thursday. So this is kind of what you sign up for. I mean, tomorrow, if you think today's off the rails, man, don't come back tomorrow because tomorrow is going to be totally off the reservation. But let's see. Oh, Brian Dowdy says, also glad I didn't do the opposite of him. That's right. It was your trade. So you can't do the opposite of your own trade. Or you can't fade yourself. I mean, that's some George Costanza stuff. Let's see. Ron Vachar, nice P&L. The Hunt brothers can't hold a candle to you. No, they're struggling today, man. Again, keep your eyes out. Like, keep you guys out for some coupons and some discounts. You guys might be able to get, kind of like a BOGO, kind of like a $4.99 hot and ready type of deal. Let's see. E-Media, hey, Dr. Jim, did you purposely take off on a Red Wednesday? Welcome back on green. Hey, I've done this before, man. Like, you guys think I'm a rookie? Nah, man, it's been almost 10 years. It's been almost 10 years. Scrum everything. I told you guys Dr. Jim was on the Starbucks tour to pump up the stock. Look at it go today after his spending spree on pumpkin spice lattes with that extra protein powder to pump the profit margin. I'm not a PSL guy. I've never been a PSL guy. But again, I'm all in on the C plus coffee, though. I am all in on the C plus coffee. It's got a little extra mold in it. Like, kind of makes you extra thirsty when you get done drinking it. Like, it's like, this is not very good stuff, but I'm going to keep coming. I'm going to keep coming. So let's see. Night moves. That's right. It's my trade. There you go. People fighting over it now. Brian says, check the receipts. It's me. Yes, I know that it was you, Brian. I remember now. Theta Trader says, you get Kohl's Cash, Brian Dowdy, and an expired Dairy Queen coupon. That's what I'm saying. Right there. And then away from the numbers says, hey, Dr. J, heading into the festive season, coming to an end of my first year trading options. A big thanks from the UK. To you and the peeps on this chat for help and guidance through the year. Man, you are welcome, my friend. Thank you so much for being here. I just appreciate you, and I appreciate all you guys. If I didn't get to you today, please come back tomorrow. Come back tomorrow and drop your comment in early because I try to go through them sequentially after we get through the surprise and delight phase of the show. And so I appreciate you guys. I got to go and get you to Tim, though. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
I got 'em all shook up for me. I got 'em all shook up for me. I got 'em all shook up for me. Look at me, I'm walking my legs, do all the talking, got to watch yourself, keep your head straight. Find me on the runway, sleeping on a Sunday, I'm on the track, but yeah, I'm running late. Got my head in the clouds, my feet on the ground, the pavement's hitting back, got 'em under attack, but I got round. Wrong way on the one way, tune in on a Monday. Love the song, but baby, I'm the sound. I'm taking over. Just take a look at me. I'm breaking rules, got it under control. Got 'em all shook up for me. Look at me, I'm working, I'm never ever hurting, 'cause I love the body, yeah, I love the frame. Spot me on the billboard, call me, I'm your ringtone. I'm on your phone and yeah, I'm in your face. So drop me a line, keep me in mind, listen up, 'cause I'd advise you to trust, 'cause I got an eye for the best. Oh, I'll tell you all my secrets if you think that you can keep 'em. I'm taking over. Just take a look at me. I'm breaking rules, got it under control.
Good afternoon, everybody. Tim Knight here, and we have a green day for a change. past 4 days in a row, I think we're down. And the bulls got kind of a 1-2 punch reprieve. One was Micron yesterday. They came out with their earnings and the stock zipped higher by, I don't know, 5% or so. And the other one, much bigger, was this morning. The CPI came out, and I think the expectation was an annualized rate of 3.1%. It came in at 2.7. And so this fed into the narrative of, oh, they'll start slashing rates next year aggressively, and stocks will have no choice but to go up. So at the moment, we're up about 400 points on the NQ, which is the strongest index. The weakest one is the Dow, which is only up about 0.25%. But it is green across the board. And palladium, of course, is up again day after day after day, even though silver's down 2.25%. So a mixed bag there in metals land. So we're down in the countdown mode. I think there's only like 8-9 days left, maybe, this year to trade. So let's catch up with the charts together. We begin with the spider, which, in spite of all this good news, there's not a lot going on. The past 3 days, well, you can see we've got 5 red bars in a row. And all the red means is that the present price is lower than the open. But we have been slipping away from our last attempt to get to lifetime highs in December 11, just little by little slipping. We had a nice down day yesterday. That's been largely undone by today's bounce. But as you can tell, and let's just add a little line here to roughly mark out, you can see that we've stayed the past 3 days under this little blob of overhead supply, and we've probably passed the last meaningful data point of the year. There's no other really big events, and obviously no big earnings events coming. It's going to be just kind of drift at this point, except for some shocking exogenous geopolitical stuff. The small caps IWM are up about 0.72%. And we can see here that the past 3 days have also been below this line and this little blob again of overhead supply. This has been subtly slipping down. And I went ahead and shorted IWM early today. It's looking more vulnerable than the others. I would certainly rather be short this than, say, well, even the Dow at this point. So yeah, that's ETF short there. And the cubes, as I mentioned, thanks largely to MU and its positive effects across semiconductors, the cubes are up 1.57%. Kind of an inside day here. Big red day yesterday, closing pretty much at the lows. And at today's high, pretty much matching where we were at yesterday's open. So kind of a control Z on yesterday's drop. But we've got a doji right here, a lot of uncertainty going on. We're basically trading now where we were at the open, even though we've had some dynamism above and below that. But the culprit here is Micron. And excuse me, I said 5%. It was much more substantial than that. It was a 12.2% gain right now. It did not make a lifetime high in spite of a very, very strong report, but it did blow higher. I had been short this, and sadly, my profits on the short grew and grew and grew and grew and got nuked. I think I wound up probably with a $10 profit on the position once I was stopped out this morning right at the opening bell. I actually re-shorted it a little later into the morning when it failed to make a lifetime high. And as we back away here, that's a pretty decent stop loss level. We'll see if we can start to break down again, because MU has gone up hundreds of percent since only, 7 months ago? Hundreds of percent. So we'll see if it can sustain this rally, or if today's kind of a one-shot deal. It's a little encouraging that even with like a nearly 13% gain on MU, another short I've got in the semi space, Intel, is up all of 1.11%. Very muted rise, and another red bar here. So you can see with Intel, it has continued to slip lower. So yes, Micron had a positive effect on that, but very watered down. Over in AMD, kind of the same thing, not quite as fractional of a gain It's up 2.18%, AMD is. But once more, we're below the open. We're well off the highs of the day. And this is only about like a sixth of the sort of blast off that Micron had. So all in all, as you look at SMH, kind of blend them all in there, it's just under a 3% gain. Nothing transformative about this. I mean, if we hadn't known any of this stuff and weren't talking about Micron or anything like that, just looked at this chart today, it's a total meh. It's a very small range. It's not really moving in any particular direction strongly. It's just kind of there. Yesterday, much more exciting. So Micron, biggest news of yesterday, and really didn't amount to too much, except for a brief reprieve from the sell-off we had yesterday in tech. Now, over in precious metals land, interesting stuff going on. Gold is down. Earlier today, it exploded higher, and it just as quickly exploded lower. Bitcoin did the same thing yesterday. Bitcoin went from like 86,000 to over 90,000, back to 85,000. Gold did the same thing today, although not quite as quickly as Bitcoin did. It was going to have a go at lifetime highs here, but it didn't quite make it. Here's GLD's lifetime high, still back on the 20th of October, lunged up there, and then down we go, and so it's down 0.3% at the moment. So it still could cross it, and that would be very bullish. This is a very good-looking pattern. Hasn't quite gotten the gasoline there just yet. Silver, for once, is actually down. We are down not quite 2% on this. Lifetime high was yesterday. So we've kind of undone yesterday's gains, but a sensational year for silver. All the same, 2025, just a banner year for metals. And my old friend palladium, here's PALL, which can't seem to have a sell-off here. We're up again, 3.16%. And to my eyes, what we're observing here is very similar to what we were seeing here, which was a long, steady basing, and finally we hit a release right here. We hit the escape port and had a couple of weeks of a very strong rally. Not even a couple of weeks, probably about 8-9 days or so. And we've got the same thing going on here. I think / hope that we do get a sell-off at some point. Getting down to around 140 or so seems pretty simple and would be a pretty clean place to find some stability. But as you can see here, we have this tremendous cup with handle pattern, whooshed higher, eased back, found a new higher range, and then whooshed higher yet again. So between silver and gold looking a little bit shaky, maybe palladium will finally get a sell-off, but palladium has finally had its day in the sun. However, Bitcoin, once again, doesn't. BTC is down pretty modestly for Bitcoin. It's down $720 and no data available. Oh, really? Seriously? Let's try that again. If I blow on it. Okay, there we go. So this has slipped pretty steadily from its early October peak. We got up to almost 128,000. And then we have gone tumbling tens of thousands of dollars below that. Tom Lee, the famous analyst from Fundstrat, who's on television about every 12 seconds or so, he boldly predicted a end of 2025 price of $250,000. And we're at about a third of that right now. In spite of that miss, everyone's asking him, well, what next, Tom? And now he's saying new highs at the end of January. Okay, so somebody says, X, and it turns out to be X divided by 3, and then you're eager to hear more. I don't get it. But anyway, I don't think we're reaching $250,000 on Bitcoin in the next few days. In fact, I wouldn't be surprised to see it in the 70,000s before too long. But yeah, that's BTC. In Ethereum, which I believe the aforementioned Mr. Lee has a big stake in with his own company, is also weak. We're down about 0.5% on this, and this has slipped from around 5,000 to about, not half that much, but about 40% less. So yeah, that is crypto land. And our old short idea, DV, just as the gift that keeps on giving, down again, 5%. Once it broke here, which was like 200% higher from these levels, down we go. So that has been a fantastic right triangle top, just one for the textbooks. I finally shorted Costco earlier today. I wasn't thrilled doing so because it had already fallen so much, but it's such a big pattern and it's such a nice pattern. I decided to just give it a shot. So this is a small profit on this so far. We're down today 6.33, not quite 0.75%, but you can see here just a terrific right triangle pattern on this one. So I'm feeling pretty good about Costco. Continue to be short Oscar. I'm short, I got 30 different positions right now. I got blown out of MU, like I said, but I got back in again. Oscar, another good day, 4.55% negative on OSCR. A real favorite of mine, Progressive. Boring, dull, PE of 12, old insurance company, yawn. No, not yawn. I think it's terrific. I really love this chart, especially if the drawn objects would not move. So there's PGR right there. Let's dip this down a little bit more. We got a nice gap down earlier this week. So that to me is just a really lovely reversal pattern. Months and months and months of overhead supply acting as a defensive shield for the bears, and precious little holding this up considering the very rapid rise this thing enjoyed. Another item which I believe did earnings last night or this morning, which I'm also short, is Accenture, ACN, which is down about 1.25%. Hope no one's getting epilepsy watching this screen here. There we go. Okay, so there's ACN. It opened much weaker, but we are still down on the day, and it's got a pretty cool top two, like so. Round about that, like so, and a couple more. HIMS, HIMS, continues to slip lower subtly, about 0.5%. And yeah, that's just some odds and ends from the short portfolio. As I said, I've got a sneeze coming. Let it pass? Okay, good. But yeah, that's just a few. They're mostly green, obviously, on a day like this. You know, we're up 416 now on the NQ. Very good day for the bulls, so the shorts are bleeding out some. One long idea that I'm in that I continue to really like and is having a really good day is Rivian. I had been wringing my hands over this one because it has had so many fake outs. But I got to tell you, I'm sick and tired of seeing them on city streets zipping by, and they look so good, and there's more and more of them, and the chart looks terrific. I just had to be a part of it. So we'll see if this works out. But Rivian, a very handsome looking long-term chart, very tricky. It does tend to jump about quite a lot, but having a good day, 13.3% plus on Rivian. So just to wrap things up, the RTY, the small cap futures, not doing too much of anything right now. But as I said, I think that we will be slowly slipping away, especially with so little to compel any more buying for the rest of the year. And the NQ having a much needed relief rally today. As I say goodbye, we're still up a little over 400 points, but I think the Micron / CPI effect will be spent with the closing bell. All right, I'll see you to wrap up the week tomorrow, last full week of the year, and thank you as always for coming by. See you soon.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
We are back, my friend, and it's been a continuation to the upside all session today. We've got E-mini S&P 500 futures at up 65 handles right now. We're at 68.44, just a couple ticks away from that 68.50 magnet that we've had for quite some time. We got as high as 68.72, had a brief sell-off middle of the day, but have since rallied back from there. NASDAQ up 410. You got the Dow up 173 and the Russell up 22. Everything pretty strong today. The Dow being the weakest of the group relative to everything else. NASDAQ outperforming up about 1 2/3%. Oil has had some two-sided trade, including the overnight session, basically unchanged right now. 55.90 up 9 cents. Volatility futures have finally kind of gotten taken out here. /VX 1816 right now, down 58 cents, about 3%. We're at the lows of the session, about 10 ticks off the lows of the session here. Bonds up 15 ticks, 115.23 here. You got gold and silver both reversing kind of the move today. Gold only down 7, silver down 2% here, a little over 2%, $1.45. That gold silver ratio really coming in today. If you've been playing that. Bitcoin as well has had a wild range, about a $6,000 range here. We were up at 89,000 on the futures. We're sitting at 85,000 here, back near the lows. Spot as well, down 1,900 if you include the overnight session. So you've definitely seen that 85 to 90K range be the spot there for Bitcoin. But overall, strong market. I mean, yesterday was a tough session. Today we've reversed the entire thing.
It's been crazy.
Yes.
It's been a tough week, really. 4 big red days. Yeah. 4 big red days in a row after that rally, and now we're seeing a reversal after some data came out this morning, and that kind of sparked the rally. But we've had, of course, a nice intraday range here. But yeah, I've been pretty sideline oriented in this portfolio. Although I did place a FedEx earnings trade to the upside, my favorite. Just a little tiny, real small 300 strike calendar spread, long the 8-day, short the 1-day for 80 cents.
Ooh, a cheapie. I like that.
Real cheap, yeah. Because you can reduce basis by like 90% on the long option by selling the 1-day, because IV is just really low in the back weeklies and month. And I did a similar thing in Nike. Nike did a 70 strike calendar spread, long Feb, short the 1-day. So yeah, we'll see what happens, but just looking for inside up moves in both of those. Maybe we'll get some good numbers, and if not, the FedEx one is super cheap, and the Nike one got a month and a half to figure it out. But yeah, it's been a wild ride. But yeah, both of those are earnings after the close today.
Yes, they're pretty much the last ones. I don't think there's much going on the rest of the year here. I know we have 2 short weeks with the holidays, so I think this week will probably be the end of kind of the big moves in either direction. Are you still in the Santa Claus rally standpoint?
I have to be. You know me, I'm pretty stubborn.
I
know. Maybe this is the beginning of it, because it's Thursday. Tomorrow, maybe see a little small continuation. Volatility is really low.
Yes.
And then next week is Christmas. So if it's going to happen, it's got to be next week, right?
Per Mr. Vecchio, it's only the last 3 trading sessions of the year, which are right after Christmas.
So it's a Santa Claus catch-up.
Yes,
rally.
Exactly. Santa, as he's on his way out from delivering all the presents, he brings good fortunes to the stock market. From my Taiwanese sources, today was a big volume day, as you can see. I mean, the E-minis traded almost 2 million contracts today, so it's been a pretty high volume week altogether, and we've had some two-sided action, which will lead to a lot of volume as well. But we had about 11 million SPY contracts traded, 6.2 million on the Qs, 4.5 million on SPX, and almost 2 million SPUs, obviously. We had 2.8 million Tesla shares traded, as well as NVIDIA at the same number, 2.8 million contracts traded on both those. So pretty active day here. Tesla, one of the outperformers to the upside, up $19 and change here, about 4%. Today, you said you're kind of light. Are you light because you're not starting new positions, or you're just taking stuff off? Is it or a combination of both?
Combination of both. I have stuff that's working. Like I have multiple positions in SPX. I've got the Super Bowl, aka the stupid short put spread to finance a call spread. That's 2 weeks out from expiration. Need a rally there. But it's like 20 points in the money, so it'll be fine if it expires out of the money. I have an Iron Condor for Jan monthly. That's a 6,500, 7,100. So that's working nicely. I did put on the MES year-long Strangle for next year. So I have a Jan 30th end of month contract, 43 days out. The 6,600, 7,100 Strangle. Chose MES because the notional is palatable and the buying power requirement is less than $2,000. I picked up 466 on that one. I see some people in the YouTube chat maybe talking about that one or the IBIT Strangle, but basically...
Very excited people for your IBIT Strangle.
Yeah, it's been a great trade. Even with IBIT low, where it is at 48, I have the 65-60 inversion. I did have a 65 straddle that was expiring this week. Rolled it to Feb, 60-65 inversion. I've picked up $3,120 and it's marked at $1,700. So it's a net profit of about $1,400 over the course of a year. And that's with a 20-point in the money short put.
Yeah. And that's really because when you started the year, we started the year, IBIT was trading at like, let's call it 55-ish.
Yeah.
although it's had a swift move lower from where it was at highs, when you think about implied volatility is 60%, 70% implied volatility throughout the year.
Yeah.
And you start at 55, you would expect the pricing to be as if, or the pricing of the options via the IV of 60, 70, 80% would tell you that the stock, it should be, 75 or 25, that sort of thing, like a $25, $20 to $25 move. Even though we've had a huge move to the downside, you're still well inside that. You're only $15 to the downside or $10 to the downside from where you started the year. So you've been selling that 70% implied volatility all year long. And sometimes it's been realized, but a lot of the time it hasn't. And so when you net that out, you've captured 70% implied volatility where realized volatility has only been like 40% or 30%. And that's the key. It's not about where it is now and you probably had better chances to close it or do whatever. It's just an exercise in realized versus implied. And this was like a perfect example of that. Assuming it doesn't go to 20 by the end in the next 14 days.
That'd be insane.
That would be crazy.
Yeah, hopefully that doesn't happen. But any rally will benefit this position. What's interesting is it's a really nice trade. I've kept 50% of the premium I've collected, but that's with a downside move that cut out a lot of that profitability. And I never really had short delta in here. So I've been long all year.
Yeah.
And we're still like sitting basically at the lows of the year or close to it. And it's still in that profitable position because of the implied volatility. So the last week of the trading year, I'll do an IBIT anatomy of a trade, and it'll be kind of the wrap up. But I'm going to keep that on for next year because it's been a great trade. And I'm going to do the same thing in MES. So MES, same kind of structure. If I'm tested to the downside, I want to pick up bullish deltas in MES because the S&P 500 has been historically more predictable, where when you get the sell-offs, as long as you're sized correctly and you can absorb the sell-off, it has recovered historically. So I want to be positioned for that. And I want to offset any upside delta that I gain if the market, upside short delta, if the market rallies into my short call, I'll just shift the whole thing up. So that's basically it. But I'll do in the same week, so last week of the year, I'll do a more formal write-up on the strategy and the mechanics that I'll deploy. Of course, I'll have flexibility within those, but it'll be the next 2026 year-long trade is going to be the MES Strangle. And again, chose MES just because it'll be a little bit less clean because we're going to be rolling from futures contract to futures contract. But from a notional value risk to buying power standpoint, it'll be a good trade where I can hold one contract and just manipulate it.
Yeah, a lot of people trade it too. So
yeah,
it's I hear you. I think it's a good one. Some of the biggest movers on the day, you got the semiconductor stocks, SMH up $10 and change here. You had Micron earnings after the close yesterday, $26 up move. A little bit outside the expected move is about a $22, $23 expected move. Getting a little bit of a sympathy bounce in a lot of the bigger names. NVIDIA up $3 and change. TSM is another one that I've been looking at that's up $8 here. AVGO was kind of flat to up a little bit. So definitely seeing some bounces there. You got some of the big dogs like Microsoft up $8 or $9 on the session. You also had Meta as well, up $15 here. So a little bit of a bounce across the board in some of these stocks that have had a little bit of a pullback. Apple as well going green here. I saw Google was up $5, $6 at one point. Yeah. So, it's been, it feels like with the way volatility is acting and given that we have holidays into the end of the year and where we are here at the 68.50 mark, we've been chopping to pieces, and Vecchio's not going to like me putting this out into the world because he feels like the Matrix is listening to him. But we've been within besides yesterday, the closes all for December have been within 20 or 30 handles, which sounds like a lot, but that's, the expected move. We haven't had an outside the expected move from 68.50 pretty much all of December. It's just been chopping that mark on the E-mini. So I feel like we're just due to chop around there for what should be a slow end of the year. It's been a great year. I don't anticipate any massive face rippers to the upside. I don't think the 7,000 is in the cards anymore, but who knows?
I think it is.
You think so?
Yeah. The expected move in SPX through December 31st is 120 points. So that puts us.
I do it from my intuition. I'm saying my.
I mean.
I like the math side, though.
Yeah.
Platform tells you.
No, you would need an outside move for sure, given the fact that we're at 68 in SPX, but still seeing a 40-point implied range for tomorrow.
Mm-hmm.
So could be something there.
Yes. And a quick PSA for tomorrow. You do have a bunch of dividends coming in, like SPY, the Qs. I think IWM has one as well. I think the Diamonds is the funky one that's like next week, something like that. But if you have short calls, check them out right now. It's probably going to be somewhere around like $1.70, 80, 90-ish, depending on depending on where we close here. So just check your options. If you got stuff that is in the, expiring tomorrow, which is a monthly expiration, you probably should have rolled it already. If you haven't, you should probably roll it now.
Yeah, definitely get ahead of it, especially if you are not going to be around next week or the following week for the 2 holidays. You could still see big moves, but you could also see some chop, and it's just better to get ahead of the rolls, get your portfolio positioned where you want it to be.
Yeah.
Especially if you don't have as much time in front of the platform as you normally would.
Yes. Speaking of a couple things that are coming up, we still have 2 things that are live for you, the peeps. We have the Refer Friend program, which you should do when you're at your holiday dinners. Tell your friends and family they should be opening an account, and if they do, not only will they get money, but you'll also get money.
Correct. $100 for each party if they open an account. And all the information's on that QR code if you want to scan it, or just go to tastytrade.com/referral. It's pinned at the top of the YouTube chat, so you can get that very easily. It gives you instructions on how to find your referral code as well from your Manage tab on tastytrade. So, yeah, share the merry spirit, if you will. And yeah, it is nice that both parties get $100.
Yes. We also have the money match, which is still going on.
Yeah.
Does that end in January?
It is ending December 31st. So yeah, end of this year, 1% cash match, 30 days commission-free trading. Another QR code for you to scan if you'd like.
Yes.
But yeah, that's another good one, especially for active traders. The 30-day commission-free trading part of it. If you're doing like the 0-day or 1-day stuff,
yeah,
it all applies. So check it out.
Awesome.
Cool. But yeah, I'm interested to see where Nike goes after the close today.
I've got a little bit of long delta there.
Yeah, I mean it's just like I can't think of a bullish case for it other than
that's why it has
down.
To go up.
Yeah, other than it's just been beaten up. FedEx though will be interesting. They always seem to post good numbers. Just depends on whether the market digests it well or not. But yeah, I think going into next year, I am definitely interested in seeing how the NVIDIAs of the world pan out. You did mention SMH today, up $10. It's kind of crazy.
Yeah, big
3% move. But yeah, next year could be more of the same. I mean, we've had a pretty volatile year, all things considered. Even though the VIX is low right now, we've had 2-sided ranges. We hit a low of sub 5,000. Hard to believe. Hard to believe for sure. But now here we are, sitting pretty at 68 and change. Where do we go from here? Up and away?
We will see.
Interest rate cuts projected. Weird data coming out sporadically.
Data's back.
Yeah.
We got some this morning. But yeah, I'm with you. Who knows? E-mini's up 66 here. NASDAQ up 421. We did a number of opening trades today. I also put a bunch of Johnny trades on that are on the follow page too. So if you want to check those out, it's in the platform on the left side. I just closed out the diamonds call spread before we got into the booth here today for the last call. We put on a little bit of a short delta lean butterfly in Micron. We did a short put spread in Oracle, and we did an iron condor in the Qs, and we've got a number of different positions on. We've been doing those trades weekly live, which is fun. So I get to get some input from my dad there on some of his thought processes between those trades. So check those out if you're looking for a couple small trades here. But for the most part, my trades today were closing orders. I closed out of a lot of short puts that I had sold, a couple of the earnings trades in MU, and I've been trading a lot of Robinhood puts. I've been trading, I had a new position in HUT that was from Shark today, from trades from the research team. But other than, you remember that. You remember trading that.
Yeah. This was at like 0.
It was at 0.
Great. Now it's at 40. This was a bag.
This was a bag.
I'm sure I had 100 shares of this.
I think I made you close it. You can blame it on me. It's fine.
Oh man, I'm almost positive I had 100 shares of this.
You definitely did.
I'll have to look back.
But yeah, I think I share your sentiment as we go into the holidays. Light trading, maybe you lighten up your positions and enjoy some time with family.
Yeah, I did have.
Are you looking back? How far back?
2023.
All right. What'd you close it at?
So I sold a put. I sold the 11 strike put for $2.50.
Okay.
Took the shares at 11, and then it reversed split, and then I closed 20 shares at $10. So it wasn't that. It was a reverse split. So I lost a fifth of my share exposure.
Yeah.
So it's not as bad.
You would add 20 shares at 40, whatever it's trading at 40.
Yeah. Okay. So that's not as bad.
Yeah. You can't beat yourself up for that.
No. But yeah, nice to see. You can go back in your history if you really want to dig the knife.
Oh my God. Can you see it? Oh, it's still on this is.
Well, no, I went to my transactions and then I changed the custom filter to 2021 just to capture everything over the last 5 years.
Yeah, but you can get it because you haven't traded this since. So you can see Mikey's
in my follow
Homo
page?
bag. That's amazing. So this is it. I wish we had the year on there, but this goes back a lot of time.
Did I comment?
Yeah.
Yeah. Closing 20 shares after 5-to-1 reverse split.
Yeah. Oh my God, that's too good. It's okay, you can't hold them all.
No.
You really wanted to, you would have had that line item there for 2 years waiting for this.
Yeah. Which is fair. I still have shares in Under Armour. That's a bag.
I don't know if you have an angle on that one. I don't know what your long thesis is there. If you're not long Nike, come on.
Yeah, I have Under Armour, Snap, and then I have SMR now. SMR is my new bag of 2025.
Yeah, I just got in that with TP on Tuesday or Wednesday. We have it on Wednesday? Yesterday?
Yeah.
I forget when we had them on.
But yeah.
Sold puts and I did a call diagonal spread, so I'm long with you.
Yeah, this one's crazy, but this is again just a lesson in sizing. Like I can hold these shares forever. It obviously sucks that it went from 40 to 15, but what are you gonna do?
Yeah.
But I do have 100 shares. I can sell premium against it when it makes sense to, which is into rallies, but we're not seeing that as of right now.
Not seeing much of anything. You got a little bit of a sell-off here from the highs down to about 12 handles here on the E-minis. We're at 68.37. NASDAQ up 399, 400-ish here. You've got the Dow up 112, the Russell up 19. So kind of choppy into the close here, but nothing too spooky here. It's okay to take a $10 down move here. In terms of some of the biggest movers today, or at least the high option volume lists, Rivian, Rocket Labs is on there, Micron, of course. You have interest in any of those?
Rivian's interesting just because Tesla is so high in price, but so is Rivian now.
Yeah, it's
doubled in price over the last month. I mean, these things are just so volatile. It's wild, but yeah, I was perusing the S&P 100, the Nasdaq 100, just looking at like big moves to the upside and downside, but nothing has really spoken to me in terms of I need a position in this right now. It feels like I kind of want to manage the positions I have and then adjust and roll out to next year, and then kind of start fresh with a new mind for 2026. But
I like it.
Yeah,
I like
I've still been active. I mean, I haven't been inactive. I've placed like 7 or 8 trades over the last couple of days, but
you don't have to catch. You don't have to catch every single move.
Yeah.
No, that's not. That's okay.
Yeah. But yeah, I'm long oil. I have a long oil contract, and then I threw a call ratio on top of it with the shorts.
You like
right at my break even.
the micro MCL?
Yeah.
I got a couple of those as well. I'm like around 57, I think is my kind of cost.
Yeah, I have the MCLG long contract, and then I have the 55-57 call ratio on top of it, and my break even on the contract is right around 57. So when MCL was down 2 days ago at 55, I threw on the call ratio just to get to break even and still be profitable on the overall package with no additional risk to the upside. So that's one of the tactics you can deploy if you have a long contract or 100 shares and you are seeing losses. You can throw on a call ratio.
It adds upside
Yeah.
potential to a point without adding downside risk.
Correct. So yeah, that's what I did there. And as long as we stay around 57 or go above it, it'll be a $200 winner instead of a break even.
I like it. I'm gonna scalp out of these IBIT calls.
Ooh.
I mean, I am long shares, so I am not a happy camper, but every time we've had these morning face rippers, I've sold calls into them. And like I sold these at 90 cents this morning, and I just closed them at 53 on a small little consolation prize. Doesn't help my position, but it's been a good two-sided trade if you're, selling out calls into that up.
Yeah, especially because there's still, even though we're near the lows of the recent trading session in IBIT, there's still plenty of premium there. And if you look further out on the time frame, you can see that there is still call skew. So we're sitting at 48. If you look at the 40, 56 options, the 56 has 20% more premium than the 40. So still getting paid to sell the calls, and that's especially true into the rips where you get that implied volatility infusion. So yeah, I like it.
As we limp into the close here, E-mini's only up 50. You've got the NASDAQ up 350. Just to give you a list of some of the names moving today to the downside. You have ConocoPhillips in there. You have like PG. I'm looking at the S&P 100 list here. Wells Fargo's in there. PayPal, that's a pig of a stock. John Deere on the upside, the biggest moves. Starbucks having a big move today. You got like Palantir and Tesla in there. GE, Amazon, Meta, Nvidia. You got some big names to the upside from some kind of non-trading focused names to the downside. I don't think anybody's trading ConocoPhillips puts or something like that. Maybe they are. I don't know.
I'm sure there are people out there selling those puts.
No problem.
Yeah. But yeah, I mean, it's been kind of a muted day. After the rip.
It was a gap and nap.
Yeah, gap and nap. There you go. I like that.
Gap and nap. You get the big move up, or at least you have the overnight session. You get to the highs, and then you nap all day right there.
Yeah, but I am intrigued to see. We still have 50 points through tomorrow, which is odd to me, considering we gapped and napped today, and there's not really. I mean, we have an expiration tomorrow, but there's not like much news out here. You know what I'm saying?
Nike earnings comes out in 15 minutes. We'll have FedEx coming out just here shortly. But that was our bell. We're going to take a quick little 90-second break, come back. Chris Vecchio, Ilya Spivak up next for Overtime. You're listening to Tasty Live. We'll see you tomorrow. Peace.
Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Got trader's block? We've got the cure. Get data-driven trade ideas with cherry picks. Our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Stocks have a topsy-turvy kind of day. It's Thursday, December 18th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We're here to take you through the next 30 minutes or so as we wind down the trading session. And what a trading session it was, defined by large trading volumes once again, more than 2 million contracts traded in SP options, ES options here, Ilya. That's a big day for any day, but it's big particular because it's a CPI Thursday. The CPI report that one may look at face value and say, rate cuts are coming, inflation's down, well below expectations. Au contraire, mon frère, as some may say. We see that rate cut odds barely move, 24 to 26% chance now. Stocks, they do rally a bit, but don't hold on to all the gains. S&P up by 0.7%. The NASDAQ up by 1.3%. Dow barely squeaking higher, just north of 0.1. And Russell up by 0.6. Bonds continue to move up, though, as some of this data is not really giving people confidence about the direction of the economy. Both bonds and notes post decent performances as today goes on. And maybe, just maybe, Ilya, they're beginning to break out again. Gold and silver had disappointing sessions after gold topped $4,400 an ounce for a brief few sweet minutes in time this morning before that nasty near noon sell-off struck down the metals as it did with equities. Gold off by 0.25%, silver off a healthier 2.4%, although both remaining in their channels, and copper continues to move sideways. Finally, oil here, Ilya. It's a bit of a bump today, although again, with war looming in Venezuela.
Maybe.
Nothing doing here, up by 0.16%.
Yeah.
Quick correction from Frank. Maybe I misspoke there. It was futures traded 2 million contracts today. SPU options traded 386,000 contracts today. Thank you for the correction, Frank. Either way, though, the point is that it's big volumes right now in the market. And we have this reversal intraday, Ilya. So with the close that we have, with the data that we've seen, the sum of all the data doesn't really give us anything new. What's going to define the market narrative now? Because you and I, after today, will be going into, are you off the next 2 weeks, taking any time?
No, I'm here.
I guess we're going to be doing overtime next week then. Well, that's nice. Never mind. But what do you think is going to change the narrative the next 2 weeks, right? Because as we go into this end of the year, there's no more significant data releases, no earnings. Do we have to wait for a tweet or a speech from President Trump? Is that really it?
Well, I think this is really the key thing here is we've seen the markets really focus on the Fed. And we've seen it roundly ignore AI type things unless those AI type things are negative. Because it's focused on the Fed and the Fed isn't giving the markets what the markets want. We saw the markets wipe out last week after they thought over the FOMC announcement. We saw them wipe out this week in the wake of the NFP data. They got a little bit better footing after CPI, but we're watching them fade off that, and much of it has been erased. Not all of it, of course. Still a healthy-ish up day for the S&P, up over 0.5%. But a very different story and a very telling rejection of where the thing runs into a wall. So as you look at all of this, you go, okay, so where has this landed us? Well, basically on Friday of last week. Because if the bottom line is that the markets didn't get what they wanted from the Fed and there's no further news, the default has been risk aversion. Now, what's interesting is that the markets are not seemingly, let's call it, held back from selling by the padding of their own high watermark. Because obviously the markets have had an epic rally from those lows in April, and surely lots of fund managers and other people that have performance metrics that are going to lock in on December 31st. Those folks, if they've been long, and obviously looking at the market, most of them have, then they don't want to get paid on a lower P&L number. They want to get paid on a higher P&L number. And so you kind of have to think about this in terms of whether these people have optimism about next year, and so they're willing to ride into it and try to max out what the snapshot of P&L is at the end of this year. And that should preclude selling. Or they are worried enough about next year that they want to lock in these gains because they don't think it's going to be a fat one next year. Hence the selling. So we're going to watch sentiment here very closely. And the way stocks behave, if Friday was any indication, if the aftermath of NFP was any indication, if this sogginess after CPI is any indication, the path of least resistance points in a risk-off direction, points lower for stocks in particular. And if that's the case, then we're going to see if it gains momentum or if it just idles for the next 2 weeks. Because if it gains momentum, there's something to be said there about people wanting to take their money off the board, not wait to pad their high watermark, not wait to get to the other side of the calendar year, but expect that we could start next year off rocky.
The downtrends that we're trying to be broken out of in both ES and NQ remain in place thusly with today's action. 25,227 here in the NASDAQ, another lower high. Ilya can't quite break that sequencing after we top out right around our Fed meeting in December, which you pointed out today on the show, just not dissimilar from what happened at the end of October when the markets decided.
Yeah, look at the recent highs in the S&P and tell me where the Fed meetings are. Right there and right there.
Right there and right there. So it's a tough day for stocks in that regard, where you do pull off, and 68.50 or so seems to be a line in the sand. What I can't wrap my head around still, and I was saying this earlier with you, when the market was 15 points higher. So I don't, and still in positive territory.
Yes.
S&P was up like 1.1%. NASDAQ was up closer to 2 when you and I were together a little over 90 minutes to go. Volatility still hadn't perked up. And so the VIX, we don't quote in percentage terms, but it's down nearly a full point today, 88 cents. We go over to the volatility futures, Ilya, down 44 cents. This for the VXF6 contract. If we squint, you can see it. It's a new cycle low close. The low yesterday was 1820. Today we're closing at 1819. So it's not just that we broke yesterday's low, like we broke yesterday's low and closed below it. Vol isn't going anywhere. Is this symptomatic of the end of the year in your view? Or is this one of the reasons why bears are a little bit frustrated right now as bulls are finding themselves?
I mean, I think you look at this and you go, okay, you got through event risk this week. I mean, just look at the past several days of vol. It hasn't gone anywhere. Did this decline in vol preclude us from having a big sell-off on Friday? No. Did this fall in vol preclude us from having a big sell-off in the wake of NFP this week? No. So I think it behooves us not to be single-minded here, but to look at the price action and actually consider what's occurring. We had a big sell-off yesterday. Vol do anything? No. In fact, vol has been basically flat for the past 4 days before today. Today, it finally has something of a down move. But for 4 days before that, it did nothing. In those 4 days, what have stocks done? On net, they've fallen like a rock. And so, on one hand, it makes sense that vol is a little bit lower today because we are through the week's significant event risk. Things come down from here and ostensibly come down through the end of the year. But all of that said, are the markets finding this vol crush to be anything that encourages gains? No. Markets have been sinking through the vol crush. Maybe this is just year-end shenanigans in vol rather than anything necessarily indicative of where things are going on near-term sentiment.
Near-term sentiment still not getting a bid. Bitcoin here, God.
Yeah.
Can't hold anything.
Just get through the range bottom so I can sell some more. This is about to be a down year.
It's so interesting.
Bitcoin.
Yeah, well, Bitcoin, Ethereum.
And Sailor is out there talking like he's gone full tilt.
Yeah. I saw something on, well, maybe it was Twitter or Reddit. I don't remember, but it was Sailor had posted a photo. He's like, I'm back in New York. And it was a photo of him like on the top of some skyscraper reading the newspaper. And it's very clearly AI. And people were commenting on it like, dude, can you please go back to fixing the share price instead of making AI images of yourself in the city?
Full tilt.
It's like, okay, he's on full tilt.
Full
Bitcoin
tilt. There was a video of him yesterday. There's a Twitter account that follows just what he's doing. And there was a video of him yesterday. A friend of the show here, Tim Knight, retweeted it. It was him basically saying that every billionaire is going to run out and buy $1 billion of Bitcoin. So you got to load up now before the billionaires front run you. I'm like, yeah, look at this chart. Those billionaires, man, they're front running everyone down.
The downtrend, downtrend from front running everyone down. The downtrend since the October high remains in place. You see here that we couldn't get through 95.
It's been an ugly year for crypto on a year where you've had a historically bad performance for the U.S. dollar.
Bad performance for the U.S. dollar.
Some fiat alternative deficits. This digital tulip is.
All right, relax. Okay. 90K after
my naysaying knows no bounds, as you know.
After losing the uptrend off of the swing lows that you have in October and the start of, in November and the start of December, we've treated 90K now as a new line in the sand. Maybe it's these $5,000 increments, Ilya, but 90K seems to be that line in the sand now, akin to how 95 was, where we couldn't get through the downtrend off of recent highs. We tried to. We wanted to redraw it there. 95 is resistance. Now 90 is running into that same trend line again. Yeah, it seems like tough sledding. So, a break of 84, you probably look at 80, and then 85 is going to be your new resistance line, which you could already see over recent hours in crypto. Where are these lows being carved out? Right around 85.
It's starting to carve through.
It's stair stepping down in these like $5,000 increments. So you talk about sentiment being rotten here and not really improving. This time last week, we were discussing the AAII investor sentiment survey because we had seen such a big surge in recent weeks to swinging wildly bullish. That started to change. Okay. The week ending yesterday, December 17th, we see that bullish sentiment is 44.1% to 33.2%. Bulls versus bears, with the rest being neutral. Last week, it was 44.6% to 30.26%. So it's a 3.1% swing net bearish, with additionally another 2.1% of people becoming neutral. So it's a fascinating mix, Ilya, right? You see that 2.1% fewer people neutral. So people a little bit less bullish, but people that were neutral are becoming more bearish, perhaps. It's just overcooked. The 1-year high in sentiment is 45.9% in the AAII survey. We're right there. So Bitcoin's struggling. Sentiment is already running high for equity investors. I mean, is there a wall of worry anymore?
I mean, it depends what the wall of worry represents, right? You can climb a wall of worry if, from a sentiment perspective, people want to sell you stock and you don't think it's a big deal, these things that are occurring. And so you have stock to buy, right? This is how stocks sort of psychologically climb a wall of worry. There are new buyers that come into the fray because they find a discount. Whatever negativity comes out creates a discount, and buyers in excess of those people already long or people looking to allocate more long come out and go, nah, bunch of nonsense, and allocate more. So that's all well and good if there is that extra buying. But what we're seeing is the opposite. And I would argue the reason that we're seeing the opposite, and the AI narrative is a great example. We had an excellent third quarter of earnings, meta shenanigans notwithstanding. And what has that done? Nothing. Has that helped the markets? Those numbers were coming out, Tesla before the Fed, Mag 5 basically within 48 hours of the Fed, NVIDIA a little bit later. Other than Meta, the results were solid all around. Has that helped? No. Meanwhile, you get some minor headlines like, oh, Broadcom didn't forecast as lavishly. Oracle may take longer by a year to build the stuff that they were looking to build. The markets wouldn't have even noticed these headlines 6 months ago. But now, all of a sudden, these are world-ending annoyances. Why? Why don't earnings help, and why does minor news hurt? Because the balance of sentiment has shifted. And I would argue it's shifted because of the Fed. Not surprisingly, the top on this year is Fed Day. October's Fed Day.
You mentioned AI.
And the most recent top is December's Fed Day.
You mentioned AI. Tesla here quietly, it feels like. Brock, we've highlighted the artificial analysis studies and tests, humanity's last test and all those type of things. Grok is still appearing near the top of the pack for many of these testing runs. and Tesla is doing it on its own. It's not really worried about a debt bubble, is it?
I mean,
so
not necessarily. Anyway,
right? Like it's not the same situation that you're finding with the Oracle, NVIDIA, Microsoft Meta flywheel. I find this fact it's now back closing at its second highest level of the year. It obviously is a little bit of a pullback once you get into the highs we have from last December, the run up after the inauguration. So it really hasn't done anything in a year, which is not really a great story because it's done a lot in a year, including getting a sell call from Tim Waltz back in April, which I hope no one took that advice.
I mean, what's really interesting is where's the top? The top is in late to mid, like let's call it mid to late December, which is where broader stocks stop. Where's the bottom? It's in April with the Liberation Day kerfuffle, and we've just come back. So it's almost as if what this chart is telling you is gradients of Elon Musk's involvement in politics. We start the year with very involved. We get to an extreme of frustrated and involved around the tariff conversation because Tesla, of course, doesn't want the tariffs because they, of course, want to do business. And
you know what this day is?
And now that he's completely regressed and is doing AI and Grok is clocking okay, we're back to where we started. He's vanished from the political scene.
How many charts could you look at on your screen right now and go, I know that candle because that's the day the CEO of this company accused President Trump of being in the Epstein files?
Yeah. Yeah, this is pretty good.
That's which, by the way, if you panic sold, that was the low for the rest of the year. June 5th, we've not seen a move lower than that.
Yeah.
So it's
well. So
Tesla's done nothing in a year, and that does not tell that doesn't tell the
right?
that doesn't tell the story of the past year. You say Tesla's done nothing for a year. That does not tell the story. Of the last year at Tesla.
No,
this thing has been cut in half and then doubled again.
Yeah.
Right.
In the immortal words of Bullet Tooth Tony, it's been emotional.
Thinking about the winners here in the market, Tesla's been a winner here. Google's been bleeding out recently. Last Friday, I decided to get cheeky on last call and put on a long call spread. And while this really hasn't done anything but cost me money, it still feels like maybe it's got some juice in it. But Ilya, that really is the name of the game this week, where these semiconductors, they have a little bit of a better day today, but during the US session, gap open higher, trade lower during the day. NVIDIA shares, gap open higher, trade lower during the day. There wasn't much confidence during the US session. I was a little surprised we're not getting a little bit more from these markets when European traders go home. So I'll pose the question again, because you and I are going to be here next week. Yes. Perhaps some folks are going to be paying less attention to markets if they were following the 12 days of trading email series, Ilya. A few days ago, they would have gotten that piece about portfolio resets and what you do to clean up your book around the end of the year, going into the next one. I understand if people are like, you know what, I'm just going to walk away for a bit. The market's not loving the rate cut news. It's not loving AI. If I have to close my eyes and not pay attention to anything, it almost feels like being short is easier than being long right now, which means to say that if I wasn't trading every single day, I probably would be taking off any bullish delta exposure just because I feel uncertain about it. I'm not doing that because I will be here to manage it actively. But so the first question, what is the prevailing narrative now for the next 2 weeks post CPI, NFP, Oracle, Micron, Broadcom? Where are we heading for the rest of the year?
I mean, I can tell you what my prevailing narrative is, and that's clearly that the markets want cheaper money next year. They're yelling at the Fed louder today that they want it. If you look at what they're pricing in for next year, we're out to 61 basis points. So we are now 11 basis points into a third cut being priced in. It's not better than even, but it's up to 44% chance. That's pretty nice at this point. In fact, that's the highest amount of easing that we've had in the outlook here since really the beginning of this month. December 3rd was the last time we had over 60 basis points on the board for next year. Meanwhile, the Fed is saying 1 and is being real coy otherwise, saying, yeah, we don't really have any confidence in any of this. And what's interesting is that you might be forgiven if you're the Fed for being coy, because, yeah, we get CPI data today that's a little bit softer. La-di-da. Why don't the markets run on it? Well, because this is also the biggest deviation from, let's say, the Cleveland Fed's inflation model. Since the first quarter of 2020. Now, what do we know about the quality of data in the first quarter of 2020 when everything is on COVID lockdown? It's garbage.
Yeah.
And we now have, in this data, a deviation from the most baseline of the models to the tune of 33 basis points on core CPI. That's huge. The last time it was greater, it was 66, and it was the heart of the lockdowns. So you look at that and you go, yeah, this data is probably not representative of anything. And so the Fed probably doesn't have a clear window here. So what's the abiding narrative? Markets want easing. They have increasingly nothing to hang their hat on to say we're confident the Fed's going to give us the easing that we want. Risk off. And you're seeing that play out. So as and until, that seems to be the path of least resistance.
Really, sector performance, the shakedown today was mostly positive. We like to track 25 sector ETFs here on Futures Power Hour. 13 of the 25 were positive, so that gives you a healthy 12 that were negative. That is accurate verbally, mostly positive, right? In terms of the distribution, though, the names at the top, it seems growthy to me. It seems AI connected to me. Semiconductors, telecom, tech, discretionary, utilities. Banks are back on the up and up. KRE, XLF, which have had quite strong performances. Ilya, you know, they're consolidating here. Major banks are consolidating above former highs. We have KRE, the regional banks, doing a little bit of the same thing here as well. Just zooming out. That breakout, Ilya, holding above a former swing high. If the banks are in good shape, if semis and tech are finding their footing again, if the losers on the downside are energy and staples, I don't know if the bears are going to be able to get anything going, but that doesn't mean that the bulls are going to be able to get anything going either, because clearly we've been running into a rock wall the last few days. 6850 has been the place where this market has been tethered. It was tethered there in ESZ5 before the contract rolled at the start of the week, and it feels like, okay, we're now in the H6 contract. We really like that 6850 number. Let's head back down towards there. This would be the nightmare for the next 2 weeks for me. Just directionless chop. 6,900, 6,750, 6,950, 6,800. Yeah. Oh gosh, I will not enjoy that whatsoever. But hey, we're going to have to talk about that more because overtime is out of time. We will be back next week for a holiday shortened week. Monday and Tuesday will be around. And then, of course, Wednesday, Thursday, Friday with market closures and Tasty Live not on air. Ilya and I will not be here on camera. So we hope everyone has a good weekend. And if we don't see you over the next week or so, hope you have a very nice holiday season, celebrating Kwanzaa, Christmas, Hanukkah right now, or anything in between, or nothing at all. If you're not celebrating anything, well, you know what? Good reason to tune into Tasty Live. We'll be here running videos. We're on air. In any event, though, thanks to everyone who has been watching us this year. Should we be doing that right now? No, that's too soon. You'll be back on there next week.
We're going to be here next week. We're going to be here the week after in the interregnum. We'll have time.
You're right. Never mind. No, thank you for watching us this year. We'll save that for next week. With that, overtime's
keep watching. You're not off the hook yet.
Overtime's out of time. We'll be back Monday, as we are Monday through Thursday in typical weeks. And those that not holiday shortened, 4 p.m. Eastern, 3 Central. So for Ilya in San Francisco, I've been Chris in New York. Up next, more Ilya. Macro Money next on Tasty Live.
See you there, everybody.
global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
Well, we are through the data dump. So what have we learned? And are stocks any happier for it? That's what we're going to explore here on Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And as ever, we are going to look through what the markets did here today in the wake of U.S. CPI data. Backfill here from the U.S. government shutdown in October, the longest one on record, 43 days. That continues. And we are going to have a look here at what the markets did in the wake of that. And of course, following U.S. jobs data earlier in the week, which landed with a thud, even though you might expect it wouldn't, given the contents. So let's have a look at what the markets did and see how this sets us up going forward. A little bit of a rebound here, perhaps not surprisingly, now that we're through the event risk for stocks. S&P up 0.63%, NASDAQ up 1.26%. Of course, I took this before the final reconciling for the futures markets because here we are shortly after the close. So these numbers might move around a little bit in the final analysis, but the direction is, of course, already there. The yield structure a little bit weaker today, down about 0.8% at the long end, down 0.7% at the 2-year. And that's basically a shift wholesale in the curve to something a little bit less expensive and something a little bit more dovish. Not really a meaningful response here on the whole, but perhaps something or other, and we'll take a look in a moment how this links with the data flow, but on the whole, sort of soggy. Gold, flat. Euro, flat, despite the fact that we had an ECB policy announcement overnight. They didn't say much of anything. They upgraded growth expectations a bit, but they continue to take it meeting by meeting, and the markets don't expect them to do anything, hike or cut rates next year, and those expectations were not dislodged by this announcement. Hence, euro listless. As a matter of fact, the pound also listless, though we don't have it here on the chart. They had a policy announcement there as well for the Bank of England, essentially as expected. The results there, we went to a slightly less dovish outlook for next year, but the conversation continues to be we're going to get at least one cut and maybe a second, and the likelihood of the second slightly diminished by about 2-3 basis points today. Not a big deal. So the pound also listless. Yen flat. Not surprising. We're going into a Bank of Japan monetary policy announcement in mere hours here. Early morning Friday in Japan, overnight in the US. Expectations are that we're going to get a rate hike. And then the forecast is that there's going to be one more rate hike at some point next year. So we'll go from 0.5% to 75 basis points today, and then we'll go to 100 basis points next year. One can certainly not accuse the Bank of Japan of moving quickly. So yen is flat ahead of this, but of course it is. There's major event risk up ahead, so not a big signal there. Bitcoin soggy again, down almost 0.8%, just to sort of highlight that sentiment is a little bit weak-kneed here. And indeed, although we get these gains in stocks here, it is important to put those gains in context because what we have are not just unalloyed gains. What we have is a market that was up quite a bit more earlier and has basically run into a wall. So if we look at the S&P, it was up 1.4% almost at one point. If we look at the NASDAQ, it was up 2.1% intraday at one point. And obviously, we're closing meaningfully weaker than both of those levels. So the markets fizzle into the close, and that's after the NASDAQ fell to its lowest level in essentially a month yesterday, whereas the S&P fell to its lowest level in the same amount of time. The reference point there is the 25th of November, so call it pretty much a month. So is it surprising that today we get a little bit of a bounce? No. For the S&P, this bounce is a break in a 4-day losing streak. So was it perhaps some time for the markets to pause on their way down? Probably. But do we have conviction here on the upside? Certainly doesn't seem like it by the way that we're going into the end of the day. So what did this data say that left the markets in such a huff? Well, we get seemingly the inflation data everybody wants to see, meaningfully lower than expected. Core inflation 2.6% year on year versus 3% expected. Headline 2.7 versus 3% expected. So we get a move lower across both categories. Still, the majority of inflation sits in the service sector, but as we can see, whereas before the goods side was essentially a downdraft on inflation, now following the tariffs, goods inflation is a positive and something that's adding to prices. But we can see that when we follow the breakdown here, the part that is the most uplifting of the overall number is still the service sector, and there you get a helpful decline. So the contribution to this overall 2.7% figure from services, 1.84%. So clearly the lion's share. Goods even declines a little, albeit very modestly, contributing about a quarter of a percentage point. That's a little bit less than the previous numbers. And notably, the previous numbers are not from October. They're from September, because the government shutdown meant that we're not even going to get an October CPI report. That data was simply not collected. So if we look at the dynamics here, what we find is there's a bigger decline in core than headline, which tells us that indeed services inflation, the piece that matters most, is moving significantly lower. And indeed, we find it here. Services down, the contribution down by a significant margin here, and clearly the driving force in this decline, moderated only really by a pop in energy. So on the face of it, this is what you want to see. In fact, breaking this down here into the key components, in the bars, we have the month-on-month changes, and the lines here are the year-on-year rates. So if you wanted to dissect CPI very kind of broadly into goods, services, and housing, housing has obviously been declining for quite some time. But we can see here, helpfully, in the very near term, the sticky part of inflation, services, that seems to be moderating. And the part that's been fueled by tariffs, goods, that seems to have flatlined. And we can see the month-on-month gain here is obviously much smaller than anything we'd seen since January. So this is encouraging and seemingly tells the Fed what it wants to see, which is they started easing, reckoning that we're going to get a rebasing of tariff-based inflation out of the overall calculus, that essentially that the tariffs are a one-time price adjustment. And once you get to the other side of being 12 months away from that adjustment, it falls out of year-on-year calculations for CPI. Right now, the reference point for November 2025 CPI in year-on-year calculations is November 2024, where there are no tariff hikes. The Fed's argument is by the time we get to, let's say, April 2026, the reference point will be April 2025. The lion's share of the tariffs will be there. And so with that in mind, you shouldn't see that really shift CPI unless markets are and consumers and economic actors more generally are going to extrapolate that the tariffs will continue to feed inflation. And the Fed's argument is, well, probably not. At least that's their bet. That what we've seen is a weakening of the labor market in recent months. And what the Fed should do is to act to counteract that weakening. And that inflation, despite the fact that it's over the Fed's target by a good amount, still closer to 3 than it is to 2, that by the time you get to April, it'll be perhaps only a hair above 2, because this rebasing of goods inflation will have run its course. Meanwhile, this will continue to edge lower. Now, we did get evidence that at least the labor market side of this is comporting with what the Fed is saying. We got this week that the numbers for the past 4 months, which really was the bulk of what was announced here, we got the employment numbers for November. We got a partial report for October. Perhaps not surprising that there's a outsized 105K loss reported there. Those numbers are very flimsy. And then we got revisions for September and August. The revisions were both on the downside. And of course, the headline numbers for the October-November run mostly disappointed. November was a little bit stronger than expected, but on the whole, what you got for those 4 months was something worse than what the Fed benchmarked. Fed Chair Powell told us last week following that Fed meeting that the economy is on paper creating about 60 or about 40,000 jobs a month. That's what the NFP data is suggesting as a trend baseline, but that the way that it's counted overcounts by about 60K. So the real number is something like a 20K job loss on average per month this year. In the 4 months that we got in this data, it's more than that. It's more like 50K loss because, you have an average job gain closer to 10K a month for those 4 months. So once you adjust that down by the 60K that Powell said the overcount is, you end up at just a 50K loss, which is, of course, much greater than a 20K loss. So ostensibly, the labor market is doing worse and needs more help. But if we include the entire year in the calculation, January now through November, and you do the same math, then you really only end up with about a 5K loss on average a month. So does that really give the Fed the impetus it needs? Well, by its own measure, it thinks that a 20K average monthly loss is enough to reckon you're close to neutral on rates now and to wait and see. That was the thrust of what Powell said, which is why, ultimately, what the Fed did last week landed with disappointment. How do you know it landed with disappointment? Well, let's just take a look at a chart of the S&P 500 here. This is Fed day, right here. This next day is the day that the markets try to digest the Fed. And where do we end? Wipeout. This was October's Fed meeting. Again, on Fed day, we digest. The very next day, wipeout. This week, we get NFP. That comes out. What do we get in its wake? Here's the NFP day. On reflection, what do we get thereafter? Wipeout. And incidentally, here's a look at the sort of back and forth here. Today, we tried to rally, but where do we run into a wall? The former range bottom, making all of this appear corrective rather than a rally getting ready to get going. So, what does all of this mean? We seemingly have all the evidence that markets might want. We have a weak labor market. We have a weaker CPI report. So all the ingredients for the Fed to get dovish are there. Does the Fed get dovish? Well, looking at the expectations for what happens in January, we still see the markets overwhelmingly favor standstill. The likelihood that we get another cut in January is only 26.6%. And that's up a little bit from yesterday and from a week ago. We can see that. But it is only a modicum of what you would need to have conviction. The markets are overwhelmingly still favoring no move in January. And if we look beyond January, we can see there, at least, there's been a little bit of a dovish shift, which perhaps explains what we saw on the yield curve earlier. We mentioned at the start of the show, we had a shift down in the curve to the tune of, let's call it 7 to 0.8%, depending on where you look on the maturity spectrum. And indeed, we're out to 61 basis points for the expected rate cut path next year. The problem, of course, is that the Fed does not endorse this view. The Fed has only endorsed a single rate cut, which I would argue is the reason the markets ultimately didn't like what the Fed said. It did not close this disparity, and this disparity has been glaring for a while. Consider, we haven't seen the market's preferred outlook as low as only one cut since before the start of the year. Barely here, perhaps, in sort of the run-up into the sort of April bottoms, do we get some semblance of something similar. But for most of certainly the stock market rally from April's lows, that would be right around here, we're well in excess of a single rate cut. And we can see as of, let's call it June, we're well over half of a percentage point or 50 basis points in cuts. So the markets have been waiting for some time for the Fed to reconcile this issue. And the Fed's just not doing it because they're saying they don't have the conviction to extrapolate that far out, that many rate cuts. And so we're largely left with where we were back here. Recall, this top in the market, which we've yet to revisit, by the way, is Fed Chair Powell coming out after the October 29th FOMC and saying, you all seem to think we're on some sort of autopilot. Let me disabuse you of that notion. We are not, and we have a lively debate here as to how much easing there is to do. And frankly, we're not so sure that this shutdown era data is really very reliable. And then, of course, at last week's meeting, which marks this secondary top, if this was the primary peak, the highest point in this Fed annoyance seesaw here, this is the second highest. And it fizzles again. What did Powell say this time? He came out and said, look, we feel like we're near neutral. We're comfortable here. We're not in a hurry, and we don't have any bias. That seems to suggest that we're going to twiddle our thumbs for a while. But again, the markets want the disparity for next year reconciled. They clearly and unambiguously want more cuts. So why didn't this jobs data help that cause and thereby enthuse the markets? Well, as we said, taking the entire year average, seems like the economy is shedding only about 5,000 jobs a month. That's after the Fed's 60K overcount is accounted for. Powell said 4 times that. So maybe the impetus to cut is not so strong. Inflation is lower here, sure, but do we trust this data? Powell told us to be wary because the shutdown caused distortions. And indeed, note here how closely this data has been tracking the Cleveland Fed's nowcast of U.S. inflation. And then consider how much it has departed this month. Now, maybe our eyes are playing tricks on us. Maybe this gap between the headline and the core, maybe these are not so big. We've had deviations before. Let's take a longer view. As it turns out, for core CPI, this is the biggest disconnect between actual numbers and the Cleveland Fed nowcast since February 2020. Now, what do we know about February 2020? COVID lockdowns. The quality of that data is understandably awful. Nobody's out there taking surveys. This, for core CPI, is the worst disconnect from these forecasts since then. So how reliable is this data? Well, maybe not very reliable at all. For headline CPI, this is the biggest disconnect since the beginning of 2023. So not quite as long as COVID, but certainly long enough. And so when you look at all of this, seems like maybe early to celebrate that, in fact, disinflation is doing everything the Fed wants. And so we don't get a meaningful shift in rate cut odds. And even though the long end of the curve again starts tugging on the Fed's sleeve to cut more, there doesn't seem to be confidence that that's what they're going to do. And so the rally fizzles. What's interesting is that, of course, for the next 2 weeks, we have the year-end holidays and not much economic data at all. And if this is going to be the path of least resistance, if what we saw in the wake of the Fed last week and NFP this week is how we end up finishing the week tomorrow in the wake of CPI, well, then the path of least resistance for the rest of the year, such as it is, the few sessions that we have, overlaid with thin liquidity, it's going to start looking like it might look hairy. Exposure-wise, few updates here. Still long gold, which didn't really go anywhere today. It tried to rally, but then ultimately settled back in. I'm on both sides of the dollar at this point, short the Aussie against the dollar, looking for it to be more of a sentiment-based vehicle. Long the euro and the pound, expecting them to outperform dollars here because it looks like the markets want much more easing out of the Fed than they do out of the BOE or the ECB. As far as near-term exposure, this stuff in Brazilian markets is long-term, and I've already took a big chunk of this position home a couple weeks ago. And certainly this MSOS position, which takes a big haircut today, down 25%, but that's after rallying almost 60% last week. It's volatile. And these calls expire in January of 2027. The idea being that this is going to come up in the mid terms, and the haircut today largely around the announcement that the White House is going to reschedule cannabis from Schedule 1 to Schedule 3. That much was expected. And so it looks like there's some opportunistic speculative capital betting on the event risk that came off today. But these are long-term positions. Nearer-term ideas, still short risk via the remainder of my put vertical in IBIT, so looking for Bitcoin to continue to go down. I've added IWM as a put vertical today, looking for this to fade and looking for the Russell to accelerate lower. Earlier this week, I added NASDAQ, so still have that put vertical on the short side and still sitting on a put vertical in S&P as well. So looking for the risk-off bias to stay with us going into February next year, at least. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I am likewise writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. We're going to have an abridged week next week and an abridged week after that, but we will be here. So Macro Money is back on Monday. See everybody there.
everyone, and